you guys. It ain't good, but I think the tech. So I think it can be done.
Yes, as Constellation Energy is going to be revamping 3 Mile Island anyway because of support from Microsoft.
I thought that was shut down anyway.
No, well, they just shut down one of their reactors in 2019, and now they're going to kind of reboot it and get it back up. Anyway, much more coming up right here from South Carolina. We'll be delving more into sort of how you manage and how you put together a business plan in this uncertain environment. Alex Steele, Paul Sweeney, happy Wednesday. This is Bloomberg Intelligence Radio.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. With this Bloomberg Business Flash, the major stock averages, they are pushing higher. The S&P 500 right now, 8 points higher. That's up about 0.2%. 5823 on the index. Dow Jones Industrial average up 190 points. And after yesterday's tech sell-off, the NASDAQ 100 right now still down 28 points. I'll start off with Morgan Stanley shares. They're up close to 8%. Near the biggest intraday increase in almost 4 years. The bank posting the best third quarter trading gains on Wall Street. And right now, because of that, financials, one of the best performing industry groups in the S&P 500. ASML's chief executive officer says he expects a slow chip market recovery to extend, in his words, well into 2025. This, of course, follows the disappointing third quarter earnings that sparked a broad sell-off across the semiconductor industry. Shares of NVIDIA after the 5% sell-off yesterday, recovering somewhat, up 1.7% today. Quick look at ASML shares, the depository receipts. They are down 6% in the U.S. Novavax shares, they are plunging after regulators placed a hold on the development of its experimental flu vaccines. And Paul and Alex, the quickest way to get somebody's attention on Wall Street, say, bonus! While fortunes can always change in the last quarter, the trend right now points to the best year for pay since the bank set revenue records in 2021. Follows 2 years of consecutive drops in pay. Check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right, JT, if you're asking me, I'm putting a bonus pool. Global Wall Street up 30% this year. That's my number. We'll see what happens.
Okay.
That's certainly the number. I'd be walking into my executive committee. I want my team up 30 minimum.
Okay,
minimum
so 30%.
That's the number. That's how it works.
I'll go with 10 just to be contrary.
Okay, very good. We're broadcasting live from the Wells Fargo Women's Leadership Conference here in Kiawah Island, South Carolina, where they have gathered prominent women in leadership to engage in a meaningful conversation. We have two of those folks still with us, which is really cool. Kwanzaa Jones, CEO and co-founder of the Kwanzaa Jones and Jose E. Feliciano Initiative, and Julie Caperton, head of the Private Bank and Wells Fargo Partnerships for Wealth and Investment Management. Kwanzaa, you mentioned earlier women in sports, and boy, I've just sensed a real increased level of excitement and attention to women's sports in the last several years, and maybe the most recent round might have been Caitlin Clark, that kind of thing.
Yeah.
Great ratings, basketball, soccer, all kinds of stuff. How do you guys look at that part of the world?
Oh, wow. So, you know, the 4 pillars I was talking about, one of them being equity. Women's sports fits under that umbrella. And when I look at it, and we've all heard the news throughout the years about women not having equitable compensation in terms of the sports world, when we look at now the rise in interest, and I would argue that the interest has been there. It's now just there's more attention, like you all. The media is now casting more of a lens there. And we look at it as it's important, which is why the programming element for us is still do sorts of things like this to continue to be able to bring greater light to it and invest, not just with our mouths, not just lip service, but our dollars into these areas, and not only in the for-profit scene, but also in the not-for-profit scene. So those are some of the things we look at.
So it's a big deal to create an organization like you guys did, right?
Yeah.
How did that start? Is it like a pen and paper thing? And then like you go to Wells Fargo, you're like, hey, I have this idea. Here's my pen and paper. Talk to me about it.
Okay, I'll give you a little bit about how it started. Again, both Jose and I met at Princeton, and he went to Wall Street. I went to become a lawyer, you know, because we just figured you got to have a family with some lawyers in there. And both my parents were lawyers too. But I remember we did a day off in Central Park, and that was a day to dream. And he was like, why are we doing this? And I'm like, just go with me, just go with it. And literally, instead of asking questions, which is what I was asking about, oh, what does your next 1 year look like, 5 years, 10 years? I said, what does impact look like? What's the impact that you want to make? And again, if you sell yourself short by saying, oh, well, I want to make, I don't know, $1 million. Well, you could be leaving money on the table, as opposed to, I want to be able to create homes for 100 people, or I want to be able to create an organization that can help underwrite and fund some of these other smaller organizations that are already in communities. So that's what it looked like. A bit of a pen and paper, but actually it was a sketchbook, because I said, let's draw it. Let's draw it out. What does it look like in that way? And then asking the question again, in impact, not dollars.
And then did you take it to Julie?
Well, at that point, Julie, Wells Fargo had been around at that point, because again, I had been a long-term client of Wells Fargo, and again, as our net worth increased and our means continued to increase, and we gained in a lot more zeros behind our bank account, they were able to partner with us with a number of different things. So it did then one point shift to, okay, hey, here are these other lines of businesses you all have. We're curious about this. What is able to be done? So that's how it came.
Hey, Julie, one of the issues, I think, or one of the challenges and opportunities in private wealth management is this whole transition of wealth from the baby boomers to, like, my kids. And I know that's a huge opportunity for private wealth managers. And I view that because the numbers I'm hearing is just amazingly large.
It is. It's an amazing opportunity, and we think about it in a couple of different ways. One is the way the client likes to be served and the way the client likes to be reached, and more, that's in a digital format, and it's in a self-serve format. And it's just, the different generations think differently. A baby boomer is distrustful sometimes of, online accounting. Our next generation doesn't know anything other than that. So really investing in technology and having that digitization is one thing that we spend a lot of time on and think about. The other is just the ways in which we add value, because again, I was talking about products getting commoditized. So much of the investment advice is available to all. We really like to think about the fact that, we can provide help in so many different ways, whether it's on the financing side. It could be, starting your career with a mortgage or with a loan that's going to allow for you to invest in your business, moving all the way through to, even if you're not in a position to have a foundation like Kwanzaa, having a donor advised fund and making your impact in that way. We really think about things in the ways that we can add value to the client as opposed to a product specific kind of thing.
And I'd actually like to add, and you can do both.
Yes.
And that's what's great about all of that too.
Well, we really appreciate it, both of you. This was a great conversation. I learned so much. Thank you so much, and good luck. Kwanzaa Jones, CEO and co-founder of the Kwanzaa Jones and Jose E. Feliciano Initiative, and Julie Caperton, head of a private bank and Wells Fargo Partnerships for Wealth and Investment Management. Great stuff. We love being here on the ground in South Carolina for the Wells Fargo Women's Leadership Conference. Let's get to the market here. So ASML is the CEO speaking, seeing a slowing chip recovery that's going to extend well into 2025, because the chip industry is still cyclical, even if it's in a structural shift, right? Also, Qualcomm TBD on what they're going to do with Intel, waiting till after the election. So Mandeep Singh, Bloomberg Intelligence senior tech industry analyst, joins us now. Mandeep, let's start with Qualcomm. So what's their plan regarding Intel? What have we learned?
So I think they are very clear, at least on the call today, that they expect 2025 to be weak because both Samsung and Intel will continue to pause on their fab plans. They're pushing that out. And even though they called out AI demand being strong, what it suggests is, they have visibility like everyone else in terms of the server market being strong, PCs and smartphones still being weak, autos still being weak, and the only place where the foundry companies are expanding their capacity right now are related to servers. So that's the end market view, and I think it's consistent with what we have heard from other chip companies. It's just the surprise element was, why didn't they pre-announce, or why didn't they call that out in the last earnings, given we knew Intel's woes, and Samsung obviously wasn't doing very well either.
Talk to us about the cycles in the chip business. I've learned, this is a cyclical business. Is this like a 5-minute cycle, or is this a 2 or 3 year cycle?
I mean, we are seeing that cycle element play out across different end markets. So when you look at, how long the PCs and smartphones correction has been, it's been a few quarters, and we are still working through the inventory. There isn't a clear sign of, a rebound. It will happen, and everyone is hoping AI is what drives a big PC and a smartphone refresh. But based on ASML's guide, it's not going to happen, at least in the near term, because they said 2025 companies aren't really looking to expand their orders when it comes to PC and smartphones and autos. So there is a cyclical element. Right now, servers is where the uptrend continues, and we'll probably see TSMC call out AI demand being very strong as well. And TSMC has more exposure to AI than some of the other foundry players like Samsung and Intel, and that's why they continue to raise their capex in terms of their plans to invest more in ASML and the equipment they're buying from ASML.
So it's like the whole industry is in a structural shift. There are some companies that are more exposed to that structural shift on the upside. There are those that are not. And then we're still in a cyclical business with stuff like PCs and phones and cars, which everyone's exposed to. So that is definitely like a little bit of a head scratcher in terms of how to invest. Let's get to Qualcomm here. There was an article out that we had that Qualcomm's going to wait till after the U.S. presidential election in November before deciding whether to pursue Intel to buy it. Do we think an Intel plus Qualcomm equals what?
Well, so at least in terms of the chip design side, Qualcomm is more indexed to smartphones, which we said has been weak over the past few quarters. And Intel is more exposed to PCs, your traditional notebooks and desktops. Now, both of them don't have, exposure to AI servers. That's the growth pocket. That's where, NVIDIA has been taking share and really growing way above everyone else. It's not going to solve their growth problem. At the same time, I think the combined entity will have a better shot at competing with the likes of NVIDIA and AMD, because there is a clear synergy in terms of Qualcomm and Intel being exposed to PCs and smartphones as opposed to doing things individually. And with Intel, the problem really lies with their foundry and manufacturing. That's the part they've struggled to compete with against TSMC. And I don't think Qualcomm would be interested in buying that element, the foundry and manufacturing side, given that's harder to turn around, if you ask me, over the next few years.
All right, Mandeep, thank you so much for joining us. Mandeep Singh, he's a senior technology analyst for Bloomberg Intelligence, giving us the latest on the chip business, getting some warnings about some of the demand coming across some of the players in the chip business. And as Alex put it, it's a question that investors have to kind of get a sense of how much of it is this longer term, the growth of the secular growth of AI versus some of the shorter term cyclicality of some of the other businesses that need chips.
Yeah, we all become now experts in like what
Yes.
individual companies make, and we just thought we could all like lump them in on that. And then of course, like when is the actual trough? We've been waiting for the smartphone super cycle. Then we have the PCs, and then of course that exposure to the auto market. And interesting to see then the role that governments play in it, and then China as well. And if we wind up seeing more restrictions on what AI chips can be sent overseas to certain countries, how that winds up impacting sort of regional cyclicality within some of these chip markets.
Absolutely. S&P 500 up about 8 points. The Dow's up 180 points. That's 0.4%. The Nasdaq's pretty much unchanged. 10-year Treasury, haven't called that out. We're sitting right at 4% here. WTI crude oil also off about a little bit more. So we're now just below $70 a barrel for WTI crude oil. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News, and with this Bloomberg Business Flash, the major stock averages, they are higher right now. S&P 500 up 10 points, up 0.2%, 58.25 in the index. The Dow Jones Industrial Average is 192 points higher right now. That's up 0.5%. The NASDAQ 100, that's actually lower, so I lied, down 16 points right now at 20,143. Well, one of the best performing industry groups in the S&P 500 that belongs to financials, as Morgan Stanley's result beat estimates, extending a run of positive reports by the banks. Morgan Stanley shares right now, appearing some of the earlier gains, they are up 7%. A profit warning from the chip equipment maker ASML Holding rattled sentiment. That was yesterday, but the depository receipts, they are still down another 5.5% in today's trading. That sent ripples across the industry, resulting in more than $420 billion of market value loss for U.S. traded chip stocks. NVIDIA today is up just about 2% after about 5%, almost a 5% sell-off yesterday. Labor Department out with more inflation data. Core import prices, when you strip out petroleum, rising at the fastest pace in 4 months in September. 2-year yields down a basis point, 392. The 10-year, the benchmark, that is 2 basis points lower, right at 4%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney. We are live here at our Bloomberg Interactive. No, you know where we are?
No, we're not. Yeah.
Yeah, we are messaging. We're broadcasting live from the Wells Fargo Women in Leadership Summit at Kiawah Island, South Carolina, where they've gathered prominent women in leadership to engage in meaningful conversations. So we've had the benefit of chatting with a lot of those leaders here, both from Wells Fargo and from some of the other organizations gathered here. So we had some good conversations. I tell you, the other story of the day here from a stock perspective is Morgan Stanley, as John Tucker was just reporting, some really strong numbers. I was looking at the results. I mean, it was like the advisory business did well, the capital markets business did well, the wealth management business, which is such an integral part of that company, that did well. So the stock's up 7% at a 52-week high. How about that? Allison Williams, she joins us. She's covered Morgan Stanley forever. She used to work there back in the day, so she knows this company better than anybody. Allison, was it as good as it appeared just reading through the kind of the report?
It was good, but I think the real number that's giving investors confidence, in our opinion, is the wealth flows. So we've had some uneven flows. Last quarter was relatively weak, and I think the rebound this quarter may be instilling a little bit of confidence. As you know, they are strong institutionally, but they have shifted their business over time to this more towards the wealth business. Gorman had sort of put some aggressive targets out there before handing over the reins to Ted Pick. And so, to be clear, they really, beat the numbers across the board. It was led by the institutional business, the equities trading business, in which they're relatively more skewed, did very well, partly because they are skewed to that business, and they did outperform. They had the best growth in trading and fees across the big 6 U.S. banks, so upside across the board, benefiting from their mix, benefiting from their performance. But the wealth flows are really what the focus is for investors, also because stocks are aiding their asset values, aiding fees, and so that pre-tax margin in the business, the other key metrics, also doing better.
Allison, how much can we expect the wealth assets to keep growing?
So, that is the multiple trillion-dollar question. That is one of the aggressive targets that was put out there, was to sort of aggressively grow those assets, and it did seem like there were some pretty healthy market gains priced in. So the markets are delivering on those gains certainly this year, and the flows are also helping. But we would want to see a couple more quarters of evidence that they've really built the momentum there. We would expect Morgan Stanley to have a strong quarter in wealth this quarter, just where stocks are. I mean, the global market cap reached a record high, according to Bloomberg data, at the end of the third quarter. And I would keep in mind that the pricing of those wealth fees really relates to the beginning of quarter value. So that's helpful for the bank for the fourth quarter as well. But, you know, to your question, Alex, when we're thinking about the overall franchise and we're thinking about the growth, we should keep in mind that there is a big tailwind to the business this year from markets, and to some extent, the future growth is somewhat dependent on that.
It just seems, Allison, as I kind of read your research, and yeah, I know you guys have great data on market share across all business lines. It just seems like Morgan Stanley, Goldman Sachs, JP Morgan, they're just kind of running away from everybody else on the planet. I mean, is that in fact the case?
They have been, and you know, whenever we expect, you know, that like, okay, who's left that can, you know, blow up. That's a technical term, if you will, and cede some more share to these banks who are kind of running out of names. But if you think about, for example, what's happening in prime brokerage, right? So a lot of these larger institutional hedge funds that have, you know, sort of these multi-pod shops, et cetera, to the extent that those bigger firms are gaining assets and doing better, though that's benefiting, you know, the leaders, Morgan Stanley, Goldman, and JP Morgan. And so as the bigger clients get bigger, that's helping those firms as well within the trading business. The other thing I would point to is, you know, the investments in technology. These companies have made the investments in technology, and that's also helping them to win share in the trading businesses.
I'm going to steal Paul's comment / question from earlier in the show, saying, what does this all mean about the European banks? And are the U.S. banks eating their lunch, or is the lunch being spread around?
So I think for this quarter, the pie is getting bigger. So, you know, in terms of whether you're eating lunch or pie, you know, the U.S. banks have been gaining share against the Europeans for many, many years. We think that does continue, but we think the pie is also bigger this quarter. And what we heard specifically was, you know, for example, JP Morgan, strength across regions. And what we heard from these banks was strength across derivatives, prime, and cash equity. So it is really broad-based. The other thing that we think is notable for UBS in particular is the strength in Asia. So not surprisingly, we saw a pickup in activity in Asia that really benefited the banks specifically called out by JP Morgan and Morgan Stanley. We think that that is really going to be a help to UBS.
So how about on the cost side, Allison? Was there any discussion about compensation? I feel like that's been less of a discussion point, as I guess Wall Street compensation has become skewed a little bit more towards the fixed and a little bit less on the variable.
Yeah, so there's that element of it, Paul. You know, the two things I would point to is keep in mind compensation is accrual. It's an accrual through the first three quarters, so to some extent it represents the business trends, and to some extent it represents how they think the full year will shake out. Secondly, you know, compensation for the investment banking fee side of things sort of was stickier than we would have expected on the downside, and I think that's because there was such a scramble to hire talent in 2021. And investment banks have been talking about a recovery in that fee business for several quarters now, and so I think that comp didn't come down as much, so there might not be as much of a surge to the upside. But if we looked at costs, if we looked at comp, you know, in general, the profitability was good just because the upside to revenue was so much. Now, is that because the investment banks are keeping conservative and going to see how the fourth quarter shakes out in terms of the accrual basis? Is part of it because of the stickiness, as I mentioned. But you did see comp coming in sort of above estimates, just not as much as the revenue upside.
All right, that's another good news for investors in these big investment banks. Allison Williams, thank you so much for taking the time. You've been so helpful today and then really over the last week or so, as she always is every quarter when these big banks report, because our viewers, our listeners really want to get the latest on what's happening with the global Wall Street, and Allison is the best out there. Allison Williams, Bloomberg Intelligence Senior Analyst. She covers the global banks and asset managers, giving us the lay of the land on Morgan Stanley. Again, a blowout quarter, the stock hitting a 52-week high. And you know, when these big banks, investment banks, report earnings, the next day, what do? They go sell investment-grade debt in the marketplace, and that is happening.
with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele and Paul Sweeney broadcasting live here from the Wells Fargo Women's in Leadership Summit at Kiawah Island in South Carolina, where they've gathered prominent women in leadership to engage in meaningful conversations. We've been fortunate to speak to a bunch of the participants here, so it's been a great day down here in Kiawah, and I'll see if I can find the golf course in just a few minutes. Let's talk luxury here. LVMH in the news. They reported that sales of fashion and leather goods fell for the first time since the pandemic as the industry's biggest player was hammered by a slump in demand from Chinese consumers whose appetite for high-end purchases once seemed insatiable, now a little bit softer here. Our go-to person on all things luxury is Deb Aiken. She covers the luxury goods business for Bloomberg Intelligence, and she is based in London. Deb, great to talk with you. What did you hear from our good friends at LVMH?
You too. Quite a mixed bag, but yeah, generally across the board, a little bit of a shock in the Q3 to everyone, and we felt it would really ripple through the industry with their organic sales down 3% in the Q3, and that was all when we went region by region. There's a small amount of growth in Europe and in North America, but we have declining sales in China, down mid-single digit. And what that does overall for the 9 months, it moves organic sales growth flat year on year. So it's not about pricing, it's about product. Volume is down around 5%, price and mix are up slightly.
So I know just from talking to you over the years, Deb, and reading your research, China is really key for this luxury market. What's happening there? Is it just simply a reflection of a tough economic environment there, particularly for the consumer?
Yeah, I think if we look at consumer sentiment, it's back to COVID 2019, 2020
Wow.
lows. It's that bad. And there was on Saturday we waited for the financial stimulus package. Bloomberg had popped out a consensus seeking 283 billion in terms of stimulus package into the marketplace. And while they talked about supporting housing, residential housing, and other backing local government spreadsheets, doing a lot more for real estate, there just aren't any numbers yet in the marketplace. And then through October overall, the beginning of October, we've had Golden Week, and that's been really contrasted. Money spent on experiences, on food. In Shanghai, there have been vouchers going out in the lower income areas, and about 1 in 10 or 10% of money coming in has been via voucher for meals over that period of time. But there's just not as much going into the shopping baskets.
How about the gray market? I know that's always been a challenge for the luxury brands in China, well, around the world, but particularly in China. Is that still a headwind?
No, the companies won't really, talk so deeply about that, but they do try as much as they can in terms of managing that marketplace. I think, though, a lot of the generation and what these companies are doing online and with newness, there are products even within the Louis Vuitton range, like the Never Full new style bag, which is reversible. Those types of products are doing very well, whether it's from an LVMH or another brand that's struggling, like Ferragamo. Some of its new brands coming out, it also reported, and some of the products coming out there are doing very well and resonating with the younger generation. So they do want authenticity. They're just being very much more aware in that middle range, and that is certainly feeding through on some of the portfolio within the very wide and deep product range that LVMH has. I mean, they still did 60 billion, but when you look at their numbers overall, they were 1 billion off. That's how big they are.
Okay, interesting. So if I'm a big, these luxury brands, European and American luxury brands, what's my strategy in China? Do I just wait for the consumer to turn around? Do I maybe pursue some discounting that I historically would not do to move product? What's the strategy?
I think neither of those. I think price is relatively flat after 2-3 years of heightened inflation. Costs are under control generally. And what you do is you innovate, you stay mindful and in the face of the consumer in a very targeted way. And on the back of that, you have to have new product coming through. There's a huge amount of investment of CapEx spend in supply chain, in distribution, logistics, online with third parties. There are projects out there that are collaborative projects with local A-star celebrities. So you're being very mindful and you're ticking boxes in the bigger cities, being there and also being really relevant in events too. So you keep going and you wait for the base.
Yep, absolutely. All right, Deb, thanks for that. We appreciate it. Deb Aiken, she covers all the luxury retailers and brands for Bloomberg Intelligence. She's based in London. LVMH having some little bit disappointing results in terms of their top-line sales. The stock is up about 1.5% today, but down about 19% year-to-date, so some challenges there. It's been a good morning here at the Wells Fargo Women in Leadership Conference here in Kiawah Island. So we thank the good folks at Wells Fargo for hosting us here. Looking at the markets here, kind of mixed. S&P up about 6 points, Dow up 200 points, the Nasdaq's down 20. The 10-year Treasury rate at 4.01%, so we take a look at that. Oil continues to slide a little bit, geopolitical tensions coming off a little bit, supply looks pretty solid. We have the WTI crude oil off about just fractionally here at $70.40, so we'll keep an eye on that. Gold higher yet again, 2,670. So DXY, the Bloomberg Dollar Index, that is stronger today, pretty much across the board, across some of these larger G10 currencies. So we note the higher dollar here. Coming up, Balance of Power with Joe Matthew from Washington, D.C. He will drive the conversation forward as we approach Election Day. Every day, it seems like the Balance of Power show is a more and more of a must-watch and a must-listen to. So Balance of Power with Joe Matthew, that starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
We're just 20 days out and closing arguments are underway. Welcome to the fastest show in politics as both presidential campaigns crystallize their late messaging here with a media blitz that continues today for both Donald Trump and Kamala Harris. We'll have the latest from the trail with analysis from our signature panel. Jeannie Shanzano and Rick Davis with us for the hour. Before we get that far, an exclusive interview we're bringing you today on Bloomberg Radio with billionaire investor Stanley Druckenmiller. So stay right where you are. We start, as always, by setting the baseline on Wall Street. And for that, we turn to Charlie Pellet in New York. Hey, Charlie.
Oh, good day from New York. Joe Matthew looking at a mixed market right now. The S&P higher by 6, up 0.1%. Tech's tumble. We got NASDAQ down 0.1%. Dow Industrials up 223 for the Dow, a gain of 0.5%. 10-year 4.01%. The 2-year 3.93%. After earnings, Morgan Stanley up 7.5%. After earnings, UAL United parent up by 11.4%. Again, recapping, S&P up 0.1%. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you as always. Charlie with the snapshot on the street. He'll be back a little later this hour. In fact, after the conversation that we're about to bring you. Right at this time yesterday, remember, we were crawling up on the Donald Trump interview. Taxes, tariffs, the economy, growth in our sights, and the same topics today. In a special conversation, an exclusive one with Stanley Druckenmiller. For that, we turn to my colleague, Sonali Basak in New York. This is Bloomberg Radio.
Our Bloomberg television and radio audiences to the special episode of Bloomberg Markets, seated here with an exclusive interview with Chair and CEO of Duquesne Family Office billionaire investor Stanley Druckenmiller. Now, Stan, in 2021, you had written an opinion paper in the Wall Street Journal that said the Fed is playing with fire. And a couple weeks ago, you wrote to me and you said that you hope that the Fed is not making the same mistake that it had made in 2021, the mistake of being trapped by forward guidance. What's at stake here? Why are you so concerned?
Thanks, Sonali. It's nice to be here. In 2021, I think the Fed did a great job when we were facing a black hole in COVID in 2020. They took some very aggressive actions. One of those actions was forward guidance, where they, to try and settle markets, guided ahead to basically a zero interest rate policy. I think was frankly for 3 years. We were all fooled by COVID. I was too. When it first happened, we're wondering, you know, are we sinking into a black hole? But it was pretty obvious, I'd say a month or two after vaccine confirmation, which was the fall of 20, that we weren't going into a black hole. Unemployment, which I think had been around 14%, started to drop precipitously. The economy came back. We wrote the article in the spring of 21 because at this point we felt we were like booming, and it was everywhere in the economy and the companies we talked to, and unemployment rate everywhere. And the Fed wasn't adjusting. So they were buying, I think, 120 billion a month of securities. It might have been down to 95 a month by that time period, and rates were still zero. And I think had they had a clean slate, they would have never been buying bonds to that degree with what was going on in the economy. But they were trapped, in my opinion, by forward guidance. It's pretty incredible. From the point we wrote the article, when it was so obvious that we even wrote about it, it was 13 months from when inflation went through 2% to when they finally raised rates. They also bought $2 trillion in bonds during that period. So I guess the reason I analogize it to today, and it's quite different. I had a lot of confidence then that they were wrong on inflation. The money supply was growing at 40%. As I said, the economy was booming. This one's much more nuanced. However, just look at the asymmetry here. Back then, you go 13 months with inflation through the target, goes up to 8.5%, and you still go another 3 months, and you're keeping rates at zero, and you're buying bonds like crazy. And then when you finally move, you move 25 basis points. And your rationale is, we need to see the whites of inflation's eyes. And you're saying this when it's 3 or 4 or 5%. Okay, today, we're still quite a bit above target, depending on which measure you use, somewhere between 2.5 and 3.25. The economy, they've come up with this, I guess, theory that monetary policy is restrictive because of real inflation rates. But I don't really go by theory. I'm a market animal. Frankly, we've found over the years that markets are better predictors than professors. And when I look at the landscape, equities at a record high, gold at a record high, GDP above trend, credit tight, bank earnings and forecasts look good. We don't see any restriction whatsoever. Crypto going crazy, you name it. So all of a sudden, the crowd that said they wanted to see the whites of inflation's eyes and they wanted to be data dependent as opposed to forward looking are now cutting 50 basis points, not a quarter, which is what they started of, and we're not even to target yet. And this is all on the theory that monetary policy is restrictive. So what I would say is this: I don't have the conviction I had in 21 that we wrote that article that the Fed is going to be wrong. But on a risk-reward basis, I don't think it makes any sense at all to lay out the cards they've laid out and commit themselves through forward guidance once again. And what I was trying to say when I was saying it reminds me of 21 is I just hope if the data don't go with them, and they certainly haven't since they started this narrative, they adjust this time and they're not trapped by the forward guidance the way they were in 21.
Listen, does this mean that you thought 50 basis points was an absolute mistake? And do you think that there is a risk of an inflationary spike in the way we saw in the 1970s?
Yeah, do you have the chart we talked about earlier?
Let's see if we can pull that up. There's certainly one that investors have been looking at. And while
So even if we don't have the chart, so in the 1970s, inflation came down from a remarkably similar level to where it was in 21. I think 21 peaked at 9. I think it was 8 back in the 70s. They came down to 3. the Fed was easing because they had the 75 recession. So the Fed started easing and inflation went right back up to, I think it peaked at a 12% when Volcker came in and smashed it. I'm not predicting that, but when you're easing into a melt-up in financial markets and we have the fiscal policy we have going forward, it's certainly a risk. And I think it's a mistake not to be taking that risk into account. I don't really understand the rush of 50 basis points, and then I think that markets have priced in a 97% cut at the next meeting. That's all through Fed guidance. It's funny, my friend Jim Grant, who's one of my favorite writers, said they're not really data dependent, they're forward guidance dependent. And that's what they're showing again. And look, he might be right, and I hope he is right, but it's a big risk because if in fact they're wrong and inflation takes off because monetary policy is in fact not restrictive and we have fiscal expansion going on and they have to tighten again, I think it could be a nightmare for markets and maybe even for the independence of the Fed. You can't make multiple mistakes that would have been. But I'm not predicting it. I'm just saying, why did they go 50 and why do they need this forward guidance?
You know, I'm glad you brought up the Fed independence. I wanted your view on this. Are you concerned about the independence in the scenario of a Donald Trump win? In an interview just a day ago with Bloomberg editor-in-chief John Micklethwait, he said that the job at the Fed is to show up in the office once a month and say, let's flip a coin. On the other hand, your longtime colleague Scott Bessent has been informally advising Trump and floated the idea of a shadow Fed chair. How compromised is Fed independence at this juncture?
Well, I think a shadow Fed and this kind of talk is a horrible idea and irresponsible. However, I think were Trump to be elected, the institution will hold. I think a bigger threat to the Fed would be major mistakes by the Fed. I think the Fed is obsessed with soft landings and fine tuning. To me, that's not the real job. The real job is to avoid the kind of problems we had with the great financial crisis, which in my opinion were because the Fed was too easy going into them, created a housing bubble. And then obviously after COVID, not the initial actions, but sticking with it for a year and a half or 2 years, buying bonds, with the money supply exploding. To me, they've got to stop the fine-tuning and start looking at the bigger picture and committing yourselves now, and then if they stick to forward guidance and inflation starts going up again, that could lead to a hard landing, not a soft landing.
Speaking of the future, of course, another big uncertainty ahead beyond Federal Reserve policy is the November election. I'm wondering what the Druckenmiller playbook is around this election cycle and what you think the most likely scenario is and how you set up for it.
Well, it's an evolving situation. If you had asked me this 12 days ago, I would have said, I don't have a clue. It's in a total toss-up. I still don't have conviction who's going to win on the election. But as I said earlier, I like market indicators for the economy and for financial restrictiveness. I also like them for elections. I remember how right the market was on Ronald Reagan in 1980, despite what the pundits were saying. And I must say, in the last 12 days, the market and the inside of the market is very convinced Trump is going to win. You can see it in the bank stocks. You can see it in crypto. You can even see it in DJT, his social media company. But throughout the whole, I would say the industries that are deregulated, if we had deregulations, will benefit from Trump or outperform the others. So if you put a gun to my head, and thank God there's not one to my head, so this really doesn't matter, I would say that I would have to guess Trump is the favorite to win the election now, but who knows what these polls even mean? No one even responds to them anymore. But that's what we're looking at. I think the delta between, let's say, 4 outcomes: blue sweep, red sweep, Trump with a blue branch of Congress, Harris with a red branch of Congress. First of all, I think the blue sweep is extremely unlikely. Even if Harris wins the presidency, looking at state-by-state polls, it looks like the Republicans are going to win the Senate. Where you get a blue sweep, I think just the math of taxes, business confidence, lack of animal spirits, no change in the regulation front in investors' minds, you could get you would have a rough time for equities, I would think, for 3 to 6 months. I think this would probably translate in the economy because equity ownership is 25% of financial assets at an all-time high. That was 15% just not that long ago. So that's a blue sweep. But the good news or the bad news, depending on how you view life, is I think it's highly unlikely, so that playbook is probably going to be irrelevant.
So what about a red sweep?
A red sweep, which I think is probably more likely than a Trump presidency with a blue Congress, because personally I think anybody that votes for Trump is probably not going to change their ballot for a Democrat in Congress. A red sweep, I think you get animal spirits in the business community, you get deregulation, and there might be some sort of uplift relative to where they were in terms of the business community. So I think the economy could be potentially stronger for 3 to 6 months. My fear would be, because of those reasons, and because I think bond yields already don't reflect a proper economic outlook, you would probably get a bad response in the fixed income markets, which could then snuff out the equity rally. But any view we have at Duquesne Family Office where we're worried about bonds, we're not playing it through the stock market, we're playing it through the bond market. If you want to go after the cause rather than the symptoms, there still look like there's stocks and things to do. I also think under a red sweep, the Fed, for the reasons I just elucidated and maybe because of past relationships, would be much more hawkish than they would be under a Harris administration. So I think that would all be in our playbook and the responses to it. Under a Harris administration with a Republican Congress, probably not a lot of change from the landscape we currently have in terms of trying to figure out what's going to happen.
I want to remind our viewers, if you're just tuning in right now, I'm standing by with Stanley Druckenmiller for our Bloomberg television and radio offices. Of course, he leads the Duquesne family office. And you were talking through each scenario here. But what about your personal views here? In a recent conference, you had mentioned that you wouldn't vote for either Kamala Harris or Donald Trump. Which concerns you more?
Which concerns me more? I like Bret Stevens' line in the New York Times, I haven't decided who I'm going to vote against. I can't see my voting for either one of them, so it really doesn't matter who concerns me more, and I certainly would never support either one of them. I just think they're actually unified on some things like industrial policy. Both of them think apparently the government should have a major role in allocating capital, which I find, frankly, chanelly bizarre. When I think back 10 or 15 years, I'm a reader of Tom Friedman and quite a good writer, and he was constantly pointing out how the Chinese model was potentially superior to the U.S. model, talking about how nice their airports were and their roads and how they could target certain industries. Well, my long capitalist suspicions have been confirmed, and China's been, as we all know, a disaster with that model. But somehow, both parties, Republican and Democrats, have adopted industrial policy, kind of throwing free market Reagan capitalism to the side. So the policies, in terms of that, I find equally bad. I find her policies much worse in terms of anti-business and regulation. But frankly, I grew up in America with a certain model of a president, George Washington, Thomas Jefferson, Ronald Reagan was one in my lifetime, where there was a certain dignity and behavior in the office. And I don't judge anyone who wants to vote for Trump. But for me, it's just a red line, so I'll probably write in someone when I go to the polls.
When you think about the policies Donald Trump has put forward, a day ago, he said to Bloomberg that tariff is the most beautiful word in the dictionary. He's negated the idea that many economists believe that this could have many punitive impacts on the American consumer. How do you see it?
Well, I don't like tariffs. I just said I'm a free market capitalist. The only thing I'll say about Trump is he's a bit of a blowhard. So I don't know whether he's negotiating with our foreign adversaries and, frankly, with our foreign partners. I don't think it'll be the end of the world, but I am not in favor of tariffs. I don't like them at all.
You know, it's interesting.
By the way, the Biden administration kept all his tariffs. So it's not like I'm a fan of their tariff policy either.
What about taxation? At the end of the day, you have been very, very critical for many years about the U.S. debt load, the fiscal situation, and there are analyses that say both candidates would increase the federal debt load. The Committee for a Responsible Federal Budget say Trump more than the Harris administration would. At the end of the day, can Congress get away with extending the tax cuts from the Trump era, or is there another way to really close the gap?
Look, in my world, the less taxes the better, but we live in a world that I hope still includes compromise, and if there's some sort of agreement for spending cuts, I could definitely tolerate tax increases to balance them. I will say one thing, I don't really like the media narrative which compares fiscal irresponsibility with tax cuts and fiscal irresponsibility with spending. And again, you're right, I'm a fiscal hawk. I'm a lot more worried about this and the effect 4 or 5 years out than whether we have a soft landing and our economy grows at 1.2 or 2. This is big stuff we're talking about. But tax cuts are accompanied by an addition to the capital stock. Spending is a shrinking in the capital stock replaced by government spending. So of the two sins, tax cuts are least, but personally, if I was in government, you can't just do tax cuts if you don't get the spending cuts. And it was Trump, to me, that took entitlements off the table in 2016, and that's where the money is. So I give him an F on fiscal responsibility also.
So I want to switch gears here because we only have a little bit of time left with you. I want to talk about the market, and I want to talk about how you're looking at certain wagers that you've put on. A while ago, we spoke about NVIDIA, and you had said that it would be something that you held for years. And ever since then, you held it for a while, but more recently, you've been selling it off. How much do you have left of it, and why have you been selling? Can you see yourself getting back into it again?
I've made so many mistakes in my investment career. One of them was I sold all my NVIDIA, probably in somewhere between 800 and 950. I think it's 1,300 on that stock now.
You own none today? I
own none, and I own none the last 400 points. It was a big mistake. In terms of AI, and by the way, when I saw you at that conference, which was 18 months ago, I fully expected to own it for years, but I think it was 300 and change. And as I also said at a media interview, I'm not Warren Buffett. So I thought I was going to, but what changed is it tripled in a year, and I thought the valuation was rich. We are big long-term believers in AI, and there's still many ways we're playing AI, particularly the infrastructure that's been built out to support the power needed. And yes, I think NVIDIA is a wonderful company, and were the price to come down, we get involved again. But right now, I'm licking my wounds from a bad sale there.
You know, the other question I have to ask you really quickly, we don't have a lot of time, but you were saying that you expressed a lot of your views through the bond market. The 10-year hit 4.1% again recently. Do you think it goes much higher? And where do you think it ends next year? Would you go very short at this rate?
I don't know what very short means. We shorted bonds the day the Fed cut 50 because we thought it was a mistake. We still have that position. It's not so much I have a view on where it's going to go short term. What I do believe, if Powell ends up being wrong here and inflation reaccelerates next year, bonds could go up a lot of basis points, hundreds. Whereas if he's right, you might lose 25 or 30 basis points short. The golden rule I've always had is the 10-year should trade around where nominal GDP is, which is 5.5%. So the risk reward to me is being short bonds.
Stan, we have to leave it there. I'm sorry to cut it shorter, but that is billionaire Stanley Druckenmiller of Duquesne Family Office. In a rare sit-down, thank you for joining me here on set.
All right, Shanali, thank you so much. Fascinating conversation. I'm Joe Matthew in Washington. Thanks for spending some time with us here on Bloomberg Radio. This is Balance of Power, where we talk politics, of course, every day from Washington. And really interesting to hear from a billionaire investor echo so many of the same comments that we've heard since Monday here in Washington with regard specifically to the presidential race and the balance of power on Capitol Hill. He called it an evolving situation. 12 days ago, he said no clue and still does not have conviction. But the last 12 days, Druckenmiller tells Shanali, the market has become very convinced that Donald Trump is going to win. And we have noted that shift here repeatedly on Balance of Power. Gun to my head, he said, I would say that Trump is favored to win the election right now. A blue sweep extremely unlikely in terms of Capitol Hill. He says if Harris even wins the presidency, he says Republicans, it looks like, will take the Senate. We'll have a lot more on that conversation as we make our way through the day here on Bloomberg. We do want to see how the markets are faring right now before we get back to politics. And Charlie Pellet takes the helm from New York. Hey, Charlie.
Thank you very much, Joe Matthew. Indeed, the Dow, the S&P, they are both higher right now. NASDAQ in the red, Russell 2000. Let's begin there because it keeps on going up another 1.6%. That, to put it all in context, the S&P up 11, a gain there of 0.2%. The Dow up 254, down by 0.6%. But the rotation out of tech stock continues today with NASDAQ lower by just about 0.1%. 10-year, 4.00%, with a 2-year, 3.93%. Spot gold up $8 the ounce to $26.70. And West Texas Intermediate crude, $70.45 a barrel, down by 0.2%. Well, you heard the live interview with Stan Druckenmiller, the chairman and CEO of Duquesne Family Office, a wide-ranging conversation covering markets, tariffs, taxes, the economy, and yes, the presidential election. And moments ago, he told us what he thinks about the outcome in November.
I must say in the last 12 days, the market and the inside of the market is very convinced Trump is going to win. You can see it in the bank stocks. You can see it in crypto. You can even see it in DJT, his social media company.
And Druckenmiller also said he could not see himself voting for either presidential candidate and will probably write in someone at the polls. He also said getting out of NVIDIA early was a mistake. NVIDIA today trading at 134.12. It is up by 1.9%. Recapping, S&P up 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now and wherever you get your podcasts. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you, as always. Sets the baseline for us ahead of every conversation about politics here on Bloomberg. That's why you're with us, so thanks for joining the Monday edition of Balance of Power on Bloomberg Radio, on the satellite radio, and on YouTube, where we always invite you to join us here in the studio. Search Bloomberg Business News Live. You'll find our live stream. Really interesting to start the conversation today, not with a politician, but with a billionaire, saying so many of the same things that we've been hearing from polls and analysts and people smarter than me since we started the conversation the beginning of this week. Monday morning, everybody said it feels different today. Druckenmiller, pointing back 12 days ago, he said, I had no clue. But in that time, the market has become very convinced that Donald Trump is going to win. And they're continuing this media blitz out there, both of them doing interviews today. Kamala Harris is on Fox, right? That's the big deal. Brett Baer, 6 o'clock, we'll all be watching and listening. Suspect it'll make some news. Donald Trump also on Fox today. He held a town hall with women, as it was pitched. Very curious. Did you see the set? There were wagon wheels and bales of hay, the blonde wood. It's kind of different than it looked like at the Economic Club in Chicago yesterday. But that's the deal, right? Kamala Harris, Charlemagne yesterday. These interviews are rolling out quick because the race is too close to call. We've got 20 days to go. Good thing we have Wendy Benjaminson at our side here. Of course, senior editor from our politics shop here at Bloomberg in Washington. You can't spend enough time watching TV, right? These guys are just blanketing the airwaves, right?
It's insane. They're everywhere.
It speaks to the fact, I guess, that all the ads are reserved. This is kind of the only way to get out there now, isn't it?
Right, exactly. And they're flooding the airwaves and streaming and YouTube and everything with ads as well.
Sure they are.
My phone keeps lighting up with YouTube things. Watch this ad. So they're all over the place with the ads that are hitting on policy. While in person, they're trying to make more human appeals and trying to lock down certain groups of voters that they need. Trump spending this time with women voters.
Yeah.
Is interesting. That is probably where he is the most vulnerable, based on him appointing the Supreme Court justices who overturned Roe, and his demeanor, the things he said about women, the rape case with E. Jean Carroll. So he's got some work to do with female voters. I don't. In fact, one woman I read at this town hall this morning sort of broke down, crying about how hard it's been for her being a single mom with a job, and what is he going to do to help with childcare. And it's very interesting because Trump just isn't an empathetic person, or at least he doesn't act like an empathetic person. And so he just sort of said, well, Ivanka wanted me to raise the child tax credit last time, and sort of went on while this woman is in tears. So he may still have some work to do with women.
Interesting. Kamala Harris, we've been hearing on the daily, has work to do with young men, and more specifically young black men. She's speaking to Charlemagne the God last evening. Made some waves, I guess, with that interview, but is that what it takes to break through? Really compelled by these 11th hour approaches to very specific demographics, where we're just putting it all on the table here. We're saying it out loud. Yes, I'm coming after you. I'm doing this interview. So with
Univision for Latino voters, with Charlemagne the God for black voters. There's
have we
targeted
ever had
ads.
So little nuance in messaging?
I don't know if we've ever had this little nuance, because there is. I mean, always they go after the voters they need to shore up, but it's not quite so black men for Harris. It's really, you're absolutely right, Joe. It is so obvious.
So maybe it works, maybe it doesn't.
Yeah, well, we'll see in 20 days. But yes, and it's interesting to me that Harris has this problem, I guess, when trying to shore up black male voters. I mean, Obama didn't have that problem. It was new that an African-American man would run for president. And so I think 99.9% of black voters or something like that, went for Obama. It's less new this time. She's a woman, which is a problem for some people. And, there have been these efforts to get men okay with voting for her. There was even an ad, I think, someone in separate group put out with an older white Western actor, Sam Elliott, saying, if it's the woman thing, get over it. So there's all sorts of men out there telling other men to vote for Harris.
Mansplaining to men. I don't know. So how about the Fox place? Yeah, no, I think that's long in coming, isn't it? Fox News, Brett Baer. Is this Lion's Den, or is this a straight news interview?
Well, I think this is another one of those moments where she's trying to shore things up.
She sure is.
Brett Baer doesn't have the same reputation that other Fox hosts, particularly the daytime hosts. He's going to try to play it straight, I'm guessing. He's going to try to play it straight. He's a good journalist, and this is her effort to work the independents and never Trump Republicans, or even Republicans who just can't decide whether they should vote for Trump or Harris, because they're just enough off-put by Trump that they may vote for Harris. So you have Liz Cheney's endorsement. Now she's going on Fox to talk to those people. Liz Cheney is now out campaigning for some Democratic House candidates. So there is this whole effort to give other Republicans a choice besides Donald Trump.
Well, we're really going for it today in Pennsylvania. This is a bit later on, in which she will warn of the threat that Donald Trump poses to the Constitution. And we'll be joined by what I read in every reference here. There's no exact number, 100+ Republicans who are backing her candidacy, including Adam Kinzinger. These are the rhinos that Donald Trump talks about. They don't bring anybody over in the middle, do they? Maybe they do.
Maybe
are these the Nikki voters?
Maybe they are. Maybe they're. But one of the things that Kamala Harris is doing now that intrigues me, I guess, is this Donald Trump is a threat to democracy, Donald Trump is an awful person, all this sort of stuff. When voters need, I mean, listen to Stanley Druckenmiller just on your show a few minutes ago.
Right.
He's not voting for either of them.
How about
and
that?
he's not hearing what he wants to hear. He already knows and believes whether Donald Trump is awful or not. She really, really needs to hone in on what, I mean, we love numbers at Bloomberg, and our poll and every other poll shows it's the economy, immigration, abortion, and then democracy. Democracy is, maybe that's sad, but it's the fourth most important issue to people after making it through a budget month, for a family.
Sure.
And so maybe she needs to talk about that while going for these groups.
You wonder if it's getting jumbled up too in the messaging about Donald Trump's age. This is, he was talking about the enemy within and had this rambling event where he's dancing to music for 40 minutes and all of that. And Kamala Harris is starting to get to why they're trying to hide him, she said. Almost like he was saying about Joe Biden. Although he claimed on Bloomberg yesterday he never attacked Joe Biden about his age. Is it time, we've got 20 days left, to go on attack about Donald Trump's age?
I mean, I suppose she can. It's another data point that they can bring up.
The oldest nominee in history, right?
He was the oldest nominee in history, now even older than Joe Biden.
Yes.
And she is, that's the bar now, even older than Joe Biden. Yes, and she can hammer that home, and his meandering speeches sort of, build that up. And yet it's the economy. People want to hear about her, and she has very good policies for people who believe in those issues.
Yeah.
She should be talking about them.
We're out of time largely. Does she challenge Donald Trump to a debate on Fox tonight? Wouldn't she use the time to go there?
She could, although asked and answered.
Not going to happen, right?
It's not going to happen.
Asked and answered.
Yeah.
But it's still good politics to try.
Oh, it absolutely would be. Throw that glove down.
Say he's dodging for the next 3 weeks. Because there's no other stop on the road, right? This is it. We're in cruise control till November 5th, and people are already voting. We have to remind ourselves.
Exactly. Record turnout in Georgia yesterday.
So these are the closing arguments.
This is it.
We have made it with Wendy Benjaminson. And we've been talking about this for 2 years. I don't know. We're almost there. With less than 3 weeks to go, Wendy Benjaminson, thank you as always. And we'll assemble our panel next. Wednesday edition of Balance of Power on the radio, on the satellite, and on YouTube. We'll have Rick Davis and Jeannie Shanzano on the way, as you would expect. On the fastest show in politics, this is Bloomberg.
industry. We do check markets all day long here at Bloomberg. Stocks are trading mixed. We have got the Dow and the S&P both advancing. NASDAQ in the red, but the Russell 2000 moving higher now. Small cap shares gaining 1.6%. Traders kept driving a rotation out of the tech mega caps that have powered the bull run and other corners of the stock market. NVIDIA shares, though, are rebounding today. Right now, we have got the S&P higher by 13, up by about 0.2%. The Dow up 266, up 0.6%. NASDAQ, right now, NASDAQ unchanged on the day after earlier losses. Again, the Russell 2000 bears repeating, surging now by 1.6%. 10-year 4.01%, with the 2-year 3.93%. Gold up 0.3%. 26.69 the ounce, and West Texas Intermediate crude down 0.2%, 70.47 a barrel. The U.S. Labor Department is out with more inflation data, and with that story, here's Bloomberg's Vinny Del Giudice.
Core import prices, excluding petroleum, rose at the fastest pace in 4 months in September. Bloomberg Economics sees upside risk to U.S. inflation based on today's report, as well as last week's data on consumer prices and producer prices. The cost of imported autos has been on the rise, up 4 months in a row. International airfares are also an issue, as are rates for global air freight. Vinny Del Giudice, Bloomberg Radio.
GM says it will commit $625 million toward what is likely to be one of the biggest American lithium mines, reinforcing the automaker's efforts to secure domestic supply of the battery metal that is critical for electric vehicles. Shares of General Motors today, right now, trading up by 2.1%, but shares of Lithium Americas Corp up by 20.4%. DJT, Donald Trump's Trump Media and Technology Group, his social media firm, surging today by 10.7%. Recapping, NASDAQ just turning higher, little changed, up 0.5 point. S&P up by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington once again. Your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. An update on the markets. We'll do that again shortly with Charlie Pellet, who keeps his eyes on Wall Street for us here as we bring you the fastest show in politics. I should be checking shares of McDonald's, I feel like, and they're not really moving much today despite the news. Gosh, barely lower. We're down 11 cents at the moment. As CNN reports, Donald Trump is going behind the counter. I haven't had a chance to mention this today with the Druckenmiller interview and our deep dive with Wendy Benjaminson. But CNN reports Donald Trump will visit a McDonald's Sunday in Pennsylvania and will, quote, work the fry cooker, unquote. I'm guessing he doesn't do the paper hat. Maybe he puts on the apron, but he will be making fries. So we're going to see video potentially this weekend of Donald Trump reaching out the drive-through window with the fries. I don't know. The headset with the mic. A source familiar with the matter telling CNN this comes as Trump has repeatedly claimed Vice President Kamala Harris never actually worked at McDonald's. You know, that's part of her life story, right? Worked the fry cooker at McDonald's. Maybe this will come up on Fox later. I don't know about this whole thing. Donald Trump at McDonald's, we know he loves the fast food. Wonder, maybe, is it possible he sent Big Macs to Vladimir Putin? Because McDonald's is not in Russia anymore, I remind you, after the whole Ukraine invasion. They had to sell the local license there to pull out. So you can't actually get a Big Mac now in Russia. I had to go back and look at this. Producer James was investigating this for us. The Big Mac has become the big hit. That's what they call it. They're not allowed to use the special sauce either. So now McDonald's is like McDowell's or something. The de-arching, as James mentioned. I bring all this up because Donald Trump was asked about Vladimir Putin yesterday. Remember there was a report from Bob Woodward said he sent COVID tests when nobody else could get them here. The questions about their relationship and whether they're still in touch since Donald Trump left the White House. This was part of our interview conducted by Bloomberg's editor-in-chief, John Micklethwaite. Let's go back to yesterday and the former president. Listen.
Well, I don't comment on that, but I will tell you that if I did, it's a smart thing. If I'm friendly with people, if I have a relationship with people, that's a good thing, not a bad thing. In terms of a country, He's got 2,000 nuclear weapons, and so do we. China has a lot less, but they'll catch us within 5 years.
It's where we start with our panel. Jeannie Shanzano is with us, and Rick Davis, of course, Bloomberg Politics contributors. They were with us for the throwdown yesterday in Chicago, and they're back today. Jeannie is, of course, political science professor at Iona University. Rick Davis is partner at Stone Court Capital. Now that we all want Big Macs, Jeannie, anybody tried that chicken Big Mac? I haven't done that yet. Does Donald Trump need to clean up the remarks about Vladimir Putin and President Xi? Because he made it sound like he's been in touch with the leader of Russia since he left the White House.
He sure did. I mean, it was something of a train wreck. This is the same person who just after Bob Woodward's revelations came out, called Bob Woodward deranged, said he made up the story about the communication with Putin. And then yesterday when asked, he seemed to suggest, as John Micklethwait said, that that was the truth. And when he was asked about that, he just went on that it would be a good thing. So he absolutely does need to clean it up. And I think more important in this is the COVID part of this story that you referenced, the idea that we had so many people suffering here and he was sending precious COVID equipment to Putin, his friend, who I guess after he's left office, he has kept in touch with. It is a problem for him, and it is something he should clean up, but I don't think you should hold your breath.
Rick, the line from Donald Trump was, I don't comment on that, as we just heard, but I will tell you that if I did, it's a smart thing. A lot of people took that to assume that he is talking to Vladimir Putin if it would be a smart thing. Is he wrong there?
Well, first, let me say kudos to John Micklethwait. He did an excellent job in this interview, proven by the massive amount of news that Bloomberg has gotten off of that interview. And so it's very telling. So I've done my sucking up. Now let me get into your warm-up. You're definitely on the weave. You know, Donald Trump described these wandering, weird ways of getting to a point and actually never getting to the point. We just saw the Joe Matthew weave come right through there. I mean, it's amazing. We start with fries and go to burgers. I mean, you know, and then we wind up with Putin. Look, it's just not consistent, right? I'm not going to say whether or not I talked to Putin, but here's my story about 5 other world leaders I talked to who gave me intimate stories about details of how they're screwing the United States. All the stories about our allies were negative. All the stories about our enemies were positive. I mean, like the symmetry there is just incredible, right? So, yeah, he'll tell you the private details of, you know, his Merkel conversations about, you know, not allowing cars to be exported into Germany, which actually turned out to be not true. But he won't tell you whether or not he's talking to Vladimir Putin. Yeah, I just went on and on. I mean, honestly, it was like dizzying. But when you're caught in the weave, you're caught in the weave. There's not much you can do.
Apparently, it's contagious, Jeannie. The McShrimp is a Russian McDonald's exclusive, I'm reading here for the first time. Goldenly fried on the outside with an interesting preference for Thousand Island dressing as a sauce over the traditional tartar. Now, with that in mind, I ask you, is it smart for Donald Trump to get behind the fry-o-lator at McDonald's this weekend?
Joe Matthew, are you hungry today? That's what I'm sensing here.
I'm dying in here.
Bring the man some food. You know, I feel like in some ways this has been the McDonald's election. We had to hear about Kamala Harris working at McDonald's. Now we are hearing about Donald Trump visiting McDonald's. I don't know if you and Rick worked at McDonald's. I did not, but apparently this is something that they think is going to appeal to these undecided voters. And I think Elizabeth just said on the IB that Clinton was at a McDonald's. So I don't think that's new for Clinton, but you know, this is where we are today. So I guess we all have to head out to McDonald's now.
Bill Clinton's the one who taught us that it's okay to eat at McDonald's before you go running, Rick. Would you put your candidate behind a big vat of hot oil?
At a McDonald's, you mean?
Yes.
Yeah, sure. Absolutely. We've done a lot of sort of behind the counter, flipping pancakes, making eggs, flopping burgers. But rarely have we raised it to the level of the battle of the burger, where, you know, the bona fides of who's stronger on McDonald's is somehow going to sway voters. Look, it's a battle over the middle class. It's a battle over the working class. And And I guess McDonald's has just, in this election, become the symbol of, you know, what you eat and where you work if you want to connect with the middle class. I think it's all optics. I don't think there's any meat in that burger. But the reality of it is, you know, you're not going to stop Donald Trump from getting in there. It'll be interesting to see how long he stays or what music they'll be playing in the McDonald's when he arrives.
That's a great point. Where's the beef, Jeannie? I'm surprised Rick didn't call it a nothing burger. It does bring us in the middle of a media blitz. Kamala Harris is going to be on Fox News later. Maybe they'll talk about the fry later. Donald Trump speaking to women in a town hall on Fox earlier today. They can't seem to get enough, although you might have heard Donald Trump skipped out on an interview yesterday morning on the other network. I guess there are exceptions to the rule here, but it seems, Jeannie, they can't do enough of these interviews. And in the case of Kamala Harris, not with a friendly crowd. What does that tell you about the time we're at, beyond the fact that this is a tied race?
You know, first of all, Donald Trump's interviews, a train wreck yesterday on the economy at Bloomberg. You know, look at how he did the dancing on the night before. And then look at yesterday, speaking to women with Harris Faulkner in Georgia. And he is talking about himself as the father of IVF. So this is where he is in this election cycle. He is desperate to appeal to women on an issue he knows is a huge problem for him. And it is not going well is probably the best way to say it. So I think skipping that interview yesterday may have been a very good thing. But he's going to do more work because I think when you look at the reproductive issue and healthcare overall, if Donald Trump has challenges in these swing states, it is going to be that issue and that issue alone, which makes his life pretty miserable on November 5th.
Wow, how about that? It's Brett Baier doing the interview on Fox News. What's this experience going to be like for Kamala Harris, Rick? We were framing this yesterday as kind of the two last tent poles. Donald Trump on Bloomberg, Kamala Harris on Fox. Does she make news later, or is she playing defense for an hour?
No, I think she's going to lean in. If she's smart, she's going to have a couple of news items to plunk down and get on the offense. But Brett Baier will drill her down on that. He's a very good interviewer. And remember, I mean, you know, when Brett Baier did his interview of Donald Trump, it was combative. You know, so everyone thought, oh, this is going to be great. Donald Trump, another TV interview on Fox. Brett Baier will be great. Brett Baier ate his lunch. I think you can only assume he's going to try to do the same thing here. He's got his own reputation to brandish, and she's going to have to survive it. Trump did not survive the battle in Chicago with John Micklethwait. The question tonight is, will Kamala Harris survive her battle on Fox with Brett Baier?
What's your expectation, Jeannie? And does she need to make news? She could, in fact, make a new agreement with Fox all over again to do a debate and send it back to Donald Trump. Does she speak to him directly through the camera tonight?
You know, I don't know if she speaks to him, but she has certainly said very clearly she's open to a debate on Fox. I think she should challenge him to that again. We know Fox is already there with her on that. He is scared to debate her. But I think, you know, Kamala Harris, when she has had tough interviews, has done better than expected. So, you know, there is an old adage that the friendlier interviews are sometimes the toughest. So I think that is true. So if I had to guess, I think she will overperform tonight in this interview. And that is a good thing because she needs to appeal to the kind of people who watch Fox News. And she needs to try to pull some of those folks from the moderate middle over to her side in these swing states. So I think this is a win-win for her. Quite frankly, she should have been doing these kinds of interviews since she got into the race 3 months ago.
If we had, Rick, the one more debate, would closing arguments already be underway as it feels now?
Oh, yeah. Closing arguments are underway. You know, we're in the 3-week stretch, halfway through the first week of that. You can see already the campaigns kind of, you know, focusing their attention on certain constituencies. Well, at least we can document that a little better with the Harris campaign. They've got a little more discipline, focused on young people, young blacks, trying to get them out. Right now, there's a low enthusiasm gap with these voters that the Democrats need to make up their coalition complete. So, yeah, we're into closing arguments now.
As we speak with Rick Davis and Jeannie Shanzano, they'll be back for a lot more in our second hour of Balance of Power. The McShrimp, you can get it as a side as well, James says. You can substitute the fries in any combo for shrimp. That's what they're doing in Russia. Hour 2 is on the way on Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
20 days to Election Day, though they're voting already around the country. Welcome to the fastest show in politics, as the presidential campaigns use these final weeks to crystallize their closing arguments. I'm Joe Matthew, alongside Kaylee Lyons in Washington. Glad you're with us here on the Wednesday edition of Balance of Power. Kaylee, the closing arguments are coming in the form of a media blitz that won't quit.
No, it won't. We're going to see more of it today already. Today we saw airing on Fox Donald Trump's town hall with an all-female audience. We will later see on Fox Kamala Harris's interview with Bret Baier as she tries to reach across the aisle toward Republicans who may be reluctant to vote for Donald Trump, as she's also trying to reach out to black men in particular, trying to bring more of them into her camp, as we saw evidenced by her conversation with Charlemagne the God yesterday.
Yeah, the Charlemagne conversation is an interesting one, and it's one we're going to talk about with Charles Phillips from recognized and co-chair of the Black Economic Alliance. He's speaking as a surrogate for the Harris campaign about the very demographic that we're talking about here, but we're ping-ponging, it feels like, Kaylee, from one demographic to the other. It's kind of hard to keep up with these candidates right now.
Well, it is, and it is the final stretches of the campaign, so maybe busy is what they should be. And certainly Donald Trump kept us busy yesterday as we witnessed more than an hour-long conversation between him and our editor-in-chief, John Micklethwaite, on the economy. We're going to dig more into the details of that, continue our analysis with Douglas Holtz-Eakin of the American Action Forum this hour. But first, as always, we should begin with a check on the market. So, Charlie Pellet, how are we looking from New York?
Right now, it's looking interesting, and here's what I mean. We've got the NASDAQ 100 index. Seconds ago, it had turned positive, but right now, NASDAQ 100 lower by 3 points, but we are seeing a tech turnaround on this Wednesday. We've got NASDAQ up now by 22. That is a gain of 0.1%. S&P, to put it all in context, up 17 right now, a gain of 0.3%. The Dow up 264, up by 0.6%. NASDAQ 100 index, I'm calling that unchanged, but the Russell 2000 index of small cap shares, that is absolutely ripping higher, up now by 1.6%. Your 10-year 4.01% with a 2-year 3.93%. Gold up $11 the ounce to $26.74, a gain there of 0.4%, and a retreat for crude oil down 0.3%, $70.35 for a barrel of WTI. Morgan Stanley earnings out this morning. The stock up now by 6.8%. Morgan Stanley traders and bankers joined the rest of their Wall Street rivals in posting better than expected revenue, fueling a profit jump for the third quarter. Again, Morgan Stanley shares up now by 6.8%. Recapping, S&P up 16, a gain there of 0.3% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with a look at the trading on this Wednesday. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where we already told you earlier this week about some new policy proposals from Vice President Kamala Harris as she tries to woo more black men into her electoral coalition, talking about small business loans forgivable up to $20,000, legalizing marijuana on the federal level, and yes, even providing a regulatory framework for cryptocurrencies. But it's even a little bit more explicit than that, as she is doing a media outreach as well, including an appearance on Charlemagne the God in an audio town hall yesterday, where she had this to say.
My agenda is about tapping into the ambitions and the aspirations, knowing that folks want to have an opportunity. If they want, they should have a meaningful opportunity to build wealth, including intergenerational wealth. Black families are 40% less likely to be homeowners than others. And that home ownership is one of the surest ways to build intergenerational wealth.
That's from yesterday, late yesterday, the conversation with Charlemagne, the Breakfast Club that's still resonating today, even as Kamala Harris moves on to the next interview, as we were discussing. But we want to stop down at this moment and spend some time with Charles Phillips, co-founder, managing partner of Recognized, co-chair of the Black Economic Alliance, with us speaking as a surrogate for the Harris campaign, and with us from world headquarters in New York. Charles, it's great to have you on Bloomberg TV and radio. Are we entering a new age of politics here? Kaylee used the word explicit, which I like in this case. The very on-the-nose approach to specific demographics, in this case, young black men, saying it out loud. Is that what these campaigns need to be doing?
I think it's a great idea. She's basically doing what all candidates should be doing, is listening to voters. And if they are asking you questions and want detail how this affects me, give them that. So I think it's like any business responding to their customers. So we've been polling black men for the last year or so. And their top 3 issues all have to do with the economy, inflation, home ownership, the things she's talking about. But they want details. How is this going to work and when is this going to happen? The second thing they told us is we don't want to hear from celebrities. That's, 5% said that they'd listen to a celebrity on this topic. 32% said we'd rather hear from some black business leaders. So that's what we're doing. We're doing a town hall with her, with the black men rather, doing a texting campaign. We have a letter with 50 black leaders coming out later this week endorsing Kamala Harris as well.
Well, when we consider, as you mentioned, the polling you were doing, what black voters want to hear, I do wonder how much longer there really is with less than 3 weeks to go until Election Day to close the gap that has been created, not between Kamala Harris and Donald Trump in this regard, but where Kamala Harris is now compared to where Joe Biden was with this group in 2020. In 2020, Biden got, 87% of the black male vote? The numbers look much lower in this cycle. Is there still room for them to change materially?
Well, she's come up dramatically since she first launched. Remember, it's only been 70 days, so she had a lot of work to do to get the policy in place and to reach out to people. And one way you do that is to be explicit, because you have to get your message out quickly. She didn't have 2 years to get ready for this. So her momentum is going in the right direction, but given so little time, she's doing the right thing. Also talking to people who you normally wouldn't be expected to talk to. I think it's great she's going on Fox News tonight. She's going to do some other shows as well. And so I think given the limited time frame, that's what you have to do.
Use that word again, Charles, explicit. You also made the point, though, that we share, as I guess varying demographics, pretty much all the same issues when it comes to the economy. People want to know how to get a house, how to pay for a car, how to pay for their kids. Why does it come down to targeting specific groups of people? This is what some refer to as identity politics, no?
Because there are specific groups who've been left out in the past. They feel like their needs weren't being addressed. They didn't participate. And if you're saying I can participate now and everyone's going to be included, how do I get in on this? And so I think it's okay. I mean, we do this for every other group all the time. There's all sorts of lobbyists for different industries, all sorts of lobbyists for gun ownership, you name it. Everybody wants to make sure that my thing is paid attention to. So I think her going group by group and saying, yeah, you're included, here's how it applies to you is a good thing.
And you mentioned that the kinds of individuals this group wants to hear from include black business leaders or just business leaders in general. And I do wonder, as we all witnessed on Bloomberg yesterday, Donald Trump getting a pretty warm reception in a room full of what included a lot of business leaders in Chicago, as we have seen as he's spoken before other economic clubs in New York or elsewhere. There is still a feeling that Donald Trump is better for business, whether it's big business or small business. How does the Harris campaign counter that messaging when she is floating things like higher corporate tax rates and the like?
I think you have to put the Trump economy in context. That's one of the things they're working on. I mean, he grew the economy about 2.5%. That's excluding his COVID year. Let's give him a break on that one. That's pretty much the same as what Obama did, 2.4% his last term, except Obama created more jobs, so about 215,000 per month. And so it's not like Trump did anything dramatically to change the course of the economy, it just continued for what he had. And then what people remember when we did the polling was the 2 COVID checks they got on the Trump with Trump's name on them. So that's a one-time thing. You have to explain that to people like, yes, you got those checks and you were able to stop working for a while, which of course contributed to inflation as well. That's over with. And to do that, he cut taxes but created $8.4 trillion onto the deficit. So put all that in context. So yeah, that's a one-time error. It wasn't as good as people are saying it was. I'm going to do better.
We've learned today that Michelle Obama is going to be stumping for the Harris campaign. In fact, has a date set now, October 29 in Atlanta. This appears to be the real closing argument. Is the First Lady the most powerful surrogate Kamala Harris has to reach young black men?
She certainly has to be among the most powerful. She's respected by everyone. And so to the extent she's out there, that's great. President Obama's out there as well. But collectively, they have to get their message out on the actual economy. All these programs that we've been talking about, these are real. We can get them funded. You'll be able to buy a home. You can start a business. We're going to put in ESOP programs, so if you're working for a big company, you can have some stock ownership. The list of things that she had in that paper that he put out had about 20 ideas in there. If you did half of those, that's going to help a lot of people, including a lot of black men.
Charles, as we have this conversation and look ahead 20 days to Election Day, it is worth pointing out the election already has begun. People are voting in a number of states, including Georgia, where early voting began with record turnout yesterday of more than 250,000 people. So how much is this about the turnout game, about encouraging some of these very same voters we're talking about to not sit on the sidelines, actually go out and put that ballot in the box or however you want to phrase it, to get them to show up?
That's where all the attention on this race can benefit Vice President Harris. if you get people to actually pay attention, get excited about the election, feel like they have a stake in it, they want to have a say and go vote, higher turnout will help her among black men, and black community in general, but all groups. And so I do think she has an advantage if people actually go out and vote.
How should Kamala Harris be spending her time in the next 20 days here? We've been using the term closing arguments a lot this week. We have no more debates. Is it actually being on the ground in the swing states, talking to the voters that we're describing here today, Charles? Is it being on the air, doing more interviews, or both?
I think she has to do both. She is doing both, and I can't imagine how tired her day must be, but she's doing all the major media outlets. She has more that are coming, that I'm told. But she's on the ground going from state to state as well. But also they built a pretty big infrastructure without her in all these states with surrogates as well. So she's doing everything she can do. I just hope people are listening.
Tell her we'd love to talk to her.
Yeah, she has a standing invitation to do one of those interviews here on Bloomberg, sir. But thank you for participating in one with us. It was great to talk to you. Appreciate your time. Charles Phillips, co-founder and managing partner of Recognize and co-chair of the Black Economic Alliance. Thank you very much. Speaking today as a surrogate for the Harris campaign. Now, as we have seen this media blitz on her behalf, as Charles was just discussing, and on Donald Trump's for that matter, we want to turn back to our political panel to talk about this strategy. Jeannie Shanzano, senior democracy fellow with the Center for the Study of the Presidency and Congress, alongside Rick Davis, Stone Court Capital partner. So, Jeannie, he's talking there about how she has more media interviews on the books. Certainly, she is doing more today. And I do wonder if one in particular interview today, this interview on Fox, is going to be the highest stakes and highest degree of difficulty, one that she could face or has faced up to this point and will face going forward.
Yeah, it very well could be. This is a really important test for her. So far, a lot of the interviews she's done, not all of them, but a lot of them have been friendly, with a friendly interviewer and a friendly platform. That is not to say that Brett Baier is going to be unfriendly, a very nice gentleman, but he's going to be tough. And so she does have high stakes here. It is, I couldn't agree more with Charles. It is very important she is doing these, and quite frankly, she should have been doing them earlier. You know, this is what people have been calling for. There is no reason, and Pete Buttigieg has showed us this, that Democrats need to stay away from Fox. That goes back to, you know, these early campaigns where Democrats agreed not to debate on Fox, and it's persisted. It is a bad move because you leave a big part of the country. And so I'm happy she's made this decision.
Interesting conversation we heard earlier today on Bloomberg TV and radio that we brought you with Stanley Druckenmiller. Rick, he said, gun to his head, he thinks Donald Trump wins. In the last 12 days, the market very convinced that Donald Trump is going to win, although he's not voting himself. And we learned today that Elon Musk has dumped another $75 million into the super PAC supporting Donald Trump. Miriam Adelson gave $95 million to the Preserve America PAC, bringing her donations into the 9-figure zone. Are we going to look back at this period of time as the moment when Donald Trump regained the lead?
You know, it's hard to tell. I mean, you know, I read the Emerson poll come out this morning that has Harris up. I'm talking about a national poll, so forgive me. This is
we must be getting close.
You know, but 5 points ahead of Trump on a national survey with likely voters, which is basically where most of the pundits have been saying she needs to be in order to translate that into a victory into these targeted states. So I think I think Stanley Druckenmiller was right. It's a very hard thing to figure out. He said he was watching the markets to figure it out. I'm watching survey data. We all have our, you know, sort of crutches. But the bottom line on it is right now it's about turnout. And that's where the Elon Musk money comes in. I mean, that's $75 million to do canvassing, get out the vote. The Trump campaign is doing something that's incredibly risky, has not ever proven to be effective, which is contracting out your own get out the vote victory programs. And they're contracting with a firm that, you know, did this for Ron DeSantis in Iowa. He got all of 20%. Not even half of what Donald Trump got in Iowa. So why they would go to this model, I don't know. I assume it means there are financial problems with the RNC and the Trump campaign, and so they needed this kind of capacity. But just to put it into scale, Kamala Harris's victory PAC has $690 million in it. So I don't even think it's, like a motivational thing anymore. It's going to be just the mechanics of trying to get the people you've already identified. And if you haven't identified them by now as being your supporters, then you're flying blind. And then it's just you're turning out folks in a zip code that you hope have more Republicans than Democrats. Yeah. So I think it's actually the opposite. I would put my money on someone who built the state offices, who hired thousands of people to work on them, who've been doing it now for 6 months. And that might have been the best gift that Biden gave to the Harris campaign, was a focus on local organization.
Well, and does that local organization show up before actual election day or the tallying of the votes, Jeannie? We've spent a lot of time talking about how the resources at the Harris campaign's disposal haven't translated into the kind of bumping in polling that you might expect to see if you were running a ton of ads for months. But is it because we haven't actually seen the effect of the money fully showing up yet?
Yeah, we have not. And that is, so frustrating, I'm sure, to the Harris campaign. That said, we always knew this was going to be a close election. But can we just go back for a second to the Elon Musk money? Wasn't the idea with Donald Trump when he rose on the political scene that he came with his own money, and so he wasn't beholden to anyone? Yesterday, he's talking to John Micklethwait about appointing Elon Musk with all this fundraising to head deregulation, to head government cutting, which creates something of a conflict of interest, right? Because Elon Musk runs companies like SpaceX and Tesla. So he would, in fact, be in charge of the commission, I suspect, of the very federal agencies who are supposed to regulate him. And so the very reason that many voters turned to Donald Trump, because he wasn't going to be beholden to those folks in the swamp, as he called it, of Washington, D.C., seems to have turned in the midst of all of his legal troubles. So that is something that we don't hear a lot about, but certainly should be raised in this context.
Yeah, and I suspect we'll hear a bit more about. Interesting when it comes to the money, though, Rick, you were making a really important point yesterday in our special coverage of the Trump interview. In our remaining moment, you don't just need money for the election anymore. You need money for the legal fight that starts the day after.
Yeah, hundreds of millions of dollars were spent in the ensuing 2 months after the election in 2020, protecting the ballots that were already done, doing recounts, hiring lawyers to prosecute over 60 lawsuits on Trump's behalf. All that had to be paid for somehow. All the strategists, you keep the campaign fully staffed just in case you need to turn out a protest or, show up at a precinct somewhere to watch a recount. I mean, it's really significant. And so money matters.
It's our new reality, which is something we're going to talk about later with Zoe Tillman, a great big take story today on the 165 lawsuits already filed. Rick Davis and Jeannie Shanzano, our signature panel. We thank you, as always, on the fastest show in politics. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ all pushing higher. NASDAQ 100 index, so seeing weakness in tech names down 0.1%. But to put that in context, we've got the S&P higher now by 0.2%. The Dow up 0.5%, up 231 points, while NASDAQ little changed higher now by 8 points, just under 0.1%. 10-year 4.01% with the 2-year 3.93%. Spot gold right now trading higher by 0.4%, 26.73 the ounce, and West Texas Intermediate crude little changed on the day, 70.57 a barrel. After earnings, United Airlines shares are flying higher. UAL up now by 11.7%. It reported a third quarter profit ahead of Wall Street expectations. Recapping, stocks higher, S&P up 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington once again. Your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet in New York, thank you so much. I'm Kaylee Lines alongside Joe Matthew here in Washington, where, of course, around this time yesterday, we were listening to a live conversation between former President Donald Trump and Bloomberg editor-in-chief John Micklethwait in Chicago, in which he was talking about Chicago, Detroit, and other industrialized American cities, and in some senses, saying they make us look like a developing nation.
Literally what he said.
That is the picture he sees when he looks at the cities of America.
That's true, and we wanted to have a conversation with someone who knows what it's like to run a city. I'm a big fan of mayors. I think you understand, Kelly. These are politicians who don't always have the luxury to play the partisan game and go along with the crowd. They need to get things done. They need to build relationships, actually know their constituents on a first-name basis so they can manage the city. This is about potholes. This is about getting people to work. This is about public transportation, keeping people safe. A lot of the things that lawmakers in Washington will never have to face. And it's where we start our conversation with the mayor of St. Louis. Mayor Tashara Jones is joining us, interestingly, from Mexico City. This is a conversation we have been looking forward to as part of Bloomberg's City Lab. And Mayor, it's great to have you with us here on Bloomberg TV and radio. I know you're a long way from home. What are you learning, and what are you talking about today at City Lab?
Well, thank you for having me. Bloomberg City Lab, this is my second year coming, and it has been just a whole wealth of idea sharing from mayors and leaders all across the globe. And what I have found out is that whether you are a mayor in St. Louis, Missouri, or in Glasgow in the UK, or even in Africa, we all share the same struggles and the same issues, and we just have different approaches to them. So we're able to share how we've tackled a lot of the same ideas, and also it's relationship building. So I'm really enjoying myself over these past couple of days.
Well, as this is your second time attending, this year may be different than last, Mayor, because this year it is happening with just weeks to go until a presidential election in which voters in your city and cities across America will be heading to the polling booth to cast a vote. How concerned are you about the kind of rhetoric we're getting around this election, as we've had people warning us about civil unrest, not just here in Washington at the Capitol building, but in cities, in state capitals? What is St. Louis ready for?
So we're very concerned. I'm concerned for my country because this is the most monumental election that I have witnessed since I have been voting as a young teenager. We're not concerned in St. Louis per se on any violence happening at our polling places. Missouri is pretty much a red state. We know which way it's going to go for the presidential election and unfortunately our statewide elections. But what I am most concerned about is in our swing states and states where the vote is really tight or where the polls are really tight. And I'm concerned about making sure that there is a peaceful transfer of power no matter who wins.
Mayor Jones, Kaylee mentioned earlier some of Donald Trump's remarks about cities in his interview with Bloomberg yesterday. He disparaged Milwaukee ahead of the Republican National Convention there. He's frequently criticized Chicago and San Francisco and took aim at Detroit yesterday, which was curious, knowing that it is, of course, in the swing state of Michigan, which pretty much any candidate needs to win to get into the White House here. I'd love for you to listen to what he said about Detroit, and we'll have you respond. Here he is.
Not one president, think of it, not one president charged China anything. They said, oh, they are a third world nation, they are developing. Well, we're a developing nation too. Take a look at Detroit. Take a look at our cities. We're a developing nation. We have to develop more than they do. We're way behind them. You take a look at what's happened to our cities.
Mayor, he has said recently that if Kamala Harris is elected, that the entire state of Michigan will look like Detroit. What would a Trump 2.0 mean for mayors and people who live in American cities?
Well, Trump 2.0 is going to mean that all American cities will look like third world countries. Right now, we enjoy a great relationship with the Biden-Harris administration because they are focused on cities. They have hired many former mayors in their administration and cabinet secretaries, and those mayors know what it's like to lead on the ground. They know that mayors are closest to the problems and closest to the solutions. Mayors get things done. We are the implementers of federal policy, of state policy. And right now, we know with the Biden-Harris administration and the investments that they've made directly into cities, we have been able to turn our cities around and see investment in cities that, and in places that haven't seen investment in decades, and taking care of the least of these, of the marginalized, of people who really need help. And we know we're not going to get that kind of assistance from a Trump 2.0 administration.
Well, we also heard Donald Trump yesterday, not in that Bloomberg interview, Mayor, but in a town hall that was taped with Fox with an entirely female audience, saying that some abortion restrictions are too tough and that they'll be redone in some of these states. And I would point out that in your state of Missouri, abortion is on the ballot in November. I know you just told us, Mayor, that it's not going to be a surprise what way Missouri goes in the presidential race. It is going very likely to go red. But what's going to happen to Amendment 3, the Right to Reproductive Freedom Initiative?
So Missouri is a little unique in that Amendment 3 is actually polling ahead. So we totally expect Amendment 3 to pass. But unfortunately, Missourians will elect Republicans to lead our state who will do everything in their power to try to turn those gains back. Missouri enjoys a very liberal policy when it comes to access to the ballot and passing very progressive measures on ballot initiatives. But unfortunately, we continue to elect Republicans statewide who do everything in their power to roll back everything that we pass at the ballot. So I expect nothing less than that to happen if Amendment 3 passes and we get a Republican-controlled state assembly and statewide offices.
Well, Mayor, we'd love to have you back on Bloomberg to talk about that if and when that does happen. Thank you so much for joining us today live from Mexico City at Bloomberg City Lab. That was the Mayor of St. Louis, Tashara Jones, here on Bloomberg TV and radio. Now, we asked the mayor there, Joe, about if she's concerned about the elections, not just the security of the vote, but the security of the people trying to vote, trying to count the votes, as there has been a lot of calls or concern around potential civil unrest that could ensue. That is a question mark. What seems to be a certainty at this point is that there is going to be a lot of litigation around this election, and we know that because there already is.
Well, that's true. People talk about the idea of this election being decided in court, but the fact of the matter is courts are already helping to shape this election. Did you see the big take today? This is the smartest thing that you'll read on the terminal. A really fascinating story with great data that we've put together. 165, by the way, at least 165 lawsuits filed since 2023, Kaylee, against 37 states, challenging every facet as we're reporting of the presidential contest.
Yeah, and we want to get more into this reporting now and turn to Bloomberg's Zoe Tillman, who's here with us in our Washington, D.C. studio. And of course, you can find her big take on the terminal and online. So Zoe, 165 lawsuits already, and we're still 3 weeks out from Election Day. So what's this number realistically going to look like on November 6th?
You know, it's hard to know. It's going to depend on where the results are close, right? So preemptively, the campaigns are getting lawyers into place in every state, really, but focused on the 7 states where the polls are closest. But it's going to depend on where it looks like a candidate is prepared to lose, and do they see an opening to ask a judge to intervene in the days before or after the results are certified.
It just reminds us how this is shifting under our feet as we speak, as we make our way through the final 3 weeks here. And there was an important development in Georgia yesterday. A judge temporarily blocking the state rule requiring hand counting of ballots. That's a big deal in the way this is going to roll out following the election. How many more rulings could we see between now and November 5th?
We know in Georgia we're expecting more in that state alone on this question of how ballots are counted and the role of officials at the county level to certify those results. So we're waiting on decisions in other cases before different judges challenging that hand count rule, a rule that the state's Republican Secretary of State and Attorney General said was likely illegal. So it's not just Democrats coming in to oppose that. We're also waiting for decisions on a rule that would empower local officials to do their own independent investigations into the election as part of the certification process, a rule that again is being criticized as a way to inject chaos and confusion into a process that historically has not been controversial.
Well, could it be just as chaotic for these rulings to happen so close to an election than as it would be chaotic for these things to actually go into place? I mean, how are local election officials going to understand what exactly the processes are if they're very much in question right up until it's go time?
You know, I've talked to officials at the county level who are, in charge of these systems, and they've told me, for the first time this year, I've signed up for accounts to monitor dockets because I need to know what is still outstanding that I need to plan for. So they've got an eye on these cases. They know that things might change ahead of time. They're trying to prepare as best they can. But it's something judges are sensitive to, and they understand that they too can inject confusion and chaos by making changes, even if the finding is that something is illegal or unconstitutional. They have to balance that finding with the possibility of creating even more problems ahead of Election Day.
It's interesting coming off of 2020, thinking of Republicans as potentially being more litigious when it comes to electoral outcomes. You found that they have been more active than Democrats when it comes to filing lawsuits, but it's only 55%. Democrats pretty busy too.
They've been busy. I think that the left has been in court challenging states that they feel are trying to put up illegal barriers to voting, and that's historically been something we've seen Democrats litigating over ahead of elections. I think what's different this year, besides just the volume, is we've seen, for instance, the Republican National Committee saying in advance, we are going to go to court. This is a part of now the campaign season and the strategy in a way that it just hasn't formally been a part of this landscape really, before 2020.
You must be really living this. This is a massive story that took a lot of legwork.
Oh, thank you. It's a very intense spreadsheet.
For sure. And that's why you should really check this out. Look for it on the terminal. The Big Take. More than 165 lawsuits already shaping the U.S. presidential election. Zoe Tillman, thanks for great reporting and a great conversation. I'm Joe Matthew alongside Kaylee Lyons on the fastest show in politics as we make our way coming up later this hour to the economy and the conversation you saw and heard with Donald Trump yesterday. Douglas Holtz-Eakin, the Republican economist, will join us to pick through what we learned from Donald Trump here on Bloomberg.
1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing. NASDAQ 100 index is trading lower. Stock traders keep driving a rotation out of the mega caps that have powered the bull market into other corners of Wall Street. The S&P right now up 15, a gain of 0.3%. The Dow up 236, up 0.5%, while NASDAQ higher by 12, a gain there of just about 0.1%. The NASDAQ 100 index lower by 0.1%. 10-year 4.01%, the 2-year 3.93%. Spot gold up $12 the ounce, up 0.5%, but a retreat for West Texas Intermediate crude 70.43 a barrel, down 0.2%. General Motors says it will commit $625 million toward what is likely to be the biggest U.S. lithium mines, reinforcing the automaker's efforts to secure domestic supply of the battery metal that is critical for electric vehicles. GM shares today up 2.4%, but shares of Lithium Americas, they are surging now by 24.3%. Recapping, small cap shares ripping higher, up 1.6%, S&P up by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues, the Washington edition. Back we go once again, your hosts, Joe Matthew and Kaylee Limes.
All right, Charlie Pellet, thank you so much. The Washington edition and the Wednesday edition of Balance of Power. I'm Kaylee Limes alongside Joe Matthew here on Bloomberg TV and radio. And if you were with us on the Tuesday edition, at this time yesterday, we were seeing a more than hour-long conversation between former President Donald Trump and Bloomberg editor-in-chief John Micklethwait wrapping up. It was extensive. They covered a lot of territory. But they began with a question around the deficit. To summarize, the question was essentially, you've proposed a lot of tax cuts. What do you say to people who are concerned about the impact that will have on the U.S. debt? This was his very first answer.
We're all about growth. We're going to bring companies back to our country. We're going to lower taxes still further for companies that are going to make their product in the USA. We're going to protect those companies with strong tariffs, because I'm a believer in tariffs.
From our interview here at this time yesterday on Bloomberg, and it's where we start our conversation with Douglas Holtz-Eakin, president, the American Action Forum, of course, economist, former OMB director, or CBO director. Douglas, forgive me. It's great to have you back with us here on Bloomberg TV and radio.
Thanks, Jeff.
This has been an interesting conversation about tariffs and taxes. And we'll start on the Donald Trump side here. Are you getting religion as a Republican on tariffs, Douglas?
I've had religion for a long time about tariffs, thank you. But I don't think it's the same religion that Donald Trump is practicing. There are really two strong beliefs that he continues to display that have been really fully repudiated by the research literature. The first is that, tariffs are a tax. They are a tax on purchases from foreign sellers, and there's always a question in taxes as to who bears the economic burden of the tax. Is there a way to shift it back to the seller and not bear the incidence in the United States? The answer from the literature is no. Consumers will bear these taxes, and as a result, will be made worse off, other things being the same, by the tariff policy. And his tariff policies are big. A $3 trillion proposal for a 10% across-the-board tariff. So that's sort of the first thing he clings to. And the second is, what is being accomplished by the tariff? And his assertion would be, we're going to stop trading for particular goods, especially manufactured goods, and make them in the United States instead, and we will be better as a result. But that goes against the vast amount of evidence that there are gains from international trade, and there are gains from trade in general, and tariffs are undoing those gains from trade. So they're not going to make average Americans better off in two ways. They'll bear the burden of the tariff, and they will also have more expensive products from which to choose.
Well, okay, Donald Trump definitely pushed back against that idea in this conversation yesterday, as we've seen him do repeatedly when confronted with that kind of reasoning from economists. He contended, to your point about it being more about making stuff in the U.S., that the whole idea with his tariffs is you make, and I'm quoting directly here, them so high, so horrible, so obnoxious that they'll come right away. They, meaning companies that currently are making goods in the U.S., will come to the U.S. Even if that is how that would actually translate, how long would that take for the reordering of supply chains and the building of manufacturing facilities realistically?
that's a decades-long process, to say the least. And remember, locations are not driven just by taxes, tariffs. Locations are driven by access to markets. And a lot of facilities are not in the United States because there are greater markets outside and greater opportunities for U.S. companies to provide profits back to the United States and a standard of living in the United States by selling abroad. So to focus narrowly on that, I think misses the point. The second thing that gets missed by that is, you're diminishing the pressure on domestic producers. If you get a big tariff wall, they don't have to keep their prices low to sell things. They can raise their prices to just under the tariff wall. And if you ask anyone, are you going to do that? They'll say, oh, no, we would never do that. But if you look at what happens in response to tariffs, prices rise for the protected products. That's not good for any of us.
Well, it makes you wonder what life is going to be like at the CBO. I know he doesn't necessarily need Congress for tariffs, but President Trump would need Congress to pass the tax proposals that he's put forth, making permanent the 2017 tax cuts. And he's added a raft of them since. You know this, Douglas, whether you're talking about deductions for auto loan payments, tips, overtime, some of the other stuff. Also the SALT
Social
cap.
Security.
CBO ought to start working on this with the green visors now.
Yes, these are proposals that don't fit any coherent philosophy. So one of the things that I just noticed that there isn't in this race a candidate who has a consistent pro-growth philosophy that relies on the private sector and believes a small contained government should get out of its way to the extent possible. That's missing. Instead, we have statist candidates who believe that they run the economy and they're going to provide the goodies to whoever they favor. So that's what you're getting. And sort of handouts at campaign stops is not new in presidential politics. But what's really, I think, most important about the Trump proposals is they're often quite large. These aren't small rifle shots. And something has to happen next year. Unlike the usual campaign thing, which is, oh, well, we just couldn't get it done. We didn't get support on Capitol Hill. A tax bill has to happen next year. And people who have been promised something on the campaign, no tax on tips, overtime, whatever it might be, are going to be asking the White House, why isn't it happening? And it's going to make the process of getting to yes in 2025 harder even than it needed to be. And it's hard to begin with.
Well, and then there's the other side of that equation, which is spending. Donald Trump is talking about supplementing the lost revenue with the income from tariffs, of growing our way partially out of the tax cuts. But spending cuts are going to have to come somewhere, right? Even if there was a red sweep in the balance of Congress in this election, along with the Donald Trump presidency, is it going to be that easy to get only lower taxes and no spending cuts through a House of Representatives where we have seen a spending battle time and time again be very difficult to keep the Republican conference in line?
Yeah. I mean, let's put the politics aside for just 1 second. I know that's what the show's about, but let's just do the arithmetic.
We do policy here too, sir.
Social Security and Medicare, $36 trillion over the next 10 years, more than half of all non-interest spending. Those two programs are going to be growing at average rates of 5.5% for Social Security, 7% for Medicare. If the economy is growing at 2% real, 2% inflation, that's 4% nominal. That's how fast revenue will grow. It'll grow at 4%. So it's not going to be able to catch up with the spending. The only way to get the deficit under control is to actually get spending to come down to the pace of growth of the nominal economy. And I will just stipulate, they can have great growth policies. They're not going to move 4 to 7. That's not going to happen. So you got to get serious about spending. And what are the two programs the president said he won't touch? Social Security and Medicare. Vice President Harris is not going to touch those. Candidate Trump's not going to touch those. All of Washington is putting its head in the sand and ignoring the real problem. That's the real problem that needs to be dealt with.
I want to turn to the Fed here, Douglas. Donald Trump was asked about Fed independence yesterday. It's one of our favorite topics around here, and I don't know how you see this. Scott Bessent joined us the other day. He said it's no different than Elizabeth Warren shouting into the wind here when it comes to the Fed. Donald Trump can say whatever he wants. We're still going to have a Fed chair, although they are talking about an alternate Fed chair of some sort here. He was asked about this in the interview on Bloomberg. Here's how he characterized the job, Douglas.
I think it's the greatest job in government. You show up to the office once a month and you say, let's see, flip a coin. And everybody talks about you like you're a god. Oh, what will he do? I think that if you're a very good president with good sense. You should be able to at least talk to him. I don't say make the decision at all.
What do you think about this, Douglas? Are we making too big a deal of the idea of the president talking to the Fed chair, and is it the best job in government?
Well, I'll pass on whether it's the best job in government. I thought I had the best job in government at the CBO, so you can ask Jerome Powell what he thinks. Look, the president has enormous influence at the Fed. The president appoints all the governors, or they get Senate confirmation, chooses the chair. So it's not like the president has no say in Fed policy. He has an enormous say. There's nothing that stops the chairman of the Federal Reserve from having lunch with the Secretary of Treasury. That's gone on for decades and decades. And the Secretary explaining the administration's position to the Fed chair. And a good Fed chair will listen and then go back and do their job. So I don't think there's anything special about Trump elevating that to a public discussion about, I'd like this in it. The only question is whether you make structural changes that allow the President of the United States to put their thumb on the scale and change decisions of the FOMC. And I think that would be a mistake. All of the research evidence suggests that the independence of the Fed and monetary authorities in general produces better monetary policy. I think we should stick to that.
Well, as we consider the Fed's monetary policy, we have now entered a world in which policy is easing rather than tightening. We saw that first 50 basis point Fed cut. We could see one or two more this year, Douglas. My question is, what happens in 2025 when we have a new president? What is your expectation around what the fiscal policy pursued by that president and whatever Congress we get could mean ultimately for the path the Fed is likely to go down? Are they going to have to start hiking again in short order?
Well, I mean, I think we know maybe this isn't the best job in government because when asked that question, Chairman Powell had to dodge and weave like mad. So that's a hard job. Look, here's a scenario that is not crazy. We just talked about it, and it's very hard for the Fed. President Trump gets elected. He institutes across-the-board 10% tariff using executive authorities that he believes he has. What does the Fed do? Do they allow that to pass through and get a 10% increase in the price level, perhaps undermining their credibility in their fight against inflation? Or do they do a U-turn, lean against that by raising rates, and run the risk of a sharper downturn? This is a dilemma for the Fed. I know they don't want to talk about it in public, but in private, they have to be wargaming different scenarios to think about how they'll respond to any sort of administrative actions that could happen quickly and legislative actions that they'd be tracking during the course of 2025.
New York Times reporting Michelle Bowman could be on track to be a Fed chair in a Trump 2.0. Douglas, does that ring true?
I have no idea. I'm not privy to the personnel decisions of the Trump campaign. We'll stay tuned and watch what happens.
Let me ask you this about the narrative in Washington right now that Donald Trump, and a lot of this is based on the number crunching from the Committee for a Responsible Federal Budget, that Donald Trump would be more of a threat to the nation's debt and deficit than Kamala Harris. In a big picture scenario, is that true?
I think in the big picture, neither is a particularly attractive candidate. Neither is dedicated to dealing with the trajectory of ever-rising debt and the unsustainable nature of the federal budget. Neither has sensible economic policies that will generate more rapid trend growth. And neither has a track record of follow-through. So these proposals on the campaign, his add up to a bigger number. But I'm interested in the track record of the individual in at key moments being willing to make tough decisions in favor of the future and having the ability to control the spending. Neither has any evidence on that front.
In our final minute here, Douglas, the Trump campaign and others we have spoken with have suggested things would be so different if COVID hadn't interrupted what was happening in the economy during his administration. When we reference back to the idea we didn't grow our way out of the 2017 tax cuts, to what extent is that true?
Well, I think that they should get a lot of credit for the initial jump start to the economy. I think what's been reported on too little is the regulatory controls. The regulatory controls in the Trump administration were extraordinary. We went from adding $100 billion a year in regulatory costs to essentially nothing. And it helped small businesses. It was a big part of the jump start. The tax bill was an enormously big step forward. There was a big spending push as well. And the economy was growing like mad. But then they picked a trade war with China, and we saw it slow right down. So if we hadn't seen COVID, it's an open question whether we would have kept slowing down or not.
All right, Douglas Holtz-Eakin, always great to have you here on Balance of Power. He is president at the American Action Forum. We appreciate your time here on Bloomberg TV and radio. And of course, Joe, you've got plenty more analysis and other coverage coming up at 5 p.m.
You said it. As we count down to the Kamala Harris Fox interview, we'll keep tabs on that for you. I'll meet you back here at 5 on Balance of Power on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Live from the Bloomberg studio here in New York City. At Bloomberg headquarters, it is Bloomberg Business Week on this Wednesday, October 16th, 2024. I'm Tim Stenivek. That is not Carol Masser.
No.
You heard her early this morning. You saw her early this morning on Bloomberg Surveillance. We got Bloomberg's Katie Greifeld with us. You know her from Bloomberg TV and Bloomberg News. Katie, how are you?
I'm pretty good.
Yeah?
You know, I'm happy to be here. I've been up for a while, but it's always a distinct pleasure to do the open and the close.
All right, we're happy to have you here. We're especially happy to have you here because you were there when these bank earnings crossed this morning, when Morgan Stanley earnings crossed this morning. We're going to be kicking off our show talking to Allison Williams of Bloomberg Intelligence. She's going to give us all the details, what our investing audience needs to know about a good quarter from Morgan Stanley. Also, did you hear about the Ozempic election?
I've heard a little bit about it. Maybe you haven't, but we're going to talk to Brad Stone all about that. He, of course, is the editor of Bloomberg Business Week.
Also, day 2 of following the ASML story. Shares down again, falling in Amsterdam 16% yesterday. Ian King is going to stop by. He's going to join us to tell us how the slow chip market is recovering and what that slow recovery actually looks like. All that ahead over the next hour here on Bloomberg Business Week. First up, though, a check of the day's trade and top business stories. Here's Charlie.
All right, thank you very much. Great show ahead. We have got stocks trading higher for the most part. A key takeaway is the NASDAQ 100 index swinging between gains and losses. We have got money coming out of tech shares, but right now we have got the Dow, the S&P, NASDAQ all advancing. 19-point gain right now for the S&P, up 0.3%, 58.34. Where we stand now, the Dow up 267, the Dow up 0.6%, NASDAQ up 0.1%. Again, let's call the NASDAQ 100 index flat on the day. You cannot ignore what is happening with the Russell 2000 index today. Small cap shares surging 1.6%. 10-year 4.01%, with the 2-year 3.93%. Gold up $12 the ounce, 26.75, up by 0.5%. And West Texas Intermediate crude oil is lower now, 0.2%. Actually, just about flat on the day. Right now, 70.43 on WTI. Morgan Stanley shares are higher. Traders and bankers at Morgan Stanley join the rest of their Wall Street rivals in posting better than expected revenue, fueling a profit jump for the third quarter. Our Allison Williams, best in the business, will have more on Morgan Stanley for you coming up in just a moment. Right now, we do have Morgan Stanley shares up by 6.7%. And briefly, sources tell Bloomberg McKinsey is nearing a deal with government prosecutors to pay at least $500 million to settle federal probes into its past work helping opioid makers boost sales. Again, recapping, S&P up by 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. You heard the numbers from Charlie. They bear repeating. Their shares of Morgan Stanley up 6.7% right now. Best day in just about 4 years. Also, at a record right now, Morgan Stanley traders and bankers joining the rest of their Wall Street rivals in posting better than expected revenue. It fueled a 32% profit surge for the third quarter, sent shares up the most in close to 4 years. Here's Morgan Stanley CEO Ted Pick earlier today in an interview on Bloomberg TV, speaking to Sonali Basak about his view of the economy and the consumer.
We don't know what the policy reaction function is actually going to be off of what has been said. And for that reason, I think you have a number of investors that are actually just sort of continuing to plow forward on the view that the economy is in pretty good shape, and that consumers and corporates are in great shape, so that when there is an election outcome, once there's a sense for whether new policy will actually get affected, then they can have a reaction.
I couldn't help but notice he said when there is an election outcome. A lot of folks saying it won't necessarily happen the day after 3 weeks from yesterday. We got with us Allison Williams, Bloomberg Intelligence, a senior global banks analyst. She joins us here in the Bloomberg Business Week studio. Allison, quite a few highlights from this report. Revenue from the trading business rising 13%. The wealth unit also standing out higher than analysts' expectations. What worked so well for Morgan Stanley this quarter?
I think it was the rebound in wealth flows that investors are excited about. But to be clear, the business is hitting on all cylinders. So there was a broad beat across the bank. The institutional was the biggest source of the beat this quarter. Equity trading, very strong. They're tilted more towards the business. It was strong for everybody, but they also had a little bit better growth there. Debt fees also sort of leading the way on the fee side of things. But the wealth business really is the core of their business. They've shifted more towards wealth and asset management over the years, especially under Gorman. And they had sort of a little bit of a shortfall in flows last quarter, and so I think really seeing the strength of the rebound is giving investors some confidence in those shares.
Let's talk about the shares, though, because Morgan Stanley shares up about 6.7% at the moment. At one point, they were up by more than 8%. Currently, the biggest rally since December 2023. when it was up by 8%. That was the biggest rally since November 2020, which was quite a time in markets, to say the least.
Yeah, that vaccine, right?
Yes,
Coming
exactly.
out
That was
for COVID.
That was wild. I think it was on a Monday too. What a way
I remember
to.
that day.
Yeah, me too. You were here. You had been here for like a month.
Yeah.
Yeah. Anyway, Allison, like you said, beating
and hitting new highs.
Yeah,
So
record
I
highs.
think, in general, this earnings season, the stock reactions have been very strong. I
Right.
think investors are getting excited about the capital market story. I think trading, we had so many years where it was underwhelming.
Right.
The pandemic, huge surge. And since then, we've really seen trading prove to be resilient.
Yeah.
This year, it's equities that's outperforming, but we're within a historically high range. And then on the investment banking fee side, that super strong year, 2021, all kinds of records. Week since, but now starting to see some signs of life. And so
Well,
I think investors
Allison,
are getting excited about both of those things.
I hear what you're saying, but is it that good? I hear what you're saying, that they beat across the board, firing on all cylinders. Is it worth a 6.7% reaction in the shares?
So again, so we don't comment, we don't recommend stocks. I just have to be careful about
No
my
matter how
comments.
much we ask, you will not.
I'm not asking for a recommendation. though,
I
just
mean,
the
if I was an investor, I guess the way I would think about it is it's a super strong market. I think about both Morgan Stanley and Goldman as riding a strong tailwind. So they have strengths, they're leveraging those strengths, but there is a very strong tailwind from the market. And the view going forward is, do you think that momentum continues? We see momentum in the near term, but I think you have to think about sort of the weeks and months ahead. Morgan Stanley, again, has some pretty aggressive targets out there for AUM growth set out by Gorman. The wealth management pre-tax margin, when markets are up, revenue is up, margins are good. But they, Ted Pick had lowered that a little bit in the near term. Will he raise that back up towards the higher 30% goal? And will Morgan Stanley march towards that over time? I think that's the long-term question for Morgan Stanley.
Can you help me and our listeners and viewers understand the asset management business, the wealth management business? Because we hear over and over again, in the long term, it's difficult to beat just investing in indices. I know it's, kind of sacrilegious to actually say that, but if you look at the research,
You're towing a dangerous path here.
You see that time and time again, Allison, yet you still have these banks attracting very smart money for a product that charges a fee. What do clients get, and what are investors getting out of that?
So I'll say a few things. So Morgan Stanley's investment management business, I know pretty well since I used to work there. The strength there is alternatives and fixed income, where you definitely do see good returns. Their equities business is actually very focused on active, having a very strong active share and concentrated bets, so it can be more volatile. So I think within the argument about, when you look across and all managers aren't going to beat the index, right? But I think if you are buying an active fund, you do want to buy something that is making bets, right? Not just hugging the benchmark, as you say. And so I think that's what we've seen in the industry over the last, a decade or so, perhaps longer, but accelerating is, look, I can get beta cheap. I can get those cheap funds, those index funds. But for alpha, right, you are seeing flows, and you see it also on the hedge fund side as well. The hedge funds that can deliver consistently better returns are the ones that are getting assets. And turning to the wealth side of things, I would also say that business has really evolved over time. And so, years ago, maybe at the turn of the century, if you will, it was about fund of the month, or this stock will make you the most money, this fund will make you the most money. But the industry, I think, is really focusing on client needs, client investments. And so that's really been a shift.
30 seconds now that big banks are wrapped up. We heard Ted Pick say that consumers and corporates are in great shape. How would you characterize, Allison, sort of the holistic view that we got from the big banks over the last week or so in terms of commentary on the consumer? Good place?
I think it's very good, and I think that's another reason why you're seeing some strong reactions, because things, healthy credit came in healthy, right? That's what people are concerned about. And if rates are coming down and we are tilting more towards a soft landing scenario, that's very good for the banks.
Allison Williams, Bloomberg Intelligence Senior Global Banks Analyst, joining us here in the Bloomberg Business Week studio. Well, shares of Morgan Stanley having their best day in about 4 years. ADRs of ASML having their worst 2 days in more than 20 years. ADRs fell 16% yesterday. They're down another 7% today. This after CEO Christophe Fouquet said that he expects the chip market's long-awaited recovery will extend, quote, well into 2025, following disappointing third-quarter earnings that sparked a broad sell-off across the semiconductor industry. Ian King is Bloomberg News U.S. semiconductor and networking reporter. He joins us from our San Francisco bureau. Ian, ASML is Europe's most valuable tech company. Shares slid yesterday. We talked about that. You were on our program talking about that. We should note that now the company is in talks with the Dutch regulator about the company's erroneous publication of its financial results yesterday, a day earlier than scheduled. Today, did investors get any new details with what they heard from Fouquet?
Yeah, I mean, in a sense, they got sort of a confirmation of all of their worst fears. Was it going to be Samsung and Intel? Well, not only them. Was it going to be demand from China potentially falling off? Yes, that too. Was it going to be demand from makers of sort of less complicated chips who've been buying sort of some of ASML's cheaper machines? Yes, it was them too. You know, it was an overall picture that said, look, if you were hoping for a pickup sometime next year, maybe it's going to be extended a little bit further out.
And I am curious, I mean, when we talk about these chip makers, and this is a conversation I was having with Mandeep Singh a couple hours ago, but they're all so connected. People say chip maker and they talk about it as sort of a monolith, the entire industry, but talk us through the daisy chain of ASML, for example, to TSMC, to NVIDIA, because of course ASML came out with these results yesterday, and for sure they were bad, but they took down the entire sector.
Yeah, as they should. I mean, the chain is a very important one, and that's a very good question. If you are buying a machine or ordering a machine from ASML today, you are buying that machine in anticipation of what might happen next year or even the year after that. The machines themselves take months to make. TSMC, for example, as a customer then gets the machine, has to put it into a very complicated line in a factory which takes almost a year to make. Then it has to verify it. Then it gets the order from, say, NVIDIA, as you said, and that then will take a further 3 or 4 months before that chip is even made. So very, very long chain of events here, with ASML's orders being right at the front and that being this kind of very, very leading indicator for where we're heading.
Remind everyone of what these machines do, the lithography, and where ASML stands in terms of being the market leader, the type of investment that a company needs to make, how these things are delivered around the world. I mean, we're not talking about little machines here, Ian. These are huge.
No, we're not talking about a photocopier. We're talking about something that is absolutely enormous. We've got pictures in some of our stories of the size of these things, but you know, you need a ladder to climb on top of one of them. And it's almost ironic in a way, because what they are doing is burning in lines that are narrower than the wavelength of light, right, into these materials that are deposited on disks of silicon, and that creates a pattern which basically is then filled with metal, which then basically gives the chip its function. You know, it creates these absolutely microscopic transistors. Incredibly complex feat of science and engineering, and these machines cost hundreds of millions of dollars each, and you know, they're headed all around the world from the Netherlands, and where they are installed in factories.
So these machines, they're big, they're expensive. I've learned that over the past several minutes. And of course, you have companies such as Intel, such as Samsung, such as TSMC that buy these chip-making machines from ASML. And of course, TSMC reports tonight or early tomorrow morning. It reports sometime in the next 12 hours or so, I assume. But talk to us about the stakes heading into TSMC. Now that we, of course, have raised the temperature a little bit, raised the anxiety on demand here, what are we looking out for with these earnings?
Yeah, I mean, one of the good things coming out of ASML's early announcement for TSMC was AI demand is absolutely booming still. We don't have to worry about that. As we know, TSMC works for AMD, it works for NVIDIA, and it works for the whole industry making the most complicated chips, the so-called AI accelerators. So that part of its business, the high margin, very expensive part of its business, is likely to be quite strong. There's no signs that that will be weaker. Where it might be showing a little bit more signs of weakness are the sort of lower end stuff using its older factories, the kind of analog stuff, the some of the embedded processors, that kind of thing that say goes into auto or factory machinery. That might be an area of weakness.
But Ian, this is a cyclical market traditionally, right?
It is, but it's different, right? And I know that's a dangerous thing to say. In the past, it was everybody in, everybody out. Huge amount of inventory. We slow down production. Everything gets better again when demand comes back. Now we have multiple markets. It's not just the PC market. It's not just the phone market. We've got AI, we've got factory equipment, we've got automotive, and these markets are kind of going off and on at different points, and that's making things way more complicated. And if you're an investor, you got to be more prudent in terms of picking winners and losers in individual sectors, and it's not just this cavalry charge in and cavalry charge out where all you have to do is time the cycle.
And let's also talk about Intel. It's, of course, a very busy day for you on the chip beat here. So Bloomberg News scoop that Qualcomm is said to wait for the U.S. election to decide on that Intel move. Of course, we've been reporting that Qualcomm has been considering a bid for Intel. How badly does Intel need someone like a Qualcomm to come in? And would waiting until potentially after January be painful?
Yeah, I mean, first of all, we need to point out that neither company has spoke publicly about this, so it's very much based upon Bloomberg's reporting and our deal team's reporters reporting here. In terms of the logic, Intel is going to have to report earnings in another couple of weeks. Signs are that is going to be another weak report. So if you are looking to acquire Intel, or if you're looking to put pressure on the board or the management, then that potentially puts you in a stronger position if the share reacts negatively. Obviously, because of Intel's massive importance, its factories are absolutely essential. You want to wait and see who's in the White House. You want to wait and see who's the head of any of the regulatory organizations, if there is a change in administration. So logically speaking, if you are going to try and acquire Intel, maybe that makes sense to wait a little bit longer.
All right, Ian King, going to have to leave it there. He's Bloomberg News U.S. Semiconductor and Networking reporter joining us from our San Francisco bureau. Taking a look at what the markets are doing just about a little under 2 hours away from the close of trading on this Wednesday. The S&P 500 up by 0.4%. The NASDAQ higher by 0.2%, a little reversal from what we saw earlier, Katie.
Big time. When I was on air from 9 to 11 a.m., we were looking at losses, big reversal. We're at session highs, Tim.
Look
Sell
at
it.
that. For sale, session highs. Up next, it's the Ozempic election. The editor of Business Week stops by to explain what he means. This is Business Week.
9:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average trading above 43,000. We are on record watch. The S&P, NASDAQ 100 index all pushing higher. But I begin with the Russell 2000 index of small cap shares surging now by 1.7%. To put that in context, S&P up 25, up 0.4%. NASDAQ up 47, now a gain of 0.2%. The Dow up 325, up by about 0.8%. Again, the Dow Jones Industrial Average now trading at 43,066. 10-year 4.01%, with a 2-year 3.93%. Gold up $14 the ounce to $26.76, a gain of 0.5%. West Texas Intermediate crude oil lower a little change, down 0.1%, $70.54 a barrel. Novavax shares are trading lower by 19.7% after regulators placed a hold on the development of its experimental flu vaccines following what they describe as a severe adverse event that occurred in a single clinical trial participant. Again, Novavax plunging 19%. NovoCure shares are higher by 1.4% after the oncology company said the FDA approved Optune Luau to treat metastatic non-small cell lung cancer in adults who've progressed on or after a platinum-based regimen. Again, recapping, U.S. stocks higher across the board here. We got an afternoon rally underway. S&P right now up 0.5%, with the Dow above 43,000. Russell 2000 up 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Okay, Katie Greifeld, think back to recent history of presidential campaigns.
Okay, I'm doing
Barack
it.
Obama, 2008.
I remember him.
You think you were in high school
Yeah.
at this point.
I was.
He was pitching back then a complete overhaul of the U.S. health insurance system. Now we have Obamacare. 4 years later, Mitt Romney, he had the elaborate set of proposals for reigniting economic growth after the Great Recession. Hillary Clinton in 2016, she had the position papers on everything from raising the federal minimum wage to establishing paid family leave. This all from a recent column by Bloomberg Businessweek editor Brad Stone, who writes that this presidential cycle has been largely devoid of such ideological ambition. He argues that it seems like we've lost our appetite for big ideas. In many respects, it's been the Ozempic election. Brad, not just the editor of Bloomberg Businessweek, he's also the author of 4 books, including New York Times bestseller, Amazon Unbound, Jeff Bezos, and the Invention of a Global Empire. He joins us here in the Bloomberg Businessweek studio. Brad, what are we getting from the presidential campaigns this time around if we're not getting the big ideas?
Yeah, thanks, Tim. Look, I don't want to minimize it. I mean, Kamala Harris, the campaign's gotten off to a late start. We've gotten targeted proposals aimed at helping parents, renters, first-time home buyers. I don't want to minimize former President Donald Trump's proposals. Those tariffs would be a significant change to our economy. But when you look back at the kinds of sweeping economic proposals that Barack Obama was making, or Bill Clinton or the first George Bush, really big ideas, and you wonder why it's not happening this cycle. And I think there are 2 reasons. The first is tactical. I mean, it may not be as much of an ideological battle, but it is certainly a battle between parties, personalities, kinds of sides of the American divide, and both sides see the other's success as an existential threat and are determined to win. And winning right now involves cobbling together a coalition. It's why Trump is talking to all women today on Fox News, and the vice president's doing a town hall with Fox News. This is all about 7 states and swing voters. And then the second question is really, what can you get? Can you get anything sweeping done today in a bitterly divided Congress that is devoted to the politics of opposition?
Right. Recent history would suggest no to that last question. And you hedged yourself nicely. You said you don't want to minimize this. And my pushback would be something that you touch on in the piece. You have Donald Trump proposing 19th century style tariffs. Is that not a big idea?
No, I think in its way, it is a big idea. It's certainly dramatic. I mean, there are real open questions about how kind of serious he is about it and how much he can get done. But in terms of identifying the gaps in the American safety net, the the institutional challenges we have, the existential threats to the country, to the world, like climate change, like solving the ballooning deficit. Neither candidate has really addressed the kind of, sweeping problems that we have, in part because those problems often involve a big dose of reality and a heavy dose of bad news. And they're both trying to, as I said, cobble together a winning coalition and prevent the other side from taking power.
I wonder if this changes after the election, and if somehow whoever wins the election is given a dose of reality by maybe some sort of crisis or bond vigilantes.
Well, it's more than that.
Pushing back on their ideas.
I mean, I'm old enough to remember where winning presidents had a honeymoon period, where you could talk about the first 100 days, where even if you didn't have both branches of Congress, you came out of an electoral victory smelling like a winner, and the other party kind of fell into line and let you pass an element of your agenda. I don't think that's going to happen. I think the dose of reality is coming from, we go back to what Mitch McConnell said in 2008 when Barack Obama won, and he said, our mission is to make him a one-term president. And those are the politics that we have right now. And until we move beyond the politics of opposition, I think and this is the point of the piece, that our presidential candidates, our national leaders, are going to have to be a little limited in their ambition so that they don't end up over-promising and under-delivering.
Well, you also write that it's a vicious circle, and I was going to ask, do you think that it's realistic that we do get to that place where we do move beyond this cycle or whatever you want to call it, or do you think that it's actually built into the way that we elect presidents for this dynamic to unfold?
This is where, Katie, I'm trying not to come off as like the cynical old guy. I mean, I think we need to maybe flush some of the current politics out of our system. Maybe that's through decisive defeat of one side or the other. I think the parties have to come to a kind of reckoning about putting country before party. And I think it's going to require a superlative leader who can get beyond the politics of opposition and the feeling that the other side's success is an existential danger. And whether either one of those two candidates are that superlative leader who can grow beyond, our current situation, our current paralysis, I think it remains to be seen.
Help me be not cynical about this, because I'm thinking to myself, okay, I don't see this improving in a world where California has 2 senators and Wyoming has 2 senators. So essentially, the representation that somebody in Wyoming has in the Senate is essentially much greater than somebody in, your state of California, given the population differences, but the structure of the government, and the fact that it only matters in 7 states when it comes to the presidential election. It's pretty tough out there.
It is, and I think also a major problem is that some of our institutions that used to unify this country, local media, local parties, where parties, by county, by state, would differ from the national party. Those intermediating institutions are also on the decline, and trust in them has never been as low. So, I agree with you. It's hard to find reasons for optimism. With the current state of affairs. The kind of institutional change that I am talking about a little bit in the piece, getting rid of the filibuster, getting rid of the electoral college, frankly, it's very difficult to see how we achieve those. Those are such...
I could see one group wanting to get rid of the electoral college and one group not.
They seem a little third rail right now in our current politics.
Well, talk to us. We were talking about Congress earlier and how it's hard to get anything done. We did get certain things done. You think about the Inflation Reduction Act, for example. I speak to a lot of executives, and a lot of them have cited to me that has been a big help for them. And then, we could get into the CHIPS Act, but with what's going on with Intel, that's a different conversation. But in any case, talk to us about how that can still happen, even with this gridlock that we have.
Exactly, and the president has used the budget reconciliation process, and there are some strict rules on what you can get done through that process, and then with a simple majority. And recently the vice president has cast the deciding vote, but they do have to be budget-related items. And so, when you talk about things like raising the minimum wage, it's almost ridiculous that in decades it hasn't been accomplished. Or, universal child care or parental leave, the things where this country now badly lags most of the developing world. You can't get it done because it would require a filibuster-proof majority in the Senate. So there is this tiny little loophole to kind of get things done, and the Biden administration, and executive orders are another way. And obviously, when Donald Trump was in office, he took full advantage of that, as has President Biden. But, those are like the mechanisms that are left at the disposal of the current and soon the new president. And, those are weak institutional levers.
One thing I wanted to get your thoughts on is the way that the candidates are leaning into media in these last 2.5, close to 3 weeks. Yesterday, Donald Trump sat down with John Micklethwait, editor-in-chief at Bloomberg News at the Economic Club of Chicago. Here's what he had to say about the Federal Reserve.
I think it's the greatest job in government. You show up to the office once a month and you say, let's see, flip a coin. And everybody talks about you like you're a god. Oh, what will he do? I think that if you're a very good president with good sense, you should be able to at least talk to him. I don't say make the decision at all.
There you have Donald Trump yesterday with John Micklethwait, the editor-in-chief of Bloomberg News, out there at the Economic Club of Chicago. Brad, I want to get your thoughts on this because we heard a lot from Donald Trump yesterday. You sat down with him over the summer for a Bloomberg Business Week cover story. Who was the Donald Trump that you saw yesterday in that interview?
Well, first of all, it sounds like Donald Trump wants to be the Fed chief. Everybody treats him so well. Look, we spoke to Donald Trump 3 long months ago, before 2 assassination attempts, when he was still running against President Biden. He was feeling pretty good. He was more disciplined than he usually is back then. He was, in a lot of ways, introducing his economic plan. Some parts of that plan remain unchanged. He does differ on the details, the extent of his corporate tax cut, the extent of tariffs on China and the rest of the world. A lot of the elements remain the same. What's different now is, in his own unique way, he's trying to expand his coalition. He's there in Chicago. He was in Detroit speaking to the Economic Club there. Trying to expand his support in the Midwest, which he sees as crucial to his victory. But, certain things he can't change, right? He actually was very civil to us back in July. He really did, in a very strange way, lash out at his interviewer, our boss, yesterday. I think, again, like destabilizing or diminishing those intermediating institutions, diminishing people's trust in them as a way to raise himself up.
Brad, we're going to have to leave it there. Brad Stone, the editor of Bloomberg Business Week. If you never want to miss a Bloomberg Business Week story, become a subscriber today. You'll unlock deep reporting and analysis from reporters around the world, including unlimited access to Business Week. Check out our offers right now on Bloomberg.com/subscribe now. Coming up next, we go from New York City to Mexico City for an update from City Lab, Mexico City. That's next on Business Week.
2:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we got the great rotation underway on this Wednesday here with the Dow, the S&P, NASDAQ all advancing. Big rally for the U.S. stock market. The Dow up 327, above 43,000, 43,066, a gain of 0.8%. Put that all in context. Your S&P 500 index trading at a record 58.41, up 26, a gain of 0.5%. And NASDAQ now up 49, up by about 0.3%. NASDAQ 100 index, which has spent much of the day trading lower, up by 0.1%. But the standout, the Russell 2000 index of small cap shares, up now by 1.6%. The 10-year 4.01%, with a 2-year that's yielding 3.93%. Gold up $12.50 the ounce to $26.75. That is a gain of 0.5%. While West Texas Intermediate crude oil down 0.2%, $70.42 a barrel. Bottom line here, traders keep driving a rotation out of the mega caps that have powered the bull market into other corners of Wall Street. GM is committing $625 million toward what is likely to be one of the biggest U.S. lithium mines, reinforcing the automaker's efforts to secure domestic supply of the battery metal that is critical for electric vehicles. Lithium Americas Corp up 24%. GM now higher by 2.4%. Recapping, S&P up 0.5%. The Russell 2000 up 1.6%. The 10-year 4.01%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Really do appreciate it. We're Bloomberg Business Week. We're one part of the Bloomberg community. Katie Greifeld in for Carol Masser on this Wednesday afternoon. I'm Tim Stenevec. Another part of the Bloomberg community, Bloomberg City Lab. It reports on and keeps tabs on the world's cities, and part of that, continuing today, is the 11th Bloomberg City Lab organized by Bloomberg Philanthropies. What it does is it brings together more than 500 mayors and leading policymakers, innovators, and creatives in Mexico City. We've got officials from all over the world: Uruguay, Arizona, Canada, Michigan, Albania, Argentina, Finland, Slovakia, South Korea, Ghana, Ukraine. You get it. It spans the entire globe. Back with us is Juan Pablo Spineto, Bloomberg Opinion Latin America columnist. He joins us from Bloomberg City Lab Summit in Mexico City. JP, we checked in with you yesterday as this was underway. It's wrapping up today. High level, give us the dominant theme that was discussed and understood and shared at this year's conference.
Well, you know that this summit gathers all these mayors because they face common problems. So the idea is to find common solutions. And we are talking about problems like transportation, the housing crisis, security, education, all these problems that the local governments have to face. If we have to think about one theme, I think it's this idea that they can help each other, that the solutions that you can implement in a city can be replicated by other cities. It's not about creating something completely new. It's about adopting what works, right? And I think that's the spirit of this summit that we are seeing yesterday and today here in Mexico City, and the idea that the mayors are taking away.
Yeah, and of course, we've had a number of great guests join Bloomberg Television and Bloomberg Radio throughout the event. I'm curious, JP, I mean, who else are you excited to hear from?
So I heard about many exciting ideas, projects, and people. I think one of the things that I was more impressed was Mexican architect Fernanda Canales. I spoke to her yesterday. She did 7 public facilities on the border between Sonora and Arizona, and some of the facilities that she built are at the wall. So, and the idea behind this was to reclaim that space that for Mexico has a strong symbolism. Is the division between Mexico and the U.S. with this massive wall, and have a space there where the local population can go to libraries, gather, and have a coffee.
JP, politics. We asked you about it yesterday. I'm wondering how it continued at the conference today, less than 3 weeks out from the U.S. election. To what extent did that come up in discussions today?
Yeah, I think it's in the mind of everybody because, especially in Mexico, what happens on November 5th is going to impact the country, right? We have this strong economic relationship between Mexico and the U.S. Mexico is the largest supplier of everything from cars to televisions to the U.S. So what's the policy that the next government is going to implement, especially in trade terms? That's very, very important for the Mexican authorities. It has been part of the conversation, even if not officially. Everybody wants to know exactly what's going to happen, but we will have to wait a couple of weeks.
JP, we're going to have to leave it there. I want you to be able to get back to the 11th Bloomberg City Lab. It's the preeminent Global City Summit organized by Bloomberg Philanthropies in partnership with the Aspen Institute, taking place right now in Mexico City. That's JP Spinetto, Bloomberg Opinion Latin America columnist, joining us from the City Lab Summit out there in Mexico City. Katie Greifeld and Tim Stanovic live from the Bloomberg Business Week studio on this Wednesday afternoon. Katie, you reminded me a little earlier.
Yes.
Today, all about the airlines.
It's all about the airlines. I mean, you take a look at the S&P 500. To be fair, you do have a lot of names that are higher right now, but right at the top, at least when we're talking about a percentage gain, United Airlines up 13.7% right now, followed by Delta, which is up 6.7%. Of course, United. So this is interesting. So they reported yesterday after the bell, but it seems like their call was at 10:30 this morning, which is a little bit unusual. And you heard from the chief commercial officer telling reporters that there's an incredible amount of unprofitable capacity in the U.S. marketplace, and we've seen that exiting at a rapid pace starting in mid-August that continues into next year. Investors heard that and they started buying the stock.
They did. I also wonder, though, to what extent this is about a buyback of shares as well. United announcing that $1.5 billion worth of stock. They announced that yesterday as those numbers came out. $500 million, up to $500 million this year. Investors always love a little stock buyback.
I don't think that would cause Delta to rise, though.
True.
You know?
Of course.
But yeah, the carry-through throughout the industry is interesting, especially when you remember Delta reported last week, and it wasn't good, Tim.
No. But what is United doing that Delta's not doing?
It's a good question, but the fact that United has this optimism that their profits and airline profits in general are set to improve, it seems like, traders are taking that and extrapolating it out to the other airlines and saying, if United's having a good time and sees a good outlook, maybe it's not so bad for Delta.
Okay, well, United is doing different stuff because they said the third quarter operating margin is of 10.5%. According to Connor Cunningham over at Melius Research, that is expected to be the highest of the four largest U.S. airlines. You mentioned Delta reporting last week. Adjusted operating margin for Delta was 9.4%. American and Southwest are set to report results next couple of weeks, October 24th, excuse me.
Yeah, that'll be fascinating. And it'll be interesting to see, again, if that carries throughout the entire airline industry. Pretty interesting, again, to see United just moving the rest of the sector to this way. And interesting, again, to see United stealing the show on Big Banks Day. I mean, Morgan Stanley's up 6%, which is also amazing, but United having a fantastic day.
A fresh record. I did talk about this yesterday with Carol. We've been doing quite a bit of travel lately.
I know. I'm very aware.
Because you come in the studio when we're traveling.
In, yeah.
So you're well aware. Every flight we've been on has been totally packed. Regardless.
And you guys are in
going.
First class.
I wouldn't say first class.
You're flying in style.
I wouldn't say first class, but there's a lot of people traveling for business. The cabins are full. Sometimes the planes feel a little old.
Really?
Yeah.
Do they?
Oh yeah, no question.
Well, I don't know if they're making new planes right now.
That's a big part of it, right?
Boeing is in dire straits.
But even that, a lot of these airlines are trying to figure out what to do with these older interiors. So the plane's still great for many, many years. What they have to figure out how to do is upgrade those interiors to stay ahead of the pack. You have, especially at the premium end, which is where a lot of these companies make a lot of their money.
Yeah.
There's a big fight between like American, United, and Delta with that premium product.
Yeah, definitely. Because also you think about the price of an airline ticket, it's expensive.
Yeah.
And you don't feel like you're getting a lot when you're on in one of those older planes that definitely feels dated. It doesn't quite feel like it's justifying the cost of the ticket. For sure, you're getting to where you need to go.
Elbows hitting you.
Yeah,
running out of space in the overhead bins.
We're all breathing on each other.
It's true.
Jeez.
You're making it sound so appealing.
Anyway, United up 13.5%, leading the market right now. The S&P 500 up about 0.5%. Earlier, of course, there's been so much intraday volatility, but at least for right now, we are recovering from yesterday's wipeout.
All right. right. Well, coming up next on Bloomberg Business Week, Katie, have you done your holiday shopping
No,
yet?
no.
It's not even Halloween. I don't know why I'm even asking you that. We are going to talk about what the holiday season looks like from the retail real estate perspective. That's next on Business Week.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That's Katie Greifeld in for Carol Masser on this Wednesday afternoon. I asked her before we went to break if she'd started her holiday shopping season. She said the answer is no. Katie, it's not too early.
You know what you do, Tim,
What?
is actually you buy a gift on Amazon like the
Okay.
day before you see your family. Then you print out what you bought them on Amazon, and then you give them the piece of paper. It's sort of like an IOU.
It's the thought that counts, and that's a
Yeah.
nice thought.
Yeah,
they say.
absolutely.
Hey, the management consulting firm PwC, a couple weeks ago, they crunched the numbers. They found that even though holiday spending is projected to surge to a record high, the increase this year is less than the increase over the previous 2 years. So, yes, it's still growing, but not growing as much as it did in recent years, according to forecasts from PwC. Let's see what Tom McGee has to say about all this. He's president and CEO of ICSC. It's formerly known as the International Council of Shopping Centers. It's the trade association. They represent from New York. Tom, good to have you with us. You are in a really interesting position because you represent the folks who have the real estate when it comes to these bricks and mortar retailers. What are you finding in the sense of how are they thinking about the upcoming holiday shopping season?
Well, first of all, good afternoon. It's good to be with you again. I think we're looking at a solid holiday season. You know, our expectation is 3 to 3.5% growth. I caught your observation around PwC's prediction. You know, ours last year we predicted 3.5% to 4%. It ended up slightly below 4%. So we're a little less than last year, but still very solid. The consumer continues to be resilient. Certainly concerned around inflation. But 70% feel their financial situation is better this year than last year at this time.
That's interesting.
So, you know, we 241 million people expect to shop this year, 6 million more than last year. But clearly, still concerns around inflation, still concerns around the economy, but the employment market is strong, and the consumer continues to be resilient. And so we expect this to be a solid holiday season.
And let's talk about how people are spending their money and how they're shopping. You have some really interesting stats, and turns out I think I'm in the minority here because you found that 92% of shoppers will actually spend time in a physical store. Just 8% will buy only online. Tom, I had to admit, I found that surprising.
I think most, you know, the name of the game in retail today is omni-channel. I mean, we've coined this year the year of the store. And the reason we called it the year of the store is not because people are only shopping in stores. We recognize people are shopping online and increasingly shopping online. But the store has become kind of the central point, the focal point for the consumer experience. So even though people will shop online, a lot of those orders will be fulfilled out of store. The store has become kind of a mini fulfillment center, in addition to being a product of the traditional shopping experience. So really it's about both. People will shop in both channels. There are clearly some folks that only shop online, but I bet you, Katie, you'll find yourself in a store at least one time over the course of this holiday season. So that gets you the 92%.
That's the perfect segue, because I know this is not all about Katie, but I do want to ask specifically about her. How do you get Katie Greifeld not to spend those dollars online at a place like Amazon and instead think about this ahead of time and push her into a retail store to get this shopping done? I mean, in a sense, it is better for last-minute shoppers like herself, right?
Certainly a store, obviously for last-minute fulfillment, is going to be the most effective. And retailers really do want people like Katie and all consumers to shop in both channels. Quite frankly, I mean, most retailers are somewhat agnostic in regards to where you initiate that transaction. They would prefer for that transaction to be fulfilled out of a store, and fulfillment can be accomplished in multiple ways. They can ship it out of the store, and increasingly many retailers are fulfilling orders out of the store, shipping from the store. And that's why those retailers that have a lot of scale and have a large store footprint do tend to do well online. But they also like consumers to come and pick it up in the store on curbside pickup, click and collect, et cetera, because that saves the shipping costs, and it also gives them another opportunity to engage with you. The name of the game in retail really is to be effective in both channels. There are some retailers, Amazon being one, that isn't strictly online, but is predominantly online. There are some retailers that are not strictly physical, but are predominantly physical. But most retailers are trying to be effective in both channels. And that's really, really important, because people have just come to expect that. They've come to expect a consistent experience. And you know, one of the untold stories in physical retail right now across all sectors, but particularly in open air retail, is that there's really a lack of supply to meet the demand. Many, many retailers, including many large national retailers, including the Walmarts of the world, have announced that they want to open up more stores, and there's not enough supply to meet that demand right now. So the competition for suburban open air retail in particular is exceptionally strong, and the competition for that supply is very fierce right now.
Tom, gonna have to leave it there. Always love it when you join us. Thanks so much for swinging by Bloomberg Business Week. Join us once again before the end of the holiday shopping season. That's Tom McGee, President and CEO of ICSC. They represent the real estate when it comes to those retail folks. Coming up next on Bloomberg Business Week on TV, it's The Close. If you're sticking with us on radio, we got a great program coming up. A lot focus on the election in the first hour. This is Business Week.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week on this Wednesday, October 16th, 2024. That's Katie Greifeld in for Carol Masser.
Indeed.
You know her from Bloomberg TV, from Bloomberg News.
Theoretically.
What's going on in your world these days?
You know, it's busy. There's, 20 days until the election, and it feels like that is dominating every conversation, even in the markets, even though we are in the heart of earnings season, or getting there, of course. We're through the big banks. We're onto the airlines. There's a lot going on.
Yeah, on that, Zoe Tillman is going to be joining us a little later in our program. There's more than 165 lawsuits that are shaping the 2024 U.S. presidential election. Also AI.
Yeah.
A huge theme. I could have said that 6 months ago. I could have said that a year ago.
Yeah, and maybe you'll say that 6 months from now and
Probably
a year
will.
from now. Or a robot will, who knows.
AI reporter Rachel Metz is going to be joining us. Robot.
Yeah. We're also going to be talking to Nancy Tengler of Laffer Tengler Investments. She is one of my favorite investors to speak to. She is all about those high conviction ideas, those concentrated portfolios. And, she really has skin in the game.
Sometimes she joins us here in New York. I think it's a little cold, though.
Yeah.
These days, she kind of tends to stick
Where's she
to
from?
Arizona.
Is she from Arizona? Yeah, Arizona.
She's hanging out in Arizona in the winter.
As she should. Good for her.
Hey, we got all that coming up over the next 2 hours and more. First up, though, a check on the day's trade and top business stories. For that, we go to Charlie Pellet.
All right, and once again, good afternoon to you both. With the Dow, the S&P, NASDAQ, all pushing higher. The S&P very close to session highs. We got 59 minutes to go until that closing bell clangs on Wall Street, with the S&P right now up 25, 58.40. Could see a record there, up 0.4%. We've got the Dow above 43,066 now, up just about higher by 325 points, up by about 0.8%, and the 10-year 4.01%, the 2-year 3.93%. Spot gold is advancing $11 the ounce, up 0.4%, 26.73. West Texas Intermediate crude down 0.3%, 70.38 a barrel. So the Dow, the S&P, NASDAQ all higher as traders keep driving a rotation out of the mega caps that have powered the bull market into other corners of Wall Street. Our Abigail Doolittle will have a whole lot more on the markets coming up for you in just a moment. Well, next up for Wall Street is retail sales data along with jobless claims. But how is the consumer holding up? Julia Coronado is the president and founder of Macro Policy Perspectives.
We've had a string of very solid retail sales reports. There's no signs that we're of some sort of imminent collapse. I think expectations for the holiday season are that it'll be fine, not a blowout, not a disaster. So I think the economy is kind of in a good, solid zone.
Julia Coronado of Macro Policy Perspectives. After earnings, Morgan Stanley shares holding on to a gain of 6.2%. And then later on today, after the close of trading, we will be hearing from Taiwan Semiconductor, TSM, up now by about 0.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Really do appreciate that. Hey, taking a look, we just heard the numbers from Charlie. Worth repeating, though, as we get less than an hour into the close. Not at our best levels of the day, just off them for the S&P 500, up 0.4%.
Not
Katie,
bad.
Not bad, especially considering where it started the day.
Oh my gosh.
If you're long this market.
Yeah. If
I
you're
know some folks who are short.
Yeah.
Not great for them.
I mean, yeah. But in any case, it has been an interesting day, and it just feels like the days, the open to close has been getting more volatile. I open the market every morning on open interest on Bloomberg TV, and I'm standing there at 9:30, and there's just not much to talk about. It's been unchanged often, and then by the end of the day, it's just totally different. And again, what we're talking about at 9:30, at 10:30, it's often we've seen a complete reversal.
You know, somebody who knows a lot about that is Abigail Doolittle. She's markets correspondent.
I keep catching her eye, and I just can't wait to talk to her.
She's here in our Bloomberg Interactive Brokers studio. Katie has a good point, because you send out some notes to our producer in the morning, and a lot of what you send is obviously still relevant, but it's true that the trade during the day changes significantly. Yes, United Airlines is still something we're talking about. Morgan Stanley, ASML, big stories there. I want to get to some of those stocks in a second, But I want to start with the macro with you and sort of what you're focusing on.
So it's interesting. I've actually missed this intraday volatility. Now that you're saying it a little bit, absolutely. I think the reason that I have not honed in on it quite so much, it's smaller moves, but now that you're talking about it, and I agree, we have seen this, when you have intraday volatility like that, it usually then moves into closing day volatility. So we're probably going to be looking at a stretch. I'm just going to pull up on the S&P 500 in the Bloomberg terminal using the HCP function to see what most of the closes recently have looked like. Yeah, so they're all less than 1%. The last time we had a 1% move was back in September 19th. Before that, there was a couple in the middle of September. These little gyrations, that you're talking about, Katie, it will probably at some point turn into more closing moves of 1%, whether it's to the upside or to the downside. We don't know that right now. And it's interesting because today's volatility and as I'm thinking about the open also, so the S&P 500, it was like up just slightly then, right? It was up fractionally, yeah.
And listen,
I think it even flipped. Yeah, because actually when I would, yes, so.
The bells are ringing. I'm trying to sell it. I'm trying to inject some volatility, and the market has just
like,
not been working
nothing
with
happening.
Me. Yeah.
What's interesting is it's happening on no volume. So yesterday, volume was 20% below the average. Earlier today, on that open you're talking about using the AVAT function in the Bloomberg terminal, it was 40% below the 20-day average. At 10 o'clock, it was about 10%. Right now, it's about closer to 4% below. So investors are a little bit jittery. They don't quite know what to make of this earnings season yet. Obviously, the banks have been good, but we have big tech ahead. But we have this election. We have this election. It's about 3 weeks away, and I think that folks are uncertain in terms of who is going to win and what that candidate's policies will mean.
And I've kind of been working on this phrase. No one has really, played along with me yet. But I was listening to a podcast over the weekend.
There's time.
It's not that good, but it's pretty good. So
throw it out there. We'll see.
The original idea came from Kathy Jones at Charles Schwab. She has a podcast with Liz Ann Saunders. It's really good.
That must be a good one.
It's called On Investing, and I believe it was Kathy who said that the Fed is in risk management mode. But to your point, if you apply that to the markets, it feels like the markets are sort of in risk management mode because, okay, we have all of this uncertainty. Who knows the Fed's cutting trajectory? Who knows who's going to win the election? But we're up 20-something% year to date, I'm sure.
And it's October.
I'm sure a lot of people are happy to just let's ride it out through the end of the year.
I think that you make a great point there, and I'm looking at the chart of the S&P 500 right now, and it's coming off of a recent high. Now, could it climb higher from here? Yes, but it does actually look like it's probably going to consolidate down a little bit. So, yeah, the market does have a fair amount to worry about, but just to take some chips off the table, like you're saying. So I think we are seeing a little bit of that today. And just looking at the technicals, as you guys know, I love charts. It does look as though there could be just a little bit of near-term consolidation, which is always helpful because it makes those steps, like rather than wanting to try to climb a cliff wall, you go up the steps and you stay up a lot longer. So, coming back down creates those steps in the overall uptrend.
Very briefly, Abigail, let's talk about some of these individual movers.
Yeah,
we talked
there's a lot of
about
them.
The airlines earlier. United Airlines surging today on those third quarter results, and then ASML down for another day. Starting with United and airlines in general, having a pretty good day post United results yesterday.
Yeah, they are. The thing about United Airlines that's puzzling to me, it's the same thing that was puzzling to me about Delta. So obviously a great day. I think it's I believe it's a record high. Let me actually just pull up that SIMS function quickly before I get too far over my skis.
Which is internal to Bloomberg.
Yeah, yes, I keep mentioning that. And
if you're interested in that,
you cannot use it.
Get a job at Bloomberg.
Or buy a Bloomberg terminal.
Ah, yeah.
But doesn't it mean
you're a natural salesperson, Katie?
No. Like if you have a terminal, I'm pretty sure you can
then
use
you
it.
would. Yeah, I think actually I don't.
Actually, no,
I don't
you're right.
know,
I got mixed up.
This is why we're not in the.
Good thing we're not on TV anymore, Abigail.
But United Airlines very close to it is right where it was before the pandemic, essentially February 24th, 2020. So that's a lot of lost ground that's been made up. But what fascinates me about United Airlines and Delta is talking about going back to the election that they think there could be a dent In travel, on an international basis, maybe I could understand it. Folks want to be around to vote, but domestically, do either of you have a theory?
I'm so glad you mentioned that too, because I brought this up with analysts too. I mean, doesn't it feel like a stretch that demand would be softer because of, am I not going to go to Cabo because I'm uncertain about the election?
I feel like it's one of those management excuses, but it doesn't even make sense that they're using it. It just doesn't make sense to me.
But we all nod along.
But it's not.
Well, we're calling it out a little.
It's not the type of purchase that somebody would hold back on based on the election. I can understand. Okay,
like if I were Qualcomm,
maybe we'll see what happens to rates if Trump gets
Qualcomm, it kind of makes sense. Am I going to shell out however many $1 billion?
Yeah, that's a good point. Okay, I like it. Abigail Doolittle, thanks so much for joining us, markets correspondent here at Bloomberg. So that's a view of the financial markets, some individual stocks. For a view of the betting markets in the industry, we bring in Chris Palmieri, Bloomberg News entertainment reporter, joining us from our LA bureau. Chris, no question that online casino gambling has become a big business, just in the handful of states that allow it. But you write that growth spurt may be over. What's going on here?
Well, all right, first let's define what we're talking about. Online gambling, we're talking about casino games, so blackjack, roulette, slot machines. They were actually the first to kind of be allowed in this new wave of online gaming that started. And it's over a decade now. States like New Jersey pioneered it. And it really hasn't grown as dramatically in terms of states adopting it. It's only 7 compared to sports betting, which went really just from Nevada in 2018 to 38 states now. So a really dramatic growth in sports betting. And that's because it's just easier for politicians, I think, to get used to the idea of sports betting. They were maybe doing informal football pools in the offices or fantasy sports. And that's come with less sort of baggage than the online casino games, which is actually a much more lucrative business for the people who do it.
And that's surprising, too. I mean, talk to us about why it is so lucrative compared to sports betting, for example, which it feels like a broader population, as you point out, is familiar with.
Well, online casino can be played anytime, any day. It's not tied to any sporting event or season, and it's just the odds are sort of baked in. For, they say the house always wins. If you own a casino, you are guaranteed over the long term to earn a certain profit margin. That's not necessarily true in sports betting, where if you're running a sports book, you can figure the odds that you think will work out, but the game can deliver a totally different outcome. So it's just betting is around the average sports bettor is betting about $100 a month. It's several hundred for the casino player. So in the states that allow it, for example, New Jersey, it's as big as the land-based casinos. It's a huge business and growing faster.
Katie, he said New Jersey.
I know.
I expected you to jump in and start screaming.
New Jersey is an interesting one because, I mean, Atlantic City is like such a huge thing.
Okay, well, you raise a really good point. Why, Chris, are we now starting to see some pushback when it comes to legalizing this stuff? You write about the, quote, social costs here, or concerns about the social costs.
Yeah, those arguments were always there, and it's part of the big push now is that a lot of the casinos are now seeing the impact on their land-based business, and they're getting the unions too to share their concern, and so they're thwarting it in states like Maryland and New York that tried to get it passed this year. And it's a mixed bag. Some of the big casino operators like MGM and Caesars have their own online operations, so of course they're for it. But other operators don't, and they're the ones who tend to be opposed.
And so, I mean, are other states pushing for this? It seems like, again, we're in a little bit of a lull right now, but I mean, is there anyone really actively lobbying, like, let's get this approved in more states?
Well, oddly enough, the main trade association for casinos has both traditional casinos and online operators, so they don't take any stance on this, except to note that there is concern about cannibalization of the land-based casinos. States will continue to try. We quoted an analyst who said he thought only 2 new states, New Hampshire and Florida, would allow it in the next 5 years, which is, again, that would take it to 9 versus 38 with sports betting.
So what about other types of social costs? The idea of this stuff being too accessible for people, too easy for them to part with their money, concerns about kids doing this from the comfort of their smartphones, those sorts of things.
Right.
They can just
well,
trade
the industry
stocks.
will say, we're doing our best to stop that. There's, guidelines you can use to figure out who the player is and software and that. But it is an issue. There's been some research that even suggests that in states that allow it, that consumers are, becoming tapped from a credit standpoint. We're seeing anecdotal evidence, lawsuits and that, people claiming that, they got addicted. That's always an issue whenever you introduce any kind of gambling, but now there's just more evidence of it.
So I have a story, and I swear that it's relevant to the conversation. But during the pandemic,
I'll be the judge of that.
Yeah, during the pandemic, I got briefly into online casino gambling sorts of things because I'm very online. I don't know if you know that about me. I spend a lot of time on Twitter, and on FinTwit, there was this group of people that said, "Okay, let's all play poker together online," and it was fun. I did it a few times. We all hopped in a Zoom room too, me and these Twitter friends that I had, and I'm just wondering. I mean, is there any reporting that you have that shows whether or not the pandemic had an impact here? I mean, did that introduce more people to these online casino games?
Without a doubt, yeah. A lot of people picked it up during the pandemic. A lot of kind of video gaming of all points. And Katie, you might be interested to know that women are much more likely to be the casino online player than men. The way opposite in sports betting, where I think women are only about 13% of the sports bettors online. Yeah.
But Chris, Katie, I want to home in on something that Katie said, because she was actually playing with other people, not necessarily playing with bots or sort of playing against the house. Does the quote-unquote house still benefit the way that it would if she weren't playing against real people?
Poker has different economics than like an online slot machine, so it depends on what game you're playing.
Right.
Yeah.
Okay, that makes sense. Hey, you brought an important distinction between what we were talking about when it comes to online casino gambling versus sports betting. That's also an industry that you cover closely. It's worth bringing up, though, the pushback that we've seen to sports betting just in the last 45 seconds that we have, because that is so accessible. What has your reporting found?
It's going to continue to be an issue. I saw at a conference last week with regulators, from casino regulators, saying, all of the problems, whether it's, athletes potentially, throwing games, to problem gambling, the types of bets, the complaints they're getting about the just blizzard of advertising people see. It's an ongoing issue for the industry.
All right, gonna have to leave it there. Chris Palmieri, always great to see you. Thanks so much for joining us from our LA bureau. Chris's story available at Bloomberg.com and on the Bloomberg terminal. Chris Palmieri, Bloomberg News entertainment reporter, joining us from sunny Los Angeles.
So interesting. I don't take
So you stopped playing?
Yeah, I mean, life opened back up.
It did, but did you start playing real cards?
No. Turns out I'm not good at it. So if I was great at it, if I was cleaning up, maybe I would have continued that. But, I have a lot of time-intensive hobbies. So
I had a friend after college who got good at playing cards in college and became a professional online
I've
poker
known a
player.
few people like that, like some of my brother's friends, and that's
He
how
had
they
to move
supported
outside of the
themselves.
U.S. at one point because of a rule change.
Because he was cheating?
No, he wasn't cheating, just the regulations about where this was legal and where it wasn't legal. This was, a generation ago, but
Where is he now?
he's outside of the U.S., that's all I'll say. He's a very private person, Katie. Don't want to blow up his spot. You're listening and watching Bloomberg Business with Katie Greifeld, Tim Stenovec. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ very much in the green. But let's begin with the Russell 2000 index of small cap shares, because right now it is ripping higher by 1.6%. To put that in context, we got the S&P up 0.5%, 58.42. Could see a record on the S&P. We've got the Dow up 321 now, up by about 0.7%, while NASDAQ is up by 0.3%. 10-year, 4.01%. The 2-year, 3.93%. Gold up $10 the ounce, up 0.4%, 26.73 on spot gold, while West Texas Intermediate crude is down 0.3%, 70.38 for a barrel of WTI. Under 3 weeks to go before the November election, and investors and traders are wondering what it'll mean for markets. Megan Horniman is Chief Investment Officer at Verdence Capital Advisors, and she was a guest this morning on Bloomberg Open Interest.
After the election, I think it's going to be a much more volatile path to the end of the year. There's a lot of uncertainty, not only from the election side, but then also the Federal Reserve as well. What can they do at that November and December meeting?
And that is Megan Horniman of Verdence Capital Advisors. Sources tell Bloomberg McKinsey is nearing a deal with prosecutors to pay at least $500 million to settle federal probes into its past work helping opioid makers boost sales. Recapping, stocks are higher, S&P up just about 0.4%. Again, for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. It is Bloomberg Business Week. Katie Greifeld in for Carol Master. I'm Tim Stanovic. Never miss a Bloomberg Business Week story by becoming a subscriber today. You'll unlock deep reporting and analysis from reporters around the world, including unlimited access to Business Week. Check out our offers right now at Bloomberg.com/subscribe now. Well, it is today's big take. It's also one of the most read stories on the Bloomberg terminal about how courts have started shaping the U.S. presidential race long before the election on November 5th. But an extraordinary onslaught of cases filed over the past 2 years has questioned the fundamental principles of who can vote, how ballots are cast, which votes count, and how the winner is decided. Zoe Tillman is Bloomberg News senior reporter. She's part of the team that put together this big take. She joins us from Washington, D.C. Everybody check out this story online because it's super interactive. It's a great example of what the team is doing online right now with the interactive stuff. Really cool and interesting piece, Zoe. Thanks for joining us. When we're talking about these lawsuits, what exactly are they trying to do? And who is filing them, Democrats or Republicans?
Well, I think to answer that question, it's helpful to think back to 4 years ago when the pandemic upended how the election was going to happen, and courts were brought in to resolve a lot of last-minute issues over how people were going to vote during the pandemic. And then after the election, when Donald Trump and his allies again went to court in dozens of cases to try and overturn the results, that really changed for a lot of people, I think, the understanding of the role courts could play in shaping not only the outcome, but also just how elections function. And what we're seeing this year is perhaps something of a new normal, which is, 2 years out, even, more than that, advocacy groups, the national political parties going into court to say, we see problems in X area or Y area of how states are running elections, and we want rulings resolving that well in advance of November. So we're seeing, more from Republicans and conservatives, efforts to challenge or limit who's eligible to vote, more cases seeking to defend state restrictions on things like absentee voting, another carryover from 2020, and then from Democrats and left-leaning groups going into states, usually Republican-led states, to challenge what they contend are efforts to put up illegal barriers to voting. So 2020 really seemed to kick things off, and the momentum hasn't really quieted down 4 years later.
And it's interesting, again, you've identified these cases, and every once in a while, one case or one decision tends to work its way into sort of the public consciousness. But broadly speaking, it feels like the American public isn't necessarily following this all that closely. And as you write, we're 3 weeks out from Election Day, and judges are still handing down decisions here.
That's right. I mean, yesterday alone was a big day in court. We had a judge in Georgia in the morning handing down a decision declaring that local officials have a mandatory duty to certify results, a big issue in 2020 when there were efforts to try and see if local officials in swing states could overturn Donald Trump's losses in those states. And then in the evening, same judge in Georgia blocking a last-minute rule change by Georgia State Election Board to require a hand count of ballots. So we are still waiting on decisions on things like other last-minute rule changes in Georgia. There are still lingering fights over mail ballot defects in Pennsylvania. Just today, we had a ruling out of Alabama blocking a last-minute purge from voter rolls. It keeps coming, and it really won't stop.
Zoe, you raise an important point in your piece that in the United States, elections aren't supposed to be determined by judges. Talk a little bit about what this does to that process, but also the perception that the election might not be free and fair, given these lawsuits.
Right. I mean, you talk to judges, and they are not usually comfortable, with this role of making decisions about who wins or loses the White House. It's not a role that they want to play in this process. And they are also mindful that something that they do last minute can not only upend the months or years of preparation that election officials go through to plan for something like a presidential election, but it can cause chaos. Voters can see a headline one day about how they can vote in their state, and then an appeals court changes that rule a week later, which is something we actually saw happen in North Carolina. So, there's the risk of upending preparations, voter confusion, and, lawsuits are inherently adversarial. Someone is coming in and saying, I think there's a problem and I want a judge to fix it. And if those cases take months or years to resolve, what you've done is planted the seed of doubt about our election system, and there may not be a resolution to that. And I think that's also been a concern from advocacy groups that deal in the voting rights space, that the onslaught of cases are raising a lot of questions that may not bear out in the end, but you've contributed that to the environment before Election Day in a way that won't wrap up in time.
And this is a deeply reported piece. It's got some great analysis in there. And one of the things that you did, one of the exercises, was analyzing the cases with the potential to affect voting procedures and ballot counting in this November's presidential contest. What did you find there?
I mean, first of all, what we found, and isn't new to folks who follow this, but that the United States is just a patchwork of different voting practices and counting procedures state by state. So, how one state handles absentee voting, whether or not, for instance, you can put your absentee ballot in a drop box as opposed to going to an election office or going to your precinct to vote in person, that can change when you cross state lines. And we've had judges continue to sort out these issues in real time. And, as much as courts dealt with absentee voting in 2020, there are still all sorts of issues that are still being hammered out, again, 3 weeks out from Election Day.
Zoe, in general, is it fair to say that voting in the United States, and look, I know there are hundreds of lawsuits in a handful of states, many different states, although the majority of them, as you mentioned, are in a lot of the swing states. Is it fair to say that voting in the U.S. is becoming easier and less restrictive, or more difficult and more restrictive in general?
It's hard to say. I think when you talk to state election officials, they feel that especially the expansion of absentee voting has made it easier to vote. You have more options for how to submit your ballot, whether it's the timing of it, that it doesn't need to be on Election Day, the process of it, you can do it in your home, you don't need to go in person. So, I think 2020 really sparked a shift in how Americans are able to vote and the options that they have. And the questions now are about, on the ground, just what that looks like. And, issues that may come up depending on your circumstance. So for instance, if you're a person with disabilities, there have been cases this year about states that have tried to restrict the kind of help that you can get to fill out your ballot and to drop it off, for instance. So we're getting into really granular issues, but issues that matter to Americans who, want to vote and, may have problems doing so or may confront restrictions on it depending on what state they live in.
Zoe, as you and the team point out in the piece, Republicans and conservative advocates have been more active than Democrats and their allies, filing 55% of cases. Why does it seem, based on your reporting, that Republicans and conservatives are better at doing this or more active in doing this than Democrats? Why is that?
Again, I think it goes back to 2020. I think it just changed the mindset of the way courts can fit into a campaign cycle and not just a post-election period. So you saw, the Republican National Committee announce that they were, undertaking, I think in their words, an unprecedented effort to go to court to litigate over issues that they see in how states are managing elections. And, it's important to note that Democrats and left-leaning groups are not staying on the sidelines. They're also going in, they're lining up lawyers, definitely in swing states, but pretty much in every state, ready to go into court to deal with issues they see ahead of November and certainly afterwards.
Federalism, we practice that system of government here in the U.S., but I'm wondering if any of the folks you talked to said there's an opportunity for some sort of national policy, a standardization when it comes to voting. So once and for all, we could have the same rules in each state and not have this patchwork of rules and regulations.
It's not really part of the conversation. I think that, states, it's built into our system that states have the power to run elections, and for the most part, they're able to do that. There isn't much question about that. That said, there are federal laws on certain issues that states have to follow. So for instance, I talked a little earlier about restrictions for people with disabilities on how they vote. There are, federal laws about disability access and accommodations. And so the Justice Department has jumped into some of those cases to ensure that the federal rights that people have are vindicated and ensured. And there are also, there's a 90-day federal quiet period when it comes to systematically purging voter rolls. And that's been implicated in a few cases in Alabama, in Virginia. And again, the Justice Department has jumped in to say, hey, there are, federal interests here that we need to protect.
Zoe Tillman, part of the team behind today's Big Take. She's Bloomberg News senior reporter. She's joining us from Washington, D.C. Check out the story on the Bloomberg Terminal and at Bloomberg.com. We got some breaking news. A redhead crossing the Bloomberg Terminal. Katie, I know you've got your eye on it.
This is interesting. The U.S. Supreme Court let the EPA, the Environmental Protection Agency, move ahead with its stringent new emissions limits for power plants. That is rebuffing businesses and Republican-run states that complain that the rules will impose those exorbitant compliance costs. But the U.S. Supreme Court letting the EPA move ahead.
Looks like a major boost for the Biden administration's efforts to tackle climate change through these new regulations. Coming up next on Bloomberg Business Week, we're going to drive to the close. Nancy Tengler standing by. She's joining us next on Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all pushing higher. Let's throw in the Russell 2000 as well, surging now by 1.6%. For more, let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with a bid today, with the Dow currently up 354 points. S&Ps are higher by 28, while NASDAQ rises by 45. The U.S. 10-year yield at 4.02%. Gold is higher by 10. Oil trading in the red. And Bitcoin, that's higher by 2.2%. Among the main 11 S&P sectors, leaders were utilities and financials. Only telecom and consumer staples were in the red. And leaders to the upside in the Dow, Cisco and UNH, while Intel led to the downside. After earnings, Morgan Stanley rose as much as 8.2%, the most since 2020, and hit an all-time high. And wrapping things up, some of the names pointing after the bell tonight include Alcoa, Discover, and PPG. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAWK, SQUA, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Katie.
Yeah.
Look at the clock.
I know. We are rapidly approaching the market close on this Wednesday. I just figured out it's Wednesday.
What's it like? You open the markets on open interest. You close the markets on Bloomberg Business Week.
I certainly do. It's exhausting. As we were saying with Abigail, I mean, this market has been so weird. I'm standing there, you know, at 9:30, nothing is happening. And then by the end of the day, I mean, whatever the move was at the open, it's not the move at the close.
Let's see what Nancy Tangler has to say about this. She's CEO and Chief Investment Officer over at Laffer Tangler Investments. She's also the author of The Women's Guide to Successful Investing. When it's not cold in New York, she comes and visits us
With
in New
great
York.
shoes. She has great shoes.
But you know, days like today where you like wake up and you're like, okay, this is fall, we're kind of getting to winter, Nancy finds herself in Arizona. How are things in Arizona, Nancy?
I'm melting.
The air conditioning is still on there?
So hot. It's still hot. Yeah.
Wow.
Does it ever come off? I've never really been to Arizona. Help me out.
Yeah, it does. It's the winter's pretty awesome. But actually, as a native San Franciscan, guys, I love coming to New York when it's cold and bundle up and walk around. So I'll see you soon.
Okay, good. Come visit us soon.
Yeah.
What do you make of these markets? Are they weird like Katie described them?
Yes. And it is exhausting. The last couple of days have just been befuddling. But I think what we're going into is the crazy season, and you know we're waiting for the October surprise. The election is getting closer, and we're in earnings season. But so far so good on earnings. I mean, through yesterday, almost 3/4 of the companies beat on earnings, and almost 60% have beaten on revenues. So 5th consecutive quarter of 5% revenue growth. That's impressive in a declining inflationary environment. So I'm really encouraged about earnings going into the end of the year.
Well, let's talk about the end of the year, because even if you have, of course, that piece with earnings, the corporate fundamentals are good. I mean, is that going to overwhelm potentially worse news on the macroeconomic side coming from the Fed? Because there's a lot of question marks over whether or not that rate cutting cycle that markets had priced in is actually going to be as robust as expected.
Once again, the bond market got ahead of itself.
Yeah, unsurprisingly.
Yeah, I think a couple things, Katie. I mean, if you go back and look, there have been 9 easing cycles since 1974. 4 of those were without a recession. And the median return 12 months out was 18%. So I don't know if we get another cut in November. I'm guessing this Fed seems to want to cut. So I'm guessing we will, and it'll be 25 basis points. But I don't think it's necessary because we really have a strong economy. I mean, GDP now for Q3 is coming in at 3.2%, according to the Atlanta Fed. And, you know, we're seeing a decent job market, not layoff. You know, hiring has certainly slowed down, but layoffs have not necessarily picked up. Wages have grown dramatically for union workers. So I think well enough, just leave well enough alone and let the companies do the work. Let them deliver the earnings and margin expansion.
Well, when it comes to leaving well enough alone, it's something we were also talking about with Abigail Doolittle a little bit earlier. The fact that we've had such a strong start to the year, at least yesterday when I checked this stat, yesterday before the market opened, that this is the best start to a year for the S&P 500 since 1997. I mean, it has been a fantastic year so far, Nancy, and with all the different, cross currents that we're talking about, I mean, how tempting is it to just sort of say, okay, I'm just going to ride out through the rest of the year. I don't need to make any big, bold bets right now.
I think that is the right strategy. We were broadening out about a year ago, and I've talked about on your air a lot about how we have really been talking about this for 2 years, that this market and this economy is analogous to the 1990s because productivity improvements are driving margins and are driving earnings growth. And so when you have that, you really should just let the companies continue to invest, deliver productivity. Unit labor costs are down to like 0.3% last quarter. That's pretty impressive. And yet productivity was almost 3%. So I think we are in the early stages of this AI-fueled, productivity-driven growth, and we ought to just let the companies do their work and own the best ones and not try to figure out which sector is going to outperform in a Harris administration over a Trump administration. Because I wrote in my notes, when Trump got elected, the conventional wisdom was that technology would suffer and financials and energy would outperform. And in fact, the exact opposite was true.
Nancy, speaking of the election, if we're talking 3 weeks from now, the Wednesday after Election Day, what's the conversation we're going to be having?
Yeah, I don't know. Well, half of us are going to.
Well, she's got a crystal ball. I'm just asking her to look into it and share what she sees.
Let me consult it. I think we're going to be talking about tax policy, the TCJA. I think that is really the critical issue, no matter who is elected. Will it be allowed to sunset? The 100% expensing has been declining, expected to get down to 20% in 2026, I think. But there's the foreign tax, and then there's just the corporate tax rate. And what's interesting, Tim, is that if you look at corporate tax receipts since the TCJA, with all the repatriation of earnings, they've doubled from 200 billion to 400 billion. So kind of interesting. I was on the Fed's website, in my spare time, and that instead of the gambling sites, Katie, and that really caught my attention.
That is really interesting. I am curious. I mean, Tim and I were talking about it a little bit earlier. Part of the reason I love talking to you is because you're really into high conviction sort of trades, these relatively concentrated portfolio. I mean, where would you say at, October 16th, after this fantastic year-to-date run that we've had so far, what's your highest conviction right now, would you say, Nancy?
I think industrials. So we added Uber to a number of months ago to our 12 best ideas portfolio. They were the big winner at the Tesla event, which I attended. We Robot. That was the stock that rallied after that event.
Big time.
But we also like names like Power, PWR, which is Quanta Services, Schneider Electric. These are the companies that are building the infrastructure for the data centers. I bought an electric utility for the first time in 35 years under the power demand. And we're looking, like everyone else is, for interesting ways to play the increasing demand. But those names I mentioned, plus Carrier, which is cooling the data centers, those are the kind of names we want to own. We also added T-Tech and we own Xylem. So these are companies that do water treatment, and I think all of this is going to become critical.
We started our conversation talking about air conditioning in Arizona. We're ending our conversation talking about cooling data centers and Carrier.
Circle.
We're coming full circle. Nancy Tangler, thanks so much for joining us. She's CEO and Chief Investment Officer at Laffer Tangler Investments, joining us from Scottsdale, Arizona. Nancy, also the author of The Women's Guide to Successful Investing. Look at these indices just ahead of the close. NASDAQ up 0.3%. The S&P 500 up 0.5 percentage point. Coming up next, we're joined by our Bloomberg TV team for our cross-platform coverage on radio, TV, YouTube to count you down to the close.
listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It's Bloomberg Business Week. That's Katie Greifeld in for Carol Masser this afternoon. Katie, I like to go look at the most read stories on the Bloomberg terminal.
Okay.
In the last hour, there's a great one about Jay-Z.
Yeah. About Jay-Z?
Yeah.
I thought you were talking about Floyd Mayweather.
No, I talked about, we did talk about that one earlier.
Well, no,
Okay, we can talk
didn't.
about celebrities. I guess we talked about it off camera.
Yeah.
Yeah.
Yeah. If
Off
the
mic.
mic's not on, it doesn't count.
Okay, let's start with Jay-Z.
Okay.
Do you see it?
No,
there?
I don't.
Okay, number 10 on the most read in the last hour.
Oh, see, I don't go down that far. But go on.
Okay.
Okay, tell me about Jay-Z.
Jay-Z's Armand de Brignac. Is that a say right?
I don't know. I will.
Okay.
I prompted you there because I'm not sure how to say that.
Perhaps better known as the Ace of Spades, is branching out into vintage champagne. The premium label debuting a 2015 vintage that will sell for $3,400 exclusively in 1.5 liter Magnum sizes. There's just going to be 1,258 bottles made.
Yeah.
The price point reflects its rarity.
So if you're getting a Magnum, like you need to be at a party, you know. If
Or
you're-
just really like champagne.
Yeah, that's a lot
How's
of
that?
champagne to
For
drink.
yourself.
Yeah, I would hope that you're having it at a party. So that's interesting. I mean, that's great for Jay-Z. Good for him. Regular size bottles of this champagne, which is known for its eye-catching metallic bottles with the raised Ace of Spades logo prominently displayed. They normally sell for upwards of $300, which is still quite a lot, but maybe a little bit more manageable than, of course, $3,400.
Okay. So you in?
No, I don't think so. But that's great for whoever wants to do it, especially not for the Magnum. That's just too much. It's going to go flat.
If you don't drink it all in one sitting.
Yeah, exactly. So I probably wouldn't do that. But
I think the types of, this type of champagne is also meant to be sprayed.
Well, then I would buy something super cheap.
Yeah.
Then I would probably buy Prosecco, to be honest. I'm not spraying champagne.
Okay.
All right. That was an okay chat topic. I feel like we can do better.
How about real estate and Floyd Mayweather?
Let's talk about real
It's
estate.
the most read story in the last hour on the Bloomberg terminal.
It's always, charming to find out what terminal readers are reading. Hold on, let me pull it up. Okay, boxer Floyd Mayweather to buy $402 million worth of New York City apartments. This is a deal that he struck for that affordable housing portfolio in New York City. This is a huge transaction for this property market. It's been stalled by higher borrowing costs, which we're all very familiar with. But many of the more than 60 properties being purchased are located in Upper Manhattan. And this, we should point out, is according to a person familiar with the matter who asked not to be identified.
It's an affordable housing portfolio, which is really interesting here.
Yeah.
As you mentioned, many of the more than 60 properties are located in Upper Manhattan. Black Spruce Management is the seller. They declined to comment. Mayweather, though, acknowledged the deal on Twitter, while a spokesperson for the boxer didn't immediately respond to a request for comment.
Yeah, and you think about, again, New York City's real estate market. Rates rose rapidly in 2022. That slowed transactions, owners grappling with those higher costs, plunging prices. You take a look at the U.S. commercial property market, though. It's started to stabilize a little bit here. We know that the Fed has started to cut rates. Borrowing costs have eased a little bit. And at least by one measure, that has prices higher by about 3% this year through September.
What do you think?
I think that's really interesting. Affordable housing portfolio. I did not know that that was a market he played in.
Well, from the local regulatory perspective, it's been difficult, given that there are regulations on how much you're allowed to raise rent on affordable, especially in New York City. It's kind of at the heart of why New York Community Bank collapsed a few months ago.
I remember that.
I know, hard to believe. That was, back in March.
Yeah.
Interesting to see what he does with it. $400 million, that's a lot of money.
Yeah, that's true. And of course, he's been in the real estate market before. He invested in a hospitality fund run by CGI Merchant Group, but obviously expanding his portfolio quite mightily here. Again, $402 million worth of affordable housing in New York City.
Hey, don't go anywhere, because we're just seconds away from the closing bell here. Bloomberg Business Week, Beyond the Bell, starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu, taking you through the Closing Bell, a global simulcast. It starts right now. Tim Stenovic in the radio booth. Carol Masser taking a 3-day week here. Katie Greifeld filling in for her today as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube.
I have to defend Carol.
Oh.
She was here today.
I did. I saw her, Carol.
Okay.
But she's not here now.
She got
What'd
in
you say
at
to her?
4 a.m. this morning because she did Bloomberg surveillance this morning.
Well,
I think she's going back on surveillance tomorrow morning.
I got in at 6 a.m., which is not 4 a.m. But
Interesting. It all goes back to Katie.
You know, actually, Tim said on the radio earlier to one of our guests, you know, it isn't all about Katie. And I was like, well, that is news to me, actually. But in any case, big update in markets.
Big update in markets.
It's all about the Russ 2000 today. How's that?
Yeah.
There you go. And all about the banks, too. You look at Morgan Stanley and how it's really followed up with what the other big banks have reported. As everyone keeps telling us, the bar for earnings season is pretty low this time.
Yeah, pretty low this time here. But
Do they set the bar, though? The companies set the bar.
The banks set the bar. That's
I don't know
for
who
sure.
sets the bar, but wherever that bar is and whoever set it, it is low. But look, sometimes that doesn't matter. It was low the last earnings season. Everyone beat, or at least the folks that we wanted to beat, and investors seem to be pleased with that. I know it's still extremely early in this earnings season, but haven't you been encouraged so far?
I mean, you take a look at United, for example. What a day that United is
big
having.
day for airlines. Katie
Yeah, of
Greifeld.
course. You think about Delta, though, last week. That was a little bit of a lemon.
Yeah, what's your favorite airline, Katie Greifeld?
No comment.
The one that gets you there on time. How about that?
All right, we're going to get back to Katie Greifeld in just a second here, but let's walk you through the Closing Bell numbers. Green across the screen, and this is actually a little bit of a flip-flop from what we saw earlier in the day when we saw the NASDAQ in the red and the S&P barely holding on to gains. But here we are right now with the Dow Jones Industrial Average closing back above 43,000, 337 higher on the day, 0.8%. The S&P up 0.5%. The NASDAQ up 0.3%. But let's talk about the outperformers on the day. The S&P 400 mid-caps up 1%. Dow Transport's up 1.9%, and the Russell 2000 is going to close higher by 37 points, or 1.6%.
All right, taking a look at the S&P 500, you had 358 stocks move higher today. 144 stocks move lower. So gainers outpacing the decliners.
Yeah, but the decliners that are there are notable, right? You take a look at the IMAP and overwhelmingly green with 9 out of the 11 sectors posting gains. But communication services, one of the bigger sectors in the index, is down. You have names like Meta, for instance, lower. Consumer staples losing about 2/3%. Utilities, very defensive, but also an AI play, up 2% on the day. And financials, I mentioned Morgan Stanley gaining 1.2%. REITs higher by 1% as well.
All right, we have actually quite a few earnings coming here in the after-hours trade. The first one crossing the wire, and that is the railroad CSS. Revenue coming in at about $3.62 billion. The street was looking for 3.68, so a slight miss on revenue. Also a slight miss on the bottom line, EPS, 46 cents a share. The street was looking for 48 cents a share. Not seeing any guidance here just yet in the initial numbers, but you see the knee-jerk reaction, a slight move to the downside.
Yeah, I'm just looking through the press release right now, and of course they're talking about delivering growth in volume, operating income, and operating margin, but also talking about some of the challenges of late, including the recent hurricanes, which may have disrupted some service. But again, I don't see an outlook here in terms of what they're saying. Operating income, just a little more detail on the quarter that did end, was $1.35 billion. So remain consistent with what you're saying about the bottom line and the top line missing, because operating income trailing the average analyst estimate of $1.4 billion.
Okay, that conference call happening at 4:30 p.m. Wall Street time. We'll bring you updates from that as we get them, maybe get some guidance on that call. Meantime, a couple of the gainers as we continue to wait for other companies reporting after hours today. Morgan Stanley shares higher today by 6.5%, rising the most since news of that vaccine coming out in November of 2020. Revenue from the trading business rose 13%. Wealth unit also stood out, generated record revenue of $7.27 billion, higher than analyst expectations, $64 billion in net new assets. Also, you guys talking about airlines. The airlines index posting the best day since October of 2022, up 6.5%. United Airlines helping to bring that higher by 12.44%. today. United shares hitting the highest since February of 2020, going back pre-pandemic. The company forecast an improved industry outlook now that carriers are cutting excess flights and suppressed profits over the summer. And how about a little nuclear energy, small modular reactors, NuScale, stocks melting up today, higher by 40%. This after Ken Griffin and Amazon backed an investment in SMR, small nuclear reactors. They're among the backers in a $500 million investment in the company called X Energy. It's privately held, and they make advanced nuclear reactors. So optimism in the industry today. NuScale, a maker of those SMRs, up by more than 40% today, a record jump for the company.
All right, on the decliner front, starting with Novavax here, absolute wipeout. You can see shares finishing lower by more than 19%. This is after U.S. regulators placed a hold on the company's flu and COVID-19 combo vaccine because you had a study volunteer actually develop a serious nerve disorder, specifically motor neuropathy. They received the combo shot in January 2023 as part of its study taking place outside the U.S. Trial completed in July 2023. The patient reported this complication in September 2024.
That's just the Novavax thing? Because I just got one of those shots. I don't know what brand it
I
was.
would maybe see a doctor about that one. Novavax, this is only its worst day since July, so it's been a rough ride for Novavax. Moving swiftly along here, though, also wanted to talk about interactive brokers, of course. We were talking about this start to earnings season. It's been pretty okay so far if you're a big bank. If you're interactive broker, it's a little bit of a rough ride. Of course, the brokerage firm's third quarter adjusted earnings per share and total net interest income missed the consensus estimates, and you can see shares finishing lower to the tune of about 4%, worst day since August. And then I wanted to finish up with Applied Materials, of course. We had the ASML hiccup, if you want to call it, yesterday, wipeout. I could use that word again. Applied Materials definitely fell in sympathy yesterday, but what's interesting was to see the follow through today. You can see shares finishing the day more than 3% lower.
All right, let's take a quick check on yields. Not a whole lot of action here on the day. We continue to remain in that holding pattern that we've seen for quite some time. Your 10-year yield right now, closing out the day, just above 4% here, down about 1 to 2 basis points, and that was a similar story across the rest of the curve. You see it there on your screen with the biggest moves coming on the longer end.
All right, let's take a look at Kinder Morgan, which is the pipeline company coming out with results. Distributable cash flow per share was 49 cents, missing the consensus estimate by a penny. In terms of the bottom line, adjustable EBITDA was $1.88 billion, also a miss there of $1.92 billion, which was the consensus estimate. So the stock down about 1% right now in after-hours trade.
Kinder Morgan in their press release calling out, with war continuing in Ukraine, conflict escalating in the Middle East, calling out geopolitics here, noting the centrality of energy security to national security has never been more clear. They say they're proud to be part of a sector that provides that energy security to our fellow citizens and increasingly allows allies to forego dependence on those who use energy as a geopolitical weapon. Look at that.
Yeah, it's interesting. I will note that these shares, you're seeing, a little bounce around after hours after these earnings. This stock is higher by about 48% on a total return basis through today's close. So the bar was pretty high for this company.
Okay, from pipelines to Fruit Loops, I guess we go.
Yeah, let's do it.
Did you guys see that there are protesters outside of Kellogg's, and they're making a demand here? They want to remove the artificial colors from Fruit Loops as well as other cereals here.
Okay.
And it's happened in other countries. For example, in Canada, they use concentrated carrot juice, watermelon juice, and blueberry juice to color some of these cereals. This is according to the Associated Press. But here in the U.S., we still have artificial colors and chemical preservatives. Apparently.
Well, of course.
Why, of course?
They're delicious, and they make great colors.
Well, I think the great colors are more.
The thing that confuses me about this story, I mean, if you are waking up in the morning and eating Fruit Loops to start your day, do you really care about that it has some artificial colors and flavorings in it?
You probably want more colors.
I mean, like you've made a life choice at that point. I mean, you might as well just lean into it.
But you can get the color the way Canadians can get their color, just not with artificial colors and chemical preservatives. You can do it through fruit juices.
Exactly.
You remember a couple of years ago when those college kids did that whole study and they found out that all the different colors of Fruit Loops, that it's actually all the exact same flavor?
Oh, yes, I do remember that.
That was trick, so sorry.
My college
producer,
kids did that study?
I apologize.
It's the same with Skittles, though, right?
I don't know.
Jolly
think it's all the
Ranchers,
same.
all of those things.
It has one flavor. It's called sugar.
Yeah, I want to see the parameters of that study and sort of the environment that study was done in on that college campus. Hey, that is going to do it for our cross-platform coverage of the closing bell here on Bloomberg TV, radio, YouTube, Bloomberg Originals. Don't go anywhere. We'll be back same time, same place tomorrow. Have a great rest of the day, guys.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That is Katie Greifeld from Bloomberg TV and Bloomberg News. And today, Bloomberg Radio.
Yes.
In for Carol Masser. Last week, Bloomberg Radio as well.
Yeah, 2 days. I anchored 6 hours of radio last week.
What's your AI diet?
My AI diet, I don't really use it, at least not that I know of, I have to say. But I'm kind of a Luddite. You know, it took me a long time to move over to smartphones. I think about what I would have said about the internet in, like, I don't know, the late 90s. I would have said, I don't want to use that. So I don't know if I'm, like, the best judge of new technology. But what's your AI diet?
Sometimes I ask ChatGPT for, like, a good marinade for chicken.
Yeah. What does it tell you?
It sends me back something I could have easily Googled.
Yeah.
But instead of Googling it, I'm just costing, OpenAI lots of money by searching for that very simple thing.
Yeah, and you're it's not good for the environment what you're doing either.
It's not. I want to know what Rachel Metz's AI diet is. She's AI reporter for Bloomberg News. She joins us on Zoom from San Francisco. She's got a story that we're going to talk about in a second, but Rachel, I've always been, wondered this about reporters who cover an industry so closely. You're kind of required to play with this stuff as part of your job, but are you using any of these products or services in your real life?
Very selectively. I mean, it really depends. And I'm really picky about what my kids are allowed to use and when they're allowed to use it. So it really depends. And it shifts over time. And some of it has to do with like what I'm working on or what I'm interested in. Like my personal interests don't always align with what I'm actually reporting on. So it kind of like
Okay,
changes.
so you're like always understanding the vanguard of what's happening in Silicon Valley. That's where you're joining us from. You cover this stuff day in and day out. You know more about this stuff than pretty much anyone I know. Are you using...
That's so nice of you to say.
Well, I get to ask you the questions and you always give us the answers. So
Tim
that's
doesn't
good enough
know
for
very
me.
many people either.
That's a good point, to be fair. Are you actually, though, relying on it? Like, can you give us an example of the way that you're integrating any of the tools that you're reporting on that are being built in Silicon Valley right now in your day-to-day life? Like, look, we use Google Maps, or Apple Maps or whatever. I use my smartphone for a ton of stuff. But are you using those AI functions yet at all?
So, like, I think what you're talking about right now when you're talking about AI is different from what I talk about when I talk about AI, because I think you're referring more to generative AI, like AI where you tell it or ask it something and it gives you something back. I mean, Google Maps is one of my very favorite products. Like, I don't cover Google and I haven't for a long time, but like, I still love it when they have like a new feature. I'm like, oh, what's happening with Google Maps? And that's also a great example of something that has long used AI for various functions. A lot of AI, it's just, you're not seeing it, like, algorithmic pricing schemes, those often are improving over time, things like that. So like, AI is kind of everywhere. It just depends on what you think of as AI.
That is a great point because, that's something that I've talked about with investors before that, what are you talking about? Machine learning sort of concepts, AI, that's been used in the investing world for decades at this point. But obviously it's sort of been repackaged now. But Rachel, give us a sense of, you bring up Google Maps, great example of where we may use AI and not even know it. Where else is AI in our lives that, the regular person who doesn't think about this stuff all the time might not appreciate?
It's increasingly used in camera apps, like on an iPhone, for instance, or on an Android phone. It's going to be used to help make the photos look a little bit better. And that's been becoming more and more common. It's used, throughout social media. It's used to help moderate, moderate comments, discussions, things like that. I mean, it doesn't mean it's always doing an amazing job at it, but it is definitely used for that. I mean, I think in a lot of these things, it's like you use a system that might use machine learning, but you also have humans in the loop. And that may continue for who knows how long.
Okay, so if we're having trouble wrapping our heads around the use of AI in everyday life without actually interacting with, knowing that we're interacting with it, I don't know how Rachel's going to explain this story she wrote about light matter, because they're doing something that's really, really complicated. Rachel, you write that it's a startup that makes computing products that use light in place of electricity. And they're looking to overhaul the market for AI computing power.
Yes.
Okay. What? A $4.4 billion valuation? I don't even.
I'll get you there. Don't worry. Okay. So there's a few things we have to think about. One is AI companies right now, the hottest AI companies that you would think of, like OpenAI, Google, Anthropic, etc. They're building these larger and larger AI models. These models require a ton of computing power. And in order to train them, it takes a while, and you need a ton of chips, typically from a company like NVIDIA. If you're OpenAI, Google, of course, has its own TPU, I think it's the Trainium chips. Maybe I'm mixing things up. In any case, Google has its own chips, OpenAI, and a lot of other people, they use NVIDIA chips. And in order to move data from one place to another place between chips, which is something you need to do when you're training a big AI model, you want to do it as fast as possible. The faster and more efficiently you can do it, the faster and potentially cheaper you could train a big AI system. So this company, Light Matter, is talking about speeding up computing using light. And they've been working on it for a while. So it's not like they just came out here 2 minutes ago and they were like, we're worth billions of dollars. They're doing something that is niche, I would say. Like, it's not a brand new idea. People generally believe that you could totally use light in place of electricity in this process with chips. But it's still something that hasn't been shown off at a mass market level.
Let's talk a little bit more about valuation, because as your report, of course, its valuation now comes in at about $4.4 billion. I remember when a $1 billion valuation for a private company was something to be celebrated, but now maybe I'm just desensitized. We've seen so many of these AI startups just take in so much money and talk about these wild valuations.
No, you are totally right. It's wild, right? You think, I remember $1 billion, it was like, wow, can you even imagine a company worth that much money? I mean, some of this is probably it's a function of how much they're raising, and then also investor enthusiasm for what they're working on, right? I mean, so they wouldn't be able to raise this much, and investors wouldn't believe that they are worth this much if there wasn't belief that what they're building would be useful. And this is an issue in computing that people are trying to fix, and not just for AI, but in general. If you could do these computing processes in general more efficiently, that seems like a great idea, but it's going to cost a lot of money to get there. And you're crossing your fingers, right, that you'll get a lot of money back eventually. So
Yeah, big time. And this Series D round bringing in $400 million, as you report. What does the company plan to do with this new funding? Do you know?
Yeah, so they have, they've been working on a few different things. One of them is a product called Passage. And what Passage does is it helps them, it basically helps with this process that we were talking about. So it's a thing, and they showed me a demo version of it. So I have seen it remotely via video call. But basically it's like a flat thing that can hold a bunch of different kinds of computer chips, and it lets them share data optically between them. And you can also, and it has these cool looking clear optical glass fibers sticking out of it, so you can link multiples together. And they're actually working on building some supercomputers for a variety of unnamed clients.
Do you use, are you able to use these LLMs? I'm back on the LLM, sorry.
Am I able to use them?
Okay, I asked this question, we have no time
just not
left.
for work.
Yeah, okay, that's what I was, okay, so you do use it a little bit?
Yeah, I use like, I mean, I use them to like keep an eye on what's happening, but also like I occasionally use them. Yeah, sometimes I have like a really weird question that's hard to Google, and sometimes an LLM can be good for that. But then you have to check your answer.
I was going to say, does the answer come back with hallucination free? That's the question. Rachel Metz, we love talking AI with you and really innovative stuff happening in Silicon Valley. She's Bloomberg News AI reporter joining us from the San Francisco Bay Area. Up next, we talk innovation in dining.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. An update for the U.S. stock market, a record for the Dow Jones Industrial Average. Economically sensitive shares outperforming. The Russell 2000 index of smaller firms now at the highest in almost 3 years. The Russell 2000 up today by 1.6%. S&P, to put it in context, up 0.5%, higher by 27 points. The Dow up 337, up 0.8% to a record 43,077. NASDAQ today up 0.3%. 10-year yield, 4.01% with a 2-year, 3.93%. Gold up $11 the ounce. Spot gold up 0.4%. West Texas Intermediate crude 70.51 a barrel, down 0.1%. Sources tell Bloomberg Apple's chief people officer is leaving the iPhone maker after less than 2 years, marking an unusually short tenure for a senior executive at the company. After hours, we've got Apple down by roughly 0.1%. Morgan Stanley after earnings, big day there, stock up by 6.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. The hospitality market expected to grow to nearly $5 trillion this year.
I would believe it.
You do?
Yeah. I mean, Americans, they love experiences, they love going places, and they love eating.
Well, several factors. Wellness tourism, flexible booking options, sustainability initiatives, collaboration, and health and safety standards.
That all sounds right.
And they love going places.
Absolutely.
Longevity in senior living facilities also a factor, and that's where our next guest comes in. Let's get to Richard Schenkel, founder and executive chairman of Restura Hospitality Group. It is looking to bring tech and innovation to senior living. He joins us from Waltham, Massachusetts. Richard, the founder and former CEO at Unidine, which provides food and dining management services across the country for senior living facilities, community hospitals, behavioral health clients, corporate environments, and more. Good to have you with us this afternoon, Richard. Give us an idea of the white space that you see here, because you've spent some 3 decades in the larger hospitality business. What's missing when it comes to senior living facilities?
The marketplace, and thank you, Tim, and thank you, everybody, for having us on right today. The hospitality industry focused on senior living is about 20 years behind the times in innovation. And as we looked at the launch of Restora, we spent the last 18 months with market research and really trying to understand what that active adult lifestyle community in senior living really wants. And what really came out is they want choice. As we go back in life, as most of us will remember, airports. Airports were probably the most stoic type of business where there was no freedom of choice. And now we look today, whether it's local brands, national brands, or things to do when you're in an airport, it's humbly very different. In our opinion, the same thing went on in the college and university marketplace, where back many, many years ago, it was just a board plan. You received 3 meals a day, 2 meals certain days, and that was it in one dining room. And senior living has...
Yeah, I remember when my parents dropped me off at college, they were like, oh, this is why tuition is so expensive. Why are they spending all the money on the dining hall and on the lawns and on the dorms?
Right. And if you look at colleges and universities, some of the C&U business has some of the best reputations from a culinary perspective. Then you go over to senior living, and I spent a large part of my career in it, and it hasn't evolved. There are 3 major competitors in it, and it's a very stoic, poorly innovative marketplace.
That's a good point. I know from experience visiting my grandma.
Yeah. Well, Richard, I'm curious. I mean, we'll get into what you're trying to do and how you're trying to change that. But why do you think that's the case? I mean, you bring up some great points when it comes to college, even when it comes to airports, for example, the dining options getting better. Why do you think we haven't seen that same energy being brought to senior living, even though the population is aging?
Well, I think it was a couple of different things. Number one, the type of active adult that was prior in senior living was very comfortable with just one choice or two. I think as the market has changed and you look at the boomers coming in and just even active adults, 65 and 70 and 75, they're a lot more sophisticated today. If you kind of look at the restaurant industry 30 years ago, it's very much evolved. And I believe right now, as these active adult and senior living, continuing care, or types of communities go up, it is a much more sophisticated consumer today that has an expectation. Some market research that we did prior to launch, only 7% of the individuals looking at senior living active adult communities felt it would meet their food and dining needs. 93% felt it would never meet the mark of really great dining. That's a major disconnect.
I'm wondering about the cost equation here and how that looks for senior dining, for senior living facilities. These places, Richard, as you know, can be incredibly expensive.
That's correct. And I think given that, you know, we're looking at the marketplace and saying, why isn't there the opportunity to upgrade the dining services, offer variety, choice, you know, things like pop-up restaurants, you know, with proprietary brands launching there, to offer that, what we'll call consumer, those choices, and be able to keep them within the confines of that community by offering them that high-level dining experience when they want it, but also offering them to other things besides high-level dining.
And it's interesting. I mean, I'm curious, you know, how tech plays into it, because you point out in your notes that when we think about, you know, the shift from cafeteria style when it comes to colleges to a really tech-forward experience. I mean, how do you incorporate tech into what you're doing?
Yeah, well, we spent the last 18 months pre-launch of October 1st envisioning what technology would be, and the industry is definitely a laggard in that area. Just imagine you walk into a dining room by a facility operated by a restaurant, and by the end of the meal, we have technology that will allow that executive C-suite, as well as us, to know how we did, what they liked, why they liked it, and what they didn't like, and be able to immediately change anything from a menu offering the next day. But getting the results immediately of what we'll call consumer satisfaction and analytics on a dashboard for both us internally, as well as our consumer there, as well as the executive suite, can be a complete game changer for those facilities. It's never been done. You know, today we go in and get our car fixed, and I use the analogy, we get constant updates of how that car is getting fixed, what they're doing, and at the end, are you satisfied? In senior living, I can tell you 9 times out of 10, a once-a-year survey of how the food and dining is completed, and that's unacceptable in today's day and age from a consumer perspective.
What's the technology that the end user has to interact with? I'm not talking about the executives at the place. I'm not talking about the staff who works there. What about the tech that somebody like my grandmother would have to interact with?
Right. Yeah, it's very interesting. We spent a lot of time, and what we came to find out is, you know, the phone, whether we call it an iPhone or Samsung, a smartphone is what almost every one of them have in a facility. And we are very much involved in, you know, building out, and we have built out the applications that will allow that person internally to be able to get us information, as well as for us to push information to them. And it hasn't been done. We've done things like paper surveys. They are so outdated in today's day and age.
Yeah, I have to say, I mean, I don't know. I think of my own grandmom who's in her 90s. She was using Uber up until a few years ago.
Oh, really?
Yeah.
My grandma doesn't even have a smartphone.
We have very different grandmothers.
But she's 102. Actually, tomorrow's her birthday.
Oh my gosh.
Her
happy
102nd birthday, yeah.
Wow, no kidding. Oh, yeah. Well, anyway, we have different grandmoms. Mine's 95, so she's not too far.
That's like almost, yeah.
Yeah.
So she uses a smartphone, obviously, because she has...
Yeah, she loves emojis and stuff. I text her all the time. Anyway.
That's awesome.
Richard, I am curious. Talk to us about how you make money, because you think about your last venture in this space, for example. You point out in your notes that you delivered a 900% return to shareholders. Talk us through, again, obviously, we know the opportunity set here that you see and what you're doing about it. How do you make money?
Yeah, so it's fundamentally on on-site food service type of operations. We have 2 ways that we get involved. We operate on a cost-plus basis, where we have different overheads and fees built in. And then we also operate a lot of the times on what we'll call profits-loss arrangement, where we'll guarantee all our operating costs. And obviously, if we operate the way we envision, There's profit, and if we don't, we take risk on that end, and we make guarantees throughout our agreements. So it's pretty fundamentally a business that provides margin back to us.
How hard is it to get into these facilities that have been working with incumbents for years and might have long-term contracts?
Well, what I would say is, I'll give you some statistics. About 85% of the senior living marketplace, which is 30 to 40 billion, is not outsourced. They presently are self-operated. The other 15% is outsourced to competitors. So there's a huge amount of white space to be focused on. And how we look at that other 15%, we don't believe we are building or have built Restore to compete with the other companies. We think we have such a creative, innovative approach. We also, as part of our whole value proposition, I've provided back to all of our employees over 30% of the company in equity to our employees. All of our employees are owners of the company. We subscribe and are a participant with Ownership Works in New York City, a not-for-profit. And I think we're one of the first startups that they've ever involved themselves in, where a percent of the company was provided prior to the company being profitable.
Wow, okay. What's your outlook in terms of how you roll this out, when you roll it out? We have 30 seconds left. Give us an update on timing here.
Right. We started October 1st after 18 months in stealth mode. We are in constant communication with prospective clients now. We're coast to coast from the east to the west provider. And we envision that over a very short period of time, we already have many prospective clients that we are moving forward with. And as I said, we have just spent the last 18 months making sure our systems, technology, and culinary resources are in place. Executive team has been hired, and we're right now already involved with some clients.
All right, Richard, come back, visit us again. Richard Schenkel, founder and executive chairman of Restore Hospitality Group, looking to bring tech and innovation to senior living, joining us this afternoon from Waltham, Massachusetts. Katie, look at that. We have another record for the Dow.
For the Dow?
It's a big one that you follow closely.
Yeah, exactly.
I just wanted to say that. So you're.
Congratulations to the Dow. It had a horrible day yesterday, though.
All right, and the S&P up 0.5 percentage point. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. A record for the Dow Jones Industrial Average, an update for the S&P, NASDAQ, the NASDAQ 100 Index, and the Russell 2000 Index of small cap shares. We begin there because the Russell 2000 hit the highest in almost 3 years today. That index up by 1.6%. To put that in context, S&P up 0.5, up 27 points. The S&P now at 5842, shy of a record, but the Dow at a record up 337 points, up 0.8%. NASDAQ today higher by 0.3%. 10-year 4.01% with a 2-year 3.93%. Gold up almost $11 the ounce, up 0.4%. And West Texas Intermediate crude oil up 0.1%, 70.63 for a barrel of WTI. As for the market backdrop, Nancy Tengler is the CEO and Chief Investment Officer at Laffert Tengler Investments, and she was a guest right here on Bloomberg Business Week.
What we're going into is the crazy season, and we're waiting for the October surprise. The election is getting closer, and we're in earnings season. But so far, so good on earnings.
Nancy Tengler of Laffert Tengler Investment, interviewed right here on Bloomberg Business Week. Novavax shares plunged 19.4% today after regulators placed a hold on the development of its experimental flu vaccines following what's been described as a severe adverse event that occurred in a single clinical trial participant. Again, Novavax today down by 19.4%. And just getting word from Deere & Company laying off an additional nearly 300 people in Iowa and Illinois as demand for farm equipment slows from the peak production of recent years. Recapping, S&P up 0.5% for on-demand news 24 hours a day. Subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Do appreciate it. Katie?
Yeah.
I was out in California last week.
Classic.
I know you know that because you were filling in for
Yeah.
Carol and me here in the studio.
It was super fun, actually.
Good. It's always fun.
Yeah.
This is a fun show.
It is a fun show.
We have a lot of fun. We got a great team also that makes it really fun.
So
They're in the
true.
control room right now. But we left the event, Bloomberg Screen Time, and I was walking in Hollywood on the sidewalks of Hollywood, California with my brother, walking to his car because that's what you do in LA.
Which brother?
My brother, Michael.
He's funny.
He's very funny. I'm glad you know him.
Yeah.
He's very funny. And we ran into this little robot on the sidewalk. And it was not something you see in New York City. So for me...
Did you take a bat to it?
No! It's very rude.
I know, but
just because there's no person
before.
inside of it doesn't mean you should take a bat to
I
it.
wouldn't put anything past an American. Anyway,
I've seen him on the streets of Santa Monica before, but never Hollywood. So this is the first time seeing it on the sidewalks of Hollywood. And it was delivering something to somebody.
Yeah.
And I don't know if it was a robot from our next guest, co-founder and CEO of Serve Robotics, Ali Kashani, who joins us from Redwood City, California, which is the headquarters of Serve Robotics. Ali, was this one of your robots? It looked exactly like the ones that I see on your website. Was this one of yours?
I'm pretty sure they're very unique. And Katie, come on, that's your first reaction hearing about robots?
I'm sorry. So for a little bit
come
of
on.
context, I had Ali Kashani on the TV show a couple of weeks ago, probably a month or two ago at this point. And Ali, I did ask you that how often people attack these robots, and you said not too often.
Yes, that's right. It's they're actually kind of like a mailbox at this point. They're just doing their thing and people just pass by. Sometimes people can be curious, especially children, but overall they're very well received and accepted in the community.
Well, that had a camera on it, and my brother said, I think it's actually I'm just looking for a photo. I think I took a picture of it. My brother said, actually, I think they're operated by somebody remotely. Are versions of these operated remotely? I know the newest thing that you announced today is not operated remotely. Are older versions of these operated remotely?
So they're all what we call level 4 autonomous, which means that they can do a lot of things by themselves. So there's a good chance when you saw it, it was actually navigating by itself. But if it actually needs help, it can ask for help and someone can help remotely.
Oh, interesting. So it's a mix. It's kind of just like, you'd have the way they thought about driverless cars back in the day. They haven't implemented it yet this way, but it's like you kind of ring a bell if you're in a sticky situation.
Oh.
Yeah. Okay, so talk to us about level 4 automation here, because I don't think general, Ed Ludlow, who covers this stuff all the time, understands levels 1
That's
through
like
4.
his bat signal, basically.
Yeah, but for the normal person, what are the different levels of autonomy?
Yeah, I guess the best way to explain it is if you have a Tesla, it's level 2, which means you have to have your hands on the steering and eyes on the road. And then the highest level is level 5, which is when the robot or the vehicle never needs any help at all. It can do everything 100% by itself, which if you ask folks in the space would tell you is mostly sci-fi. Level 4 is the holy grail, where robots can actually move independently by themselves quite a lot of the times, but whenever they're outside of their comfort zone, someone can help them. And when you think about it financially, there's a point at which automation doesn't make any more financial sense, because let's say a flight controller sitting somewhere looking at hundreds of planes, that's perfectly fine use of human intelligence, and it makes a lot of sense to actually keep humans in the loop at that level. But the important thing is that the robots can do a lot of things by themselves, and that's where a lot of the leverage and automation comes in.
I find this so delightful. I know I made a joke at the very top
about beating them?
about taking them back to one of these robots, but
That's an interesting turn that you've had in such a short time.
I mean, I just, I find it endearing. These little robots.
They have these cute eyes on them.
Yeah, they're buzzing around. They're giving you food. I'm in New York, though. I've never seen one, of course. I don't spend a lot of time in California. What are your expansion plans? I mean, what other cities are you potentially thinking about here?
Yeah, we have plans to come to new cities next year. As soon as in Q2, we are going to have our next major market beyond LA. First, we are going to expand in more LA neighborhoods in Q1. We have 250 more robots in Q1 being deployed. And then by the end of the year, we are going to have 2,000 robots. And we are going to launch a few more cities, which we'll have more to share about that soon. We have recently discussed the fact that we'll be doing a pilot in Dallas with Wing, which is a subsidiary of Alphabet. They make drones, where our robots pick up items from restaurants and then hand them over automatically to a drone that would then bring them a few miles away, a distance that the robot can't do. So it's a really cool collaboration where robots do half of deliveries that are short distance, drones do the other half that are long distance.
Gotta get your
Dallas
fries.
would be one of the next places you would see them.
I dream of a future where I can just open my window and get my fries delivered.
Good luck in New York City.
I don't want to go downstairs. Well, I was going to ask about New York City because, in New York City, I feel like one of these robots would get attacked like immediately.
Yeah.
And Ali, the question I have for you is, what's your ideal city? Obviously, these robots work in LA. You're thinking about, expanding to Dallas. What is the ideal makeup, both in terms of sort of the temperament of the people, but also the geography of the city that would work for these robots?
Yeah, I mean, it's really first and foremost the question of where are our partners mostly concentrated in. So Uber is the largest player in LA. So it makes a ton of sense for us to start there, and LA being the second largest market in the country. New York is the largest market. So it's just a matter of time before you see robots there. But given the distribution, effectively, the partnerships that we have in place, we've started in Los Angeles. But most cities in the country would have a need for robots because restaurants are usually in very congested areas where you have more car traffic, more parking issues. And within that business, couple miles of that business district, you have a lot of population, so they can benefit from robots.
New York's a unique market, though. We have the e-bikes and the delivery people. So I don't know. I would like to see how it would work here.
If you get hit by one of those e-bikes, boy, that would hurt.
Hurt a lot more than getting hit by one of these robots that only go 7 miles an hour. Hey, Ali, before we let you go, very briefly, how much do these cost? We only have 20 seconds left, but give us the cost equation here.
We don't share the BOM costs, but they cost half as much as the last robots we were building. So we are bringing that cost down, and they cost less than a brand new car, the cheapest brand new car you can buy in the US.
Wow, so they're pretty expensive.
I would say they're pretty cheap. With all that smarts, the sensors, the computers on board, they're pretty reasonably priced.
And I imagine they're going to be getting cheaper and cheaper with the technology. Really cool stuff. It's a publicly held company, ticker SERV. The company stock up 4.5% today. Ali Kashani, co-founder and CEO of Serve Robotics. This is Bloomberg.
listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It's Bloomberg Business Week. That's Katie Greifeld in for Carol Masser this afternoon. Carol back tomorrow. You can also catch her on Bloomberg Surveillance.
It's a long day for Carol.
Oh, it is a long day.
Yeah, but she's committed to the audience, so she'll make it happen.
I was very concerned about her early wake up this morning.
Yeah.
Because that's an early show.
Yeah.
She was here at 4 a.m.
So she cares because, okay, that show starts at 7.
Yeah, you got to do the work.
Ma'am,
You got to do the work to make the show good.
I'd be getting in, I'd get in at 6. I get in at 6 now for my 9 a.m. show.
So it's the same thing.
But that's
3
only
hours
because we
ahead of
have
time.
a meeting,
Well, they have a meeting too.
No, they don't.
They got a show to do.
Yeah, they do.
Hey, you had your eye on a couple stories.
Yeah.
In the most read on the Bloomberg terminal.
Yeah, let's take a little tour. We'll start with Billionaires Row. This is an interesting one.
Nice real estate story.
The developer of Billionaires Row buys a New York City office tower for condos. We're talking about Extel Development. I hope I said that right. That is the company behind some of Manhattan's most expensive condo skyscrapers. Bought a Madison Avenue office property with plans to build luxury housing and retail at the site. This is 655 Madison Avenue.
Okay, easier said than done.
Yeah.
You can't just convert an office building to condos.
Yeah, kind of wish you could.
Yeah, but think about it, right?
Mm-hmm.
Yes, it's a building. Yes, it's tall. Yes, there are different floors.
So what's
yes,
the
there are
problem?
elevators, bathrooms, plumbing, windows.
Actually, my first apartment in New York City.
Those are huge issues.
Yeah, used to be an office building, which was interesting. And I had a bathroom in my apartment.
You did, yeah.
But you open up one of the closets.
It's expensive to do, though.
If you opened up one of the closets, it still had like the linoleum flooring, which was pretty cool.
I know you've never been to Brooklyn.
No.
But a lot of places in Brooklyn, were former factories, for example, that were converted at one point or another over the last century into condos or apartments.
Yeah, I think you can solve any problem. I think it's just regulation that gets in the way.
And cost also, which has to do with regulation.
Yeah, well, money can solve any problem.
Okay, you said 655 Madison Ave, $200 million. They bought it from Williams Equities, according to people familiar with the year. Tyco Capital, it's backed by Elliott Investment Management. They're financing the acquisition. One of the people said, asking not to be named, discussing a private matter. 24 stories, built in the 1950s. It was slated for demo.
Yeah, so that's fascinating. I mean, it seems like a shame to, demolition something. That's not a word. To knock something down instead of just go ahead and convert it. But
demolish, I think is the word you're looking for.
I've been in this office for like 11 hours at this point. In any case, of course, New York developers have been seeking alternate uses for office properties as vacancies remain high since the pandemic. You also have buildings near transit hubs. They were recently constructed or renovated. They've attracted tenants at strong rents, but the market far bleaker for those older towers, such as this one.
All right, that's one of the most read stories on the Bloomberg terminal in the last hour. Another one coming out just moments after the bell is by Mark Gurman. It's about Apple's chief people officer to exit after less than 2 years at the company. I feel like a lot of people who work at Apple get their news about what's going on at Apple from Mark Gurman. He knows everything. I saw him last week at the Screen Time event in Los Angeles.
Yeah.
He's reporting that Apple's chief people officer is leaving Apple after less than 2 years, according to people familiar with the knowledge of the matter. Carol Surface, who started at Apple back in early 2023, she reports to CEO Tim Cook, is departing, said the people, who asked not to be identified because the move hasn't been announced. Apple employees were notified of the exit on Wednesday.
Yeah, so another Apple scoop coming from Mark Gurman. He is the Apple whisperer. I want to talk about Deere, okay?
Yeah.
Deere, this is an interesting story. So Deere is going to lay off an additional nearly 300 people in Iowa and Illinois. This is something that we've been covering all year, really. The demand for farm equipment is slowing. We know that crop prices have been really volatile. And this is just the latest round of layoffs this year for Deere, which, of course, is the world's top agricultural machinery maker. It already slashed its earnings outlook in May, but obviously the pain is still not done for Deere.
Yeah, the move unrelated to plans to shift some of its production from the U.S. to Mexico, Deere said in a statement. Former President Donald Trump has threatened to hit Deere with steep tariffs if they move jobs out of Mexico, something that he commented to.
If it moves jobs to Mexico.
Oh, excuse me. If it moves jobs to Mexico, something that The former president commented to our editor-in-chief, John Mickelson.
Oh yeah, we heard a lot about
yesterday,
that. Those
in
that
interview.
beautiful word, tariffs.
So what does he say? The most beautiful word in the English language is, I
Yeah,
believe.
I think
what he said.
he referenced the dictionary and said how much he likes the word tariffs. Deere obviously would not like that, I assume. The company did say Wednesday that it is important to note these layoffs are due to reduced demand for the products produced at these facilities. As we have repeatedly stated, layoffs this fiscal year are due to the weakening farm economy, and that is certainly
Sounds like
true.
they're really trying to get a message across here.
Yeah, exactly. I mean, they're trying to state that this is industry-wide.
Yeah.
It's not just Deere. This is the market that Deere plays in, and demand is weak.
Deere said it boosted its workforce when the demand surged during the COVID pandemic. It roiled supply chains, only for the farm economy to start slowing. About 200 production workers will be laid off in East Moline, Illinois.